cold, it's hot. Now you got a cold in your throat. Oh no, just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Oh, I feel bad even doing that to Liz. How are you on this Monday?
Wait, you don't feel bad about doing it to me?
You're like a sister to me, you know, with an A even. You're up there, man. You're up there. I mean, Liz is up there too. Of course, I know Liz. Obviously,
keep digging.
Haven't said a word yet.
Good morning, Liz.
I'm working on a chain gang.
Yeah.
I got 3 hours with this guy today, Banana. 3 hours.
I didn't want to start bad. Well, Liz, welcome to the show. Filling in for Nick, who's obviously wasn't raised right, taking a week off for Thanksgiving. But what can I tell you, Liz? Welcome
with
to
his
the show.
mom.
Oh, that's sweet.
With his preferred family.
You leave that boy alone.
Yeah.
You know what's funny? When you said preferred family, I thought it was with the girlfriend's family.
No. Blood is thicker than water with him.
That's
It seems.
good. I'm glad he's with his mom. That's sweet.
Yeah, real sweet. And he'll be able to golf a little bit. He'll be unwind. You know how these. Is he a millennial? I don't think he's a millennial. Is he?
No, he's a millennial. He's the quintessential
100% a millennial.
Yeah.
He acts like one, so I just wanted to make sure that
What else would he be?
I don't know, aging millennial. I mean, I don't.
No, he's.
They're all aging. He's a millennial.
You take a look in the mirror, Boomer.
Some of us more gracefully than others. You two are more graceful than others, and I'm trying to represent the other side of the coin, doing the best I can. I really am.
Oh,
I think I need like a
my 40s.
skincare routine.
He needs a skincare routine? Is that what you're saying?
I think I do.
Oh.
I think I do. Not you do. Not you.
Honey.
No, you've got the Italian skin. You're good.
Yeah, it's olive
everyone
oil.
should still take care of their skin.
Yeah. I just use like a black soap or something like that. I don't know.
I will send some things over to you. Don't worry about it.
For your 14-step. Yeah, you're going to get a 14-step routine for Christmas.
No. I don't have the time. I've tried that. It works for like a day or two.
No, 3 steps. 3 steps is all you need.
Yeah.
3 steps. There you go.
Yeah.
Who's got the time?
I would like to report the prodigal son has returned yesterday.
Oh, your son is home?
First time home. We dropped him off in August. He never came home since, and this is his first time home. He left with the pool open, came home with the Christmas decorations up.
I think that's what I did when I was in college, because I was 4 hours away. It wasn't super convenient. I think the parents came down for parents' weekend in like September, and then I came home for Thanksgiving. So from August to Thanksgiving. How is he?
This is, I can't even believe I'm going to report this. He's taller. And this kid is a monster to begin with.
How is he still growing? That's not fair.
I don't know, but I think you can, boys can grow for a while. So, he was 6'6" when he left. I think he's close to 6'7". I mean, the kid
is your son David Robinson? What is happening?
He came back skinnier, and he's like, I'm skinnier. You know, this happens to no one in college. I was like, that's because you grew an inch.
Was his dad tall too? What was his dad's name?
We're not sure.
Did he bring his laundry?
He flew, so he didn't.
So he couldn't bring the laundry. See, I could drive, so the biggest bag of laundry you've ever seen.
Tony, you'll appreciate this. He's gonna be so mad. He's asleep, so he doesn't know. But this kid has a girl who's in his dorm, who's doing his laundry. He's not dating her. He's been to 3 other formals, but this girl does his laundry.
Wow. He's found that's a jackpot. You never lose that one. You got to keep that.
No,
one.
I got some podcasts she needs to listen to.
That's what I was saying. I mean, this is what I love about is having Annabelle. And I was like, Annabelle, you're in college next year. You never, ever do someone's laundry. She's like, understood. Check. So.
No, that one you got to keep on forever. That one you never leave. She wins.
She wins.
She never keep that one. You never lose. She's got to be there forever.
The chat is guessing. No, we are all remote. Everybody's guessing our locations. We're all in undisclosed locations around the world. I wish. Have you guys ever done the show from an undisclosed location?
No, I'm always here. I know sometimes from my parents' house, but that's not very exciting.
I get it.
Yeah. We've never done it from. No, I always planned on doing one from Florida. I built a studio and everything down there for it, but I've never done it.
I've done it from hotel rooms, hotel bathrooms. We've done it all over.
Whoa, hey girl.
Easy.
The best is when John McGloin's like, "Are you?" Because you can hear it because it's a little tingier in the bathroom. Yeah. It gets a little echoey. He's like, "Are you in the bathroom?" I was like, "I am." The lighting was really good in here.
I mean, it's not as good. I mean, Scott Sheridan once called in to the show from a Cubs game in Japan.
It's
so
true.
That's pretty iconic.
Fine, he wins.
And then, of course, Tom with the honorable mention calling in from the back of a black cab somewhere in rural England.
What are you guys doing for Thanksgiving? Because this is my Thanksgiving show with you guys. I mean,
what are you doing? You have 800 people in your family.
Yeah.
We have a lot of people. So this is my favorite holiday of the year because I actually don't host Thanksgiving. But listen to this. So let me just back that bus up. I don't have to do anything on Thursday, but Friday morning I host a brunch for all of my cousins, which is approximately, it's going to be probably 50-person brunch, and that is from 10 to 1, and then 1 o'clock I get to clean up because the next party I have starts at 4 for the tree trimming party.
Who fire your assistant? Who? Also, how do you have 50 cousins?
Oh, well,
we don't live in the South.
I have, so they've all multiplied here, Vanetta. And when I say cousins, they're not my blood cousins, but they've all gotten married. Then they had offspring, and you know what I mean, how it goes. I do have 26 cousins, but probably only 10.
Well, we're doing a market measure on protection at 9 o'clock. So maybe you should have the family check in so they can.
Yeah.
Look at that.
So as much as I don't host Thanksgiving, I'm still hosting all weekend. But yes, that's okay.
And now hold on. Are you mentioned it? You just went over it. So you're one of those people that have their Christmas stuff up already? Like
it's up. Well, it's up right now because like I said, the day after Thanksgiving, I host a Christmas brunch. So I have to have it up. It's all up. Except for the tree, because we get a live tree in between those 2 hours of when the party ends at 1 and the other.
And then you're going to go into the woods and then chop down your own tree. Girl, you are doing too much.
I'm not chopping down anything. I'm sending my husband to a little tree farm down the street where he's going to go pick it up, put it on top of the minivan.
That's good. So do you have traditions? We never did that. I mean, so you have specific traditions.
Oh yes.
Yeah.
So the tree trimming party is my favorite because that's Dan's side of the family. So we all wear matching pajamas. So I have year upon year upon year upon year upon us all in matching pajamas.
Oh, all right. Nice. Very nice. How about you, Vanetta?
Aren't you worried when you have a live tree, there's critters in the live tree?
Oh, fun fact. We've always had critters. I've had 2 birds in my house because they came in with the tree.
No, thank you. No, I'm good. I love nature. You know this about me, but I like it when it's outside.
Where God intended.
Yes.
It is pretty comical, though, because we have real tall ceilings in our living room. You've been to my house, Vanetta. We have real tall ceilings in the living room. And so when the bird got out, it was up there. So, my son went and got his Nerf gun. My daughter went and got, a net. We're all, running around like lunatics trying to catch a bird. I put a pot on my head because for some odd reason I thought it was going to dive bomb me.
Sure. It's like that episode of The Office with the bat. Wait, so how tall of a tree do you get?
Well, we get, fun fact, I am married to Clark Griswold. I don't know if you know that or not. But the first year we moved here and we went to the tree farm, he goes there because we lived in the city. He's like, give me the biggest tree you've got. And the guy's like, all right.
Wow.
And then he loaded it. He's like, we'll even deliver it for you. We'll even give you the stand. So we get it in the house. They give us the stand. We put the tree up. Now, what you fail to realize about trees is that they're netted, right? So they're netted. But the second we're going to cut this net off, it's going to fill our living room because it's that wide once you cut the net off. So we had to return it. And so we had to call and be like, I'm sorry. And then he's like, how many of these do you sell a year? He goes, 1 or 2 a year to car dealerships.
Wow.
Very.
So he probably gets like a 12-foot tree now, not like your 20-foot, like you tried to do the first.
Right. Yeah. Your tree was meant for Arlington Heights Mazda.
That was Clark Griswold's first attempt at a tree living in the suburbs. Mm-hmm.
Wow.
So wait, do you cook it all for Thanksgiving? Do you contribute it?
No. I do nothing. That's the one holiday that they're like, you don't have to do anything. I said, okay, thanks. What about you guys? What do you guys do?
I I do my very best at ordering everything.
Listen to all the places that he ordered from. Go ahead, Bat, break it down.
So we've got a Sunwa turkey coming, which is I can't wait to see what that's going to be like because the Sunwa duck is great, but we'll see what.
Oh, is this the first time you've ordered a Sunwa turkey?
Yes.
Sweet.
Yes.
Okay.
Yes. Got to pick it up the day of. So.
Although my over under on this turkey, Liz, because supposedly Tom put in the order. That is a 0 Delta turkey.
Oh.
He does tend to screw things up. So we'll see. We might have half a turkey, or Scott was there too, so we might have to split it in thirds, or we might not have any. So, but a Sunwa turkey.
Okay.
And then I went to Jack Stack. Well, I ordered from Jack Stack's, which is Kansas City barbecue, which I thought had some of the best burnt ends I had ever had, but I haven't had them in probably 20 years or something like that, 15 years, something like that. So I ordered Jack Stack burnt ends and some pulled pork from them. And then I ordered from Pecan Lodge, which is in Texas. And
yes. I know. I've been to Pecan Lodge with you.
Yeah, right. I thought that was some of the best barbecue we had. I couldn't get Franklin's. I had never had Franklin's. But that was too late to do that. So I did the Pecan Lodge and I got burnt ends from them and brisket and some.
You have 2 sets of burnt. Are you having like a burnt end challenge?
Yeah, like a burnt end.
Just wait, Liz.
Yep. We will crown a winner.
Oh, there's more?
Yeah. And that's it. And then some sides and stuff. And then my wife will make some sides. But at the last minute, this is what we always do. I'll bet you she'll make like a turkey, like a turkey breast and a ham. Because she likes ham and she feels like you have to have like a turkey breast just because the other turkey won't be like traditional turkey. So that's what she'll do. But she won't do that until Wednesday. Like she'll go out and buy it on Wednesdays.
Oh, yeah.
Yeah.
Why don't you just have it for her and be like, look what I got you?
That would take way too much effort. But it's a good idea. I don't mind it. But yeah. Yeah.
Oh, wow. That is a lot of ordering. Vanetta, you're a cooker. You're cooking something. I know.
Yeah. I cook most of the food, but there's only 3 of us. So it's super.
But you cook it at your parents' house or they
at my parents. Yeah. They have a really nice, beautiful kitchen because they're like, you're not going to get married. So we took that money and we redid the kitchen. And you know what? They were right. So
I don't believe that to be
good on them for planning. That's called
good on them for you know what? I can't even be mad about that. They're like she has so many cats.
That's just good planning by the family. That's like
no. So we do a turkey breast because again, there's only 3 of us. We don't need like a full turkey. If it were gonna be warmer, my dad would maybe smoke like a bigger turkey, but it's gonna be cold, so we'll just do turkey breast and then all the sides. My mom does the dressing because that is her thing, and she does
invert or out of bird.
I'm sorry.
Does she do it in the bird?
Dressing outside of the bird. Outside of the bird. Yeah.
Oh, so dressing is outside the bird, stuffing is in the bird. Makes sense.
Yeah.
It does make sense. But I
think it's also.
I was today years old when I figured that out.
I think it's also just a regional colloquialism. Like I think everyone from the South just calls it dressing. So that's what I call it. I don't know.
What's your favorite side? Sides are the best.
I mean, I just love Thanksgiving. I love everything about it. I love the leftovers. I love the reinterpretations, the days later. Like I love it. I love it all. What's your favorite side? Like I can't pick one. It's hard.
So I like candied sweet potatoes.
Oh, I make a sweet potato souffle, Liz, that is to die. It's based on the Ruth Chris recipe.
Ooh, I'm listening.
It's really good. I put bourbon in it, and I candy the pecans, put it on top. It's really good.
Nice.
Yes. Yeah. I'm not messing around. I love Thanksgiving.
You know what? One of my favorite things that you used to do, and I'm not going to try to bring it up because you worked very, very, very hard on this. But remember on Fridays when you used to go, was it Pinspiration Friday?
Yeah, I'm not bringing that back.
That's 2 weeks. That's 2 weeks in a row. I mentioned it last week. Now Liz mentions it this week.
It was like I would love going into the studio. I was like, ooh, it's Friday. We got to get in there.
Not again.
Even once a month if you did it, like you know. Like that
are you going to fund it? Are you going to
reimburse
me?
I
Sure,
still
that's all. That's all it takes to get you in the kitchen for us on a Friday. Sure, I'll do that. That would be cheap
But our
money.
office is so much bigger now. There's so many people. I would feel bad. Like,
It is.
Oh no! I wouldn't feel bad. We'd be on the other side of the glass eating.
Oh yeah. Lock the door.
Yeah,
no,
now you just can't come in.
no.
That's what I learned, and this is one of the tricks I learned from you a long time ago, Vanetta, was the crock pot where you take the lining of it. Because I used to not use my crock pot because it would just like.
Oh yeah.
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 I remember that from Pinspiration
There
Friday.
you go. Hey, congratulations to the Chicago Bears. I just have to shout out, talking about Thanksgiving and football and all that jazz. The Bears are 8-3. What?
Yeah, the Bears are going to cost me some money because I bet against Scott and Tom, and I'm a Bear fan, or at least I was until this year. Now that it's costing me money, I'm not going to be a Bear fan anymore. But yeah, Bears are doing awesome.
Yeah, they really are.
I mean, oh, too bad Aaron Rodgers couldn't play. Yeah, real upset about that. But
Yeah. Good on the Bears. They seem to be like the team of destiny for a little while here. Winning when they win 5 games in the last 5 minutes or something like that.
yeah.
You bet against the Bears?
It was just because Tom and Scott were being so obnoxious.
Okay.
You know how they get sometimes. They start talking their BS, And when is Tom ever right? I was just going on the odds of everything. I mean, that's the reason why we had to, get him off the show. He was getting too old, and his trades, they just sucked. So
Okay, no, I'm not going to deal with your bullshit comments, and then I have to deal with all the social media. Nope, none of this is true. Please don't email, tweet, text, Facebook,
he just
LinkedIn.
got too old. I mean, he wake up in the morning, he was peeing himself. It was horrible.
You're just projecting. Hey, we have the very beautiful and talented Liz joining us all morning long, so we are super blessed. I'm thankful for that. I'm thankful for Liz. But we have a great show for you today on this magnificent Monday at the top of the 8 o'clock hour. We have a Research Corner. Kai coming in with a little Research Corner at 8 o'clock. He gives his overview and outlook for what he thinks the markets are going to do for the week. And then 8:40, the Skinny on Options abstract application. Dr. Jim in the house. Payment for order flow, good or bad? Ooh, a little controversy there. PFOF.
I'm actually looking forward to hearing your thoughts and concerns on that subject.
Because I mean Dr. Jim.
Yeah, Tony and Dr. Jim.
Yeah.
You know that I was on the payment for order flow committee and SIBO floor?
So we have a professional.
You're the payment for order flow princess?
I am. I was on the committee. I was on a lot of committees down there. So if you have any questions.
I was on the arbitration committee for a while. Yeah.
I mean, why wouldn't a group of dudes add you to a committee list?
My favorite was I was a floor official. So there's a fight. I got to go in there and either break it up and find people or break up trades. That was my favorite committee.
Yeah, I think Frankie in our chat room was a floor official too, but he's 4'7". So it was a job that nobody wanted, so you didn't have to have any ability. You know what I mean?
No, and it was Janice. Do you remember Janice from the floor who actually recruited me after she was done? So her term was up. She put it me, and I forget. Janice used to call Frank something. He'll let me know what it was.
But Janice was a bad biatch.
Yeah, you go from Janice to me.
Okay, well, this
not a lateral move.
Dr. Jim's going to be in for this very enlightening segment on payment for order flow, so stay tuned for that. And then 9 o'clock for market measures, the cost of buying protection, not just 25 cents in the men's room. We're talking about protection for your puts.
Oh, banana. Line cross.
You're dating yourself at 25 cents in a minute.
I don't know. Again, my parents remodeled their kitchen. It's fine. Mm-hmm. And then we got Quentin and Ryan in the house, live from the trade desk. Quentin counting down all the top trending tickers over at tastytrade. And Ryan in the house, going to give us some insight into things happening in the crypto side.
Wait, we have Ryan Grace live?
Yeah.
Yes.
We're going to need to speed up some segments. I need some time with this man.
All right.
Why? Because you're going to try to steal his baby?
Well, number one, I would steal the baby. I am free babysitting if anybody. I told Chris Vecchio the same thing too. I will even fly to New York if they need anything. But I've got lots of crypto questions.
Okay, good. Well, he's got lots of crypto
when's it ever
answers.
going back up?
Yeah, that's number one.
Well, anyway, that is our run of show for today. You guys ready for your daily dose?
Sure.
Hit me with my theme music.
Vanetta is my favorite segment of the day. Continue.
You bless your heart. Hit me with my theme music. Let's go.
Our leading story.
today's
Breaking
headlines.
news.
Today's
Coming
Currencies.
across the wire. Our leading story.
Just in.
Top story. Just in.
In today's headlines.
This just in. Leading stories.
Breaking
Breaking
news.
Sorry, I have my space heater on in my office and it was getting too hot in here. I was like, do I have time to turn it off without showing America my ass? And I did.
Good job.
Good job.
I'm not wearing pants. Fine. All right, everybody. It is a magnificent Monday. It is November the 24th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
First headline, it says economic data returns and retail earnings are the feature in a holiday shortened week. As November wraps up with a holiday shortened week, thanks to Thanksgiving and Black Friday, we are going to finally get some more economic data. The government's working through its data backlog after the government shutdown. So you're going to get producer prices, I think tomorrow from September from the Bureau of Labor Statistics, also retail sales data, and I think maybe GDP is going to come out, and a consumer confidence reading. Those are all due Tuesday. In the corporate world, pretty quiet in terms of earnings, but you will get Baba, Dell, Kohl's, and Best Buy.
And you got Zoom. I think you have Zoom and Agilent tonight also.
That is true.
That's not bad. I mean,
they can do away with the numbers. I mean, it only hurt the market. So why do we need those?
I was going to say, what do you guys do to adjust your positions in the short week like this?
Nah, nothing. The biggest thing you're going to have to decide this week is, do you roll on Monday, Tuesday, or Wednesday, meaning today, tomorrow, or the next day before Friday, which is usually the day that we'll roll. Friday, you'll have a shortened holiday week, so you might not have as much action. Or do you roll the following week? What's that?
there's a half day. I mean, you have
a half day. I mean, markets will be fine. I mean, it's not like it's going to be, if you're in liquid products, it's not like it's going to make, that big of a difference. But that's going to be a big quandary. Do you try to suck out, any volatility and take the risk of the shortened week longer term? Usually you roll on Friday, which is coming up, and take the weekend out of it for you and roll sometime next week? Or do you roll early now? Like I would probably roll, today or tomorrow. If I'm not going to make that, if I've already made that decision, then I'm not going to roll on Friday. So I'd probably roll today if I'm not going to roll on Friday. If I'm not going to roll on Friday, I'm probably not going to stay into the following week. But, you might, since it's entirely up to you.
So Thanksgiving weeks, and I'm sure I can be totally proved wrong on this, but in my opinion, and since I've been on the trading floor, so like years and years and years, Thanksgiving weeks can be whippy. Like they because there's the volume is declined, and I think when there's less players in the game, markets have a tendency to get real whippy.
They do. You're right. As a matter of fact, the first time I ever became a broker, not a market maker, because I had taken the test to do both on the CBOE. You can take the test and be both and be designated as doing either one or the other. You couldn't do both at the same time, but you could be a market maker on Monday. You could be a broker on Tuesday, but you have to be a broker all day on Tuesday. One of the guys that stood by Frankie, another brokerage group, said, "Hey, Bat, we want to go on vacation. Will you,
Be our broker?
Be a broker for us." So I was a broker for a day, and it was the day before Thanksgiving, and it was one of the busiest days of the year, and we had thousands of orders, and I was in a personal fast market, and it was quite an experience.
It happens. Like I said, maybe it only happens occasionally, but those feel, the feels like temperature of it feels more like pretty violent.
Market action was pretty violent on Friday. Talk about just getting whippied all around. But a single man came out and single-handedly saved the market, and that is Fed Governor John Williams, not the composer, but the Fed governor, and his remarks seem to calm things down. A Fed rate cut next month seems doubtful, but now it seems more likely to happen. Despite the dramatic differences among Fed officials, opinions are coalescing behind a third interest rate cut. What are your takeaways from the move on Friday and how we're setting up this week?
Didn't
Because it was wild.
it was wild, but didn't it go from like a 25% chance to a 75% chance, something to that effect on the CME Fed Watch?
And back again. Yeah.
So then it
both.
flip-flopped. So, I mean, he did. They came out, they saved the market. All's well that ends well. And
Well, at least my next headline that the bond rally of 2025 faces a new data vacuum as a waiting game begins. The bond market is headed towards its best year since 2020, but we're left unsure if treasuries can hold their impressive gains. Heading into the holiday-shortened week, the treasuries index is on track for a small gain in November after rising in 8 of the 10 prior months. But again, we're not going to get a lot of the big data that normally moves the bonds. Like you're not going to get a CPI, for instance, and you're going to have like rate cut stuff. What are you guys doing in bonds?
Well, I mean, don't you think they're kind of, I get that there's a data vacuum and in bonds, everybody, the eyes are on them, but I think it has more to do with the rate decision, the rate cut, or if he comes in and says who he's going to say is the next Fed chair, depending on which way
if he's pro. Trump,
whether or not I know JP's going to finish out his term, but there is, if he declares someone, I think that's going to have a bigger move on bonds than anything else.
That's good insight.
Bonds haven't done too much. They've gone sideways for the last couple of weeks. 117 is what, if you ask me where bonds are, they're 117.02, but if you ask me where they were, I'd say 117. They've been between, 16 and a half and 17 and a half, pretty much. There is a little bit of a story. I got a lot of emails this weekend about, the unwind carry trade, since Japan now is not, has high interest rates, the highest interest rates that they've had in quite some time, maybe an all-time 3% and change. They're not buying as many U.S. bonds, and they're dumping U.S. bonds, and that's why you've got this volatility in U.S. bonds. Yet my argument is bonds haven't gone anywhere.
They haven't gone anywhere.
So I don't know about where the volatility is, but we'll see. And that's why they need a 50-year bond. And there's a whole conspiracy theory. Sometimes I just don't understand why, even with stocks, I know bonds can have a little bit more of an economical background story to them. But just with stocks, I like when the stock goes down, why does it have to be a story? Michael Berry, got out of it. That's why we went, look, why can't it just be we got too far, we went too far too quick, and we sold off, and then we go too far down too quick, and then we buy them back? Why can't it just be aggressive buyers?
Because it's our human nature. There has to be a why. Like I have to understand. I have to understand this.
I agree with you, Tony. But the Gen Pop, as I like to call the people that aren't tasty traders, I call them the Gen Pop. They do need the story, and the bond story has been all over. But Tony, you're spot on accurate. It hasn't moved. I mean, if you with blindfolds on, you don't even need to go look at it because it's been between 116 and, like you said, 117 and a half. That's it. Yeah. And it's been back and forth in that range for a very long time.
Mm-hmm.
Well, good news, because Treasury Secretary Scott Bessent says the U.S. is not at risk of entering a recession next year. So good job, America. Okay. He did acknowledge that there were parts of the economy showing signs of struggle, including housing and interest rate sensitive sectors. Isn't that all sectors? But pop off. But he says, I'm very, very optimistic on 2026. So cancel crash.
Is this as the government is buying part of Boeing? Because they're
I don't know why he's there. I don't know what's going on, but I don't know. What are your odds of a recession in 2026?
We won't know about it until 2027 if we were in one.
That is true. You don't know you're in a recession until it's over.
Right?
It's over, right.
Yeah, right.
So silly.
I know. I just thought it was funny. I was like, oh, thank you. I feel so much better. I slept great last night. Well, the dollar is steady as Thanksgiving looms, as the yen continues to get a little bit tested. Let's talk currencies. Yen, euro, dollar, pound.
Let's talk currencies real quickly. I mean, I'll mention the Japanese yen, which I hate to because it never goes up. It never has two sides. It is basically unchanged. It is down around 250 ticks, which is about almost a half a percentage point. So the Japanese yen's a little bit lower. When you look at like the British pound and the euro, they're up to unchanged. The British pound is up small, and the euro is also up small, a little bit more, 275 ticks. But they too have been going sideways. So the trade has been going sideways. Some of the pairs trades have moved nicely, but the pound and the euro have been going sideways. With the dollar.
With the dollar, right? With the dollar.
Have you been trading any currencies, Liz?
We trade the yen. I mean, that's the topic du jour is the yen, and we have Glenn on Thursdays for the FX market. So we trade currencies that way. I love Glenn. He's the best.
His little face.
He really is.
He's so smart. I'm not trying
smart.
to.
So
right,
smart.
I'm
That's
not
why I thought
trying
it was
to
like,
diminish his professional capacity, but he just has the cutest little face.
and he is so sweet. And that's why I said he's a wealth of information about it. And I was like, did you want to do this when you were a kid? Like, did you wake up and be like, I want to learn everything there is about the FX markets when I'm a
I know, right?
And he's like, no, I kind of back-ended into it. I was like, he's got a wealth of knowledge for
He does.
being young. Yeah, he's good.
And even Nikki is having fun trading like the kroner and the shekel and a bunch of other crazy stuff. So, but he's making it work. He's like, yeah, I'm staying engaged.
If you don't have a shekel position on, what are you going to talk about at cocktail parties?
Right. Right. Hey, in other news, let's talk about gold because I have my favorite gold bug on the show. Gold's holding steady as the market weighs chances of another U.S. rate cut. What are you doing in gold? And we'll throw silver in there too.
So gold took a little bit of a hit, but it's back. I think it's back. I mean, the gold rally is back on track.
Yeah, 4,100 right? Isn't gold just around 4,100? Let me take a look.
Yes. And like I said, it's been going up. It went straight up for a long time. It fluctuated with the market last week. So when everything was down, well, as the market declines, when you get those violent down moves, everything becomes more correlated. And gold was even a part of that. So it went down as well. But I think we're back.
Gold for the last week, it flirted with 4,000. It got to like 4,050. I'm just rounding here, and it got over to 41.50, and we're trading at 41.20 right now. All weekend, gold was a little bit weaker, but it's caught a small bid here. When you look at GLD, it looks like it's going to be up around a point and a half. Earlier this morning, it looked like it was going to be down 50 or 75 cents. So gold has had some good play. Good IV rank in there too. It was up to around 60, 58, 57, something like that. Now it's down to around 48, but still good volatility, good IV rank in gold.
And it's got the rank goes either way. I would say the pendulum swings both ways in gold. If it's moving, you've got an IV rank. If it's just sitting there, you don't have an IV rank.
How is that gold silver ratio doing to start the week?
Let's take a look at that.
And while he's looking up the ratio, I was listening to Vecchio and Ilya, and I think they're dabbling in silver, which made me kind of think, okay, I've been gold for so long that maybe I'll jump ship and go to silver.
Silver is a big product. You should be careful there, okay? And not a lot of
Tony, I'm huge. I'm just kidding.
Yeah, thanks, Dad.
Yeah. The gold silver ratio is about 80, about 81. It's at the lower end of its range. Yeah, maybe silver's a little bit of undervalue. Are they buying silver? What are they doing?
Oh, I think they were dabbling long. I don't want to put words in their mouth. I heard silver and that made me think of silver and gold, and I decided to go long silver. So I'm pretty sure they were dabbling long in silver.
Yeah, it makes sense. I could see that. It seems like the ratio would suggest that it's a little undervalued, but again, the ratio just means that one moves more than the other, not that one is undervalued or overvalued compared to the other.
You don't have to do one versus the other. You could just do one.
Yeah, for sure. Yeah.
In other commodity news, ExxonMobil has paused plans to build what would be one of the world's largest hydrogen production facilities due to weak customer demand. The suspension of the project, which had already experienced delays, reflects a wider slowdown in efforts by traditional oil and gas firms to transition to cleaner energy sources. We could talk, obviously, larger oil instead of just XOM, but both, whatever. I don't care.
So what has oil been doing? I mean, I should be looking at this. That was Thanksgiving. What year was that? I was sitting there eating my turkey when oil I remember my cousin's husband being
went under zero.
Yes.
What?
Oh yeah. Oil went negative at one point, but there were
that was the carrying cost, not the.
Oh, okay.
Yeah. Oil right now is at the low end of its range, trading around 58 and change. It's been in oil has had some pretty good movement to it, although it's been chopping around back and forth, not going anywhere, but it's had exaggerated moves of about $2, which is $2,000 on the oil futures. So you're looking at this is about as low as it's been, 58 and change. It's been as high as around 61. So it's been chopping around in that. When you look at that as a comparison, like over the next month, Oil's supposed to have around about a $4 expected move the next 25, 30 days. So it's been in about that $4 range. This is the lowest it's been of that $4 range.
Yeah, it is pretty low. What's the IV rank? And let me look at it real quick.
It's about 30, 28, 30, something like that.
Bad. It's good.
Bad.
Yeah.
Mhm. Yep.
Once a strong year for IPOs on Wall Street is starting to fizzle out due to the government shutdown and a cautious turn by investors. Many IPOs targeted for the end of this year will now likely be pushed into next year as the SEC works to clear a backlog of hundreds of registration statements. Meanwhile, shares of companies that did make their IPO debuts haven't fared well lately amid concerns that stocks have gotten too expensive. What is your sentiment on IPOs?
I did. I will give you my sentiment, but I was talking about this the other day with Jenny on our show. I would love if the research team, and I like to say it live on camera so that it happens. I'd love to get a 2025 list of all the IPOs, where they started and where they closed the year.
I think they could do that for you.
Because it was crazy. Some of these went straight into the stratosphere and then came straight back down, right? So I think that's probably why the IPO market is getting spooked, is because some of them were just parabolic and they've come crashing
like
back
your
down.
Circle or your other coin.
And it was like you couldn't get in. It didn't matter what it was. You was just like, oh, it's an IPO. I got to get in.
Yeah. No, I think you're right. I think the research team could provide some insight on that. How about you, Bat, your IPO sentiment?
I think it might feel like they were parabolic, but I think there were so many IPOs in 2025 that were just ho-hum that I feel, you know what I mean, looking at it might throw some perspective into it if you see all of the IPOs and what they actually did.
So I was in an IPO fund that didn't make any money. So that's my experience.
Right, that's what I'm saying. So right, you were in an IPO fund, right?
Well,
so
I wasn't an IPO fund. I gave some money, like you had to be a high net wealth client, blah, blah, blah. And they would put you in, it was Merrill Lynch at the time. They would put you in there. Whenever they got an IPO, you would be
it this year?
Ones that got part of it. But you had to do all the IPOs. You couldn't do just what
say, I want in on IPO. Yeah. Was that this year, Tony?
No. This is going back quite a few years. And it didn't make any money. And I pulled the money out after about 3 years or so. There was some ups, some downs. I thought it was going to be like a guaranteed money kind of thing. That portion of the money would make about 60%, end up making nothing.
Yeah, but years ago, I think the IPO market was different than it is right now.
It's always different. Sure. I mean, right now, and the environment has changed. But what I'm trying to say is, you usually have to be in one of these type pools where you have to do all of them. You can't just do, the ones that are going to be hot. You got to do all the ones that they represent. So,
I mean, to be fair, if memory serves, I think even Facebook struggled for a little bit after it IPO'd. So it was.
Mm-hmm.
Vanetta, I'm glad you brought that up. I bought Facebook at 36 and watched it go down to 16.
Yeah, we bought it in the 20s. Yeah. Held on to, and when it got into the high 20s, we got out.
Yeah, I remember that. So, I mean, never say never, I guess. You never know.
Yeah.
Hey, you can ask Ryan about this because this is, I think, really interesting, and maybe we'll do more segments for this on social. But the IRS is cracking down on a popular crypto tax cheat. Many investors have been able to sort of avoid reporting crypto without getting into trouble. But in the 2025 income year, listen to me when I tell you this, brokerages are required to send the Form 1099-DA, and that reporting goes directly to the government, so the government knows if you've been scalping or scooping some fart coin or whatever, because your brokerage is telling on you, they're narking on you. No, all jokes aside, but because before brokerages didn't have to report crypto stuff, I guess, but now they do. So.
So I think that's interesting too, because I mean, for us, it doesn't matter because we're one for one. But what I think is getting crazy is all those leveraged. I mean, I don't know if they're brokerages. Would those be crypto companies or crypto wallets where you're 50 to 1 leveraged and you've lost or gained so much in there? That's where I think it's going to be. That's where I think this is. Hopefully, they get those guys instead of us. We're small fries here. We're one for one. You put in $1, it's $1, right?
But the IRS treats crypto like property, like stocks or real estate, so it can trigger a capital gain or loss. So.
Well, this year it might be a loss.
Yeah.
Yeah,
so
this is not a concern to the U.S. traders on a trading platform. This is really about those leverage products, and I don't
Yeah.
know how many. I have a real hard time thinking that this whole Bitcoin and crypto sell off is because of these leveraged buyers and sellers. I don't buy it. I just think it's a speculative product, and these are the kind of moves you're going to have to the upside. 125,000, now to the downside 80,000. Volatility is back in that product the way it's supposed to be. I mean,
But it's always been a volatile product. But I don't know. That's why I'm dying to get Ryan on there, because when you have somebody that's leveraged 50 to 1, and then all of a sudden it drops, they're out. Like, they're liquidated.
Well, they're going to liquidate you anyway, right? I mean, you don't even
Yes.
get a chance to do it when that happens. I mean, I've never been product to that thing because I don't trade like that, but I guess.
So we had Dan Cecile on. We used to have him on our show, and he was saying sometimes, like when you get these big moves, it's literally like some huge people that are just being liquidated because they're too levered.
the whales, yeah.
Yeah.
Could be.
What's Coinbase doing, or IBIT this morning? Any of the crypto stuff to start the week?
BITO is up small, 50 cents. Coinbase is up about $5 or $6, with Bitcoin being higher, and MSTR, if you want to take a look at that, 173, up around $3.
Okay.
So they're all a little bit stronger.
Tech stocks remain on track for a record $75 billion inflow this year. That's according to Bank of America's weekly flow show note rate. And it still highlights demand for the sector, even as it continues to come under pressure from concerns about lofty valuations. Tech stocks have been on a surge for much of the year, and the NASDAQ has risen around 14% to hit an all-time high in October. But kind of the blooms off the rose here. Where do tech stocks go from here to finish the year?
So NASDAQ was down almost 3%, 2.75% last week. The Dow was down almost 2%, and I think the Dow was down almost 2%, and the S&P was down almost 2%. The Russell was the strongest of the group, down less than 1%, but the Russell has fallen 4 straight weeks in a row. It's probably one of the longest weekly declines since March, my Taiwanese sources tell me. So if you're looking to buy dips, this would be kind of a dip that we haven't seen in some time. Now, we are up this morning about 42 handles, but volatility is hanging in there, which means we're going to have some two-sided action.
Yeah, volatility is hanging in there.
Mm-hmm. Mm-hmm.
A little bit of bubble trouble. No, don't ask for the bubble video. We can't play it. But AI rally is showing cracks as investors question risks. NVIDIA didn't save the market. So what's next for the AI trade?
But it did save the market, then it didn't. It did save the
Right,
market.
it really did save the market, right? It was up around $8, which was well inside the expected move for NVIDIA's earnings, and then it promptly sold off from there. NVIDIA's only up a buck and a half. I say only up a buck and a half because the last 2 weeks or so, from the beginning of November, 3 weeks, beginning of November to now, it's fallen from around 205 down to under 180, where it sits right now at 180.
Yeah, but there's big questions out there about like the whole bond situation, whether it's an Oracle or OpenAI is levered to the hilt, or just there's so many things that seem like this is all smoke and mirrors.
You had to mention Oracle. I've got some long delta in Oracle. Is that just because you're being mean to me?
No, I'm reading from the news.
Oracle, by the way, is down $1, unchanged to down $1. It can't get out of its own way. Good IV rank of over 100 in there, but man, it needs a little bit of a bounce.
Yeah, and NVIDIA, I mean, I know it's 180 right now, but it only gave back a month. It was parabolic for a while.
Yeah, you're right. Yeah.
All right. Well, we will see what happens, I guess. But in good news for NVIDIA, the U.S. government now is like, yeah, go ahead, sell your chips to China. After looking at the tape action Friday, the Trump administration is now considering greenlighting sales of NVIDIA's H200 AI chips to China as a bilateral detente, boost prospects for exports of advanced U.S. tech to China. The Commerce Department is reviewing a change in policy. So good news for NVIDIA.
Nvidia up small this morning. You mean S&P's up 41 and the Nasdaq up 228. That's about a 1% move on the Nasdaq.
Meta wants to get into the electricity trading business, a la Enron. What could go wrong? They need something to help. So I can't even say this with a straight face. In order to accelerate the construction of new power plants that they need to provide energy for their data centers, they want to get into the business of trading electricity. Bloomberg reported that both Meta and Microsoft are asking for federal approval to trade power. I didn't know this, but Apple has already received this approval. What are the pros or cons of letting tech companies arb their energy spending?
And Meta's a tale of a different city. Meta is the price point of Meta right now. It hasn't been here since May. So, you look at Nvidia. Nvidia's given up a month. Meta has fallen from grace. This thing has really tanked.
Yeah, it's giving back 6-7 months. You are correct. Meta is up this morning with the rest of the market. It's up about $7, but it's just a skosh off of its lows. A little energy story here, and Tasty Nation, the old Tastytrade offices used to have an energy trading group.
Oh, that's right. Yeah.
Yeah.
Which one?
Electric and energy trading group.
19.
Yep. That we bought the building from. Yep.
Wow.
Now it's a synagogue. Go figure.
I'm skipping a story here, John. Americans are holding on to devices longer than ever, and it's costing the economy. I just think that's funny. People are holding on, whether it's an aging printer or a cracked smartphone, people are holding on to things longer than they planned. The average American now holds on to their smartphone for 29 months, and that cycle is getting longer. The average was around 22 months in 2016. That's because Verizon would pay me to get a new phone, but that's neither here nor there.
Yeah, I do think people are holding on to things longer. I do, because the tech.
Yeah, why not?
Like, I've already got the 3 cameras. What else are we looking for here? Do you know what I mean?
Hey, in a historic move
you have 3
on
cameras? I'm still on a 2-camera phone.
Are you on a 2-camera phone? I got the 3.
Yes.
In a historic move on Friday, Eli Lilly became the first healthcare company to reach $1 trillion market valuation. The drug maker netted that achievement on Friday. The pharmaceutical giant stock has been riding the skyrocketing demand for its weight loss injection Zepbound and its diabetes treatment Mounjaro. Lilly.
Yeah, we looked to try to get short this 2 or 3 days ago. It's back down. It's actually down this morning by about $10 or so. But Lilly's options markets are just horrific.
They're
there's
trash.
really no trade in there. Even a vertical spread, I think I would probably abstain from doing in Lilly. Lilly's a great story. I don't think it's a tradable story for us.
It's $1,000 stock.
Yeah, 1,050 this morning, down around $10.
Can I tell you a story that's going to make you sad, or maybe not, whatever? But Lilly was my first job out of college. Because
was it really?
Yeah, because they came to the journalism school. They're like, you don't need to know about science. It's fine. They're like, you can talk, professionally, like, because we're communications major. Anyway, so Lilly is my first job. And so I had Lilly stock. I obviously don't now, but the stock that I had, I think I sold it at $55.
No, Banetta.
You see, Banetta?
I needed the money. I was 24.
I needed the money. Yeah. Uh-huh.
You leave me alone.
$55. Does it hurt you when I said it was $1,000 stock?
Yeah,
it hurt a little
whatever.
bit.
I don't know. You do whatever. I'm skipping a story here. I put this in for you. Wiz. Wicked for Good soared to 150 million.
I saw it this weekend.
You did?
I did.
What's your review?
You know what? It was really good. I welled up.
Is it really long?
Annabelle and I wore pink sweaters. She wore a green sweater.
Oh.
This wasn't nearly as long as the first one. I was prepared
because I knew you.
So good.
But it actually made more than the first of a version of Wicked in theaters. Good job.
I like the first one better. It was still really good, but I did like the first one better.
Okay.
I think I like the first one better too because it's probably a longer sleep for me than the second one.
Second one's 2 hours. First one's 3.5.
Yeah, I could sleep through that. That'd be a good night little nap.
But you know what you would like? I saw on TikTok, Chili's restaurant has wicked margaritas. One of them is pink, one of them is green. So people are going, and I guess they are a heavy pour. So people are going, and then they're like running around the Chili's and filming themselves. It's pretty funny.
It was good though. It was a good movie. It was fun, and it was sold out. Like I haven't been to a packed movie theater in years.
Maybe let's look at AMC. Could this turn things around for AMC?
No.
No.
Don't. It's a good story, but don't do it. AMC $2.20, just about as low as it's been. If you're going to buy AMC, you're just trying to buy a flyer here. Not because of this or anything else.
Yeah, but aren't most movie theaters not AMC anymore? There's like the Star Cinema or the ones.
I know, but I mean for tradable, for publicly traded, tickers that I know off the top of my head.
Yeah.
Hey, because I'm over time, I'm just going to do my viral video of the day. Liz, I put this in here with you in mind because when a woman is on a mission to decorate for the holidays, she will let nothing, and I mean nothing, stop her. Look what this woman did.
This is probably live footage of Jenny. It's my guess. This is probably live footage of Jenny. All right.
You know, watch this. I am impressed. Like, women should rule the world. Watch this.
You do.
I almost rented a cherry picker the first year we lived here.
So this woman took a cherry picking certification course to decorate her house.
That's awesome.
She's an icon. She's got the harness on. She's OSHA certified.
I mean, this is a true story. My neighbor gets a cherry picker every year to decorate his life, and so 3 of us tried to get it done, and then I had to tell him because I was going to get up on it.
Your husband is a bright man.
Her husband is nowhere to be seen in this footage. Where's the man is at? He's in the house, but she's an icon. She's
No wonder she doesn't have a man. She's on a cherry picker.
The problem was the cherry picker was ruining our front lawns. Oh.
Is that Sandra Day O'Connor?
Did someone say cherries? Yes, that's Sandra Day O'Connor. She will. I'll try to get her off the screen, but
she just wants to show America her butthole.
How far away is your camera? Can't you just touch her?
Yeah, I could touch her.
Oh, she's so cute.
Here, I'll go away for a minute. All right, get down. All right, we're going to take a quick 90-second break, all right? Sound good? We take a quick 90-second break.
That's a great way to end the segment with the night.
Come back. We've got more Tasty Live after this. Peace.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Explain pot odds.
Pot odds is my favorite term, but pot odds in the poker world or gambling world refers to having a greater payout than your implied odds would suggest. So let's say I have 3-to-1 odds to win a pot, but the pot is giving me 4-to-1 odds to make that bet. I would have a positive expected value over time. So in trading, let's say you have a defined risk debit or credit spread that's currently at a max loss, and let's say there's 30 days left to go. There's not really a reason to close that position because you're already at max loss. You can only go up from there. So in that scenario, that would be a positive pot odds scenario or something that would give us pot odds to stay in.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Liz, we are back, my friend, and you know what that means. Time for only one thing, confirm and send. But before we do, let's take a quick look at the market. Really haven't looked too much at the market. We talked about it with Vanetta. Even the S&Ps are up 37. They've been up around 20-ish to up around 40-ish. You can see they're about 10 handles off of their highs, but they've been up around 20 to 40 all morning, all last night that I've seen. I've missed the highs and the lows in the overall market. NASDAQ up 2 and 11. That's your leader in the clubhouse, I guess, on a percentage basis. And the Russell and the Dow are your two weakest. A little bit of a reversion, a little bit of a reversal from last week, where the Russell and the Dow were kind of the weakest. And so the NASDAQ was kind of the weakest. The Russell and the Dow holding up a little bit. Volatility down by 35 cents to 31.15. Doesn't tell you the whole story. You can see here volatility was was a lot higher the last couple of days. It's come off now. Interesting enough, we are about 20-ish cents off of the highs that we made last week in the market when NVIDIA came out. Volatility, right? And volatility was around 2090 or so right after NVIDIA's number came out. But the market is nowhere near where it was when volatility was at this point. So volatility's come down a lot more Friday into today than it had previously. Bonds are up 10 ticks to 117.04. Bitcoin traded all the way up to about 88,700. It's 86,600. Still a 2% move there. And Ethereum doing the same, up a little bit more on a percentage basis, up 3. But you can see they're all down 3%, up $85. But you can see they're all down near their lows. Oil up 14 cents after trading under 58, traded down at 57.42. It's back to 58 and change. But you can see there at the low end of its range. Gold, although it is down $4.80, been going sideways, but really been hanging out right here at the 4,100 level. Let's just call it 4,050 to 4,150. It's 4,110 right now. Your beloved silver down small also, about 6 cents or so. Net gas down 10 cents. That's a big move, 2% move. One of the larger movers in the commodity space. The euro, Bitcoin, euro, British pound, basically unchanged, up small. This is a NASDAQ market right now, but volatility is here.
What's leading the NASDAQ?
What's leading the NASDAQ? I mean, that's a great question. I mean, I think Apple is kind of hung in there. I think Apple has been the one that's really kind of saved the market. If that's what you're thinking, I would say Apple.
And Apple was such a lagger for so long. It's finally
It was. All right, let's do confirm and send, then we can get Kai in here with an option jive.
You wait.
Monday, November 24th. Are you ready for this, Liz?
Oh, I was born ready, Tony.
All right, awesome. Let's do it. This first one might stump you. So let's see.
I think this first one is going to stump me.
How do you create an alert using tastytrade?
I texted Tony this morning. I go, I don't know how to create an alert using tastytrade. He goes, don't worry, I do. Is that okay?
So I'm gonna put it up there. I'm gonna put it up there for you. I put the right hand gutter here. All I did was move the right hand gutter from here to the middle of the screen so you can see it. Okay. And there's this little bell right here. Okay. And if you click that little bell, it says alerts.
But what can you alert? What price the stock is going to be?
Yeah, you could do a price alert on the last on the stock, the bid, the ask, greater than or less than price, and create an alert. You can even put in some notes, I believe, too, if you really look at. I mean, I don't.
Will you put in an alert so we can hear it if Apple upticks? I want to see what happens when it does.
Sure, I can do that for you. I mean, I'll put an alert on the ES if it goes red on the day. And listen, if you have it set up in your settings that you get emails every time something trades in your account or an alert is set up, then it could be especially good for those who aren't watching the markets all the time. I think it's a feature that is
requested by people.
Yeah, and probably should be used by the audience. So it's an excellent.
But I'm a junkie, so I'm always watching. So that's I think why I don't set alerts. I'm not a stop loss person either. So I could jump into an alert. Like if I am out of something and I say if it gets back to a certain level I want to get in. That's something I can sink my teeth into.
I agree.
Yeah.
Next question, please. After a week, you want me to read it to you?
I don't care. I was figuring you'd answer it. So I'm going to read it to you. After a week like last week and this week being a holiday shortened week, is there anything to look for in terms of unique opportunities or traps?
I think you talked about it just a moment ago that the holiday weekend seems to be a little bit whippier, extreme lows and extreme highs. And I think that's kind of a fair statement to make because usually the volume is a little bit lighter. Now, we've had huge volume going into this week. So to have a light volume week this week wouldn't surprise me. And going into the holiday weekend. But again, when you least expect it. And to your point, you can get some extreme moves even with lower volume in the market. So I think volatility is going to stay a little bit here. I don't think we're going to see if we rally, I don't think we're going to see the 19 handle on VIX futures. I know they're 21 right now. I don't think you'll see that if we rally. And if we go lower, you might see new highs in volatility, even if we don't go as low as we've been in the market the last couple of days.
The thinly traded markets. It's interesting, though, too, because even you said VIX futures are around at 21 and VIX is at 22.75. It's still VIX 22.75. That means anything goes.
Yeah. You got to remember that volatility is high, so you can have some two-sided action.
Yeah, for sure.
Next question, please.
Okay, is there a seasonal trend between Thanksgiving and the end of the year? I heard it's unusually bullish. Is that true? I don't know. The Santa Claus rally, I believe in Santa, and I believe in the Santa Claus rally, but I think that's later. It's not between Thanksgiving and... No,
it's actually after Christmas, but yeah, the couple of days, only 3 or 4 days after Christmas. Expiration week, which was last week, right? I mean, when I'm taking a look.
Yeah, regular expiration was last week.
Yeah,
everything's expiration now, though. But yes, regular expiration was last week.
It was typically a bullish expiration on the opening. SET was a little bit higher. I don't know. To me, it all seems pretty random. I guess if you go back and look in time, it does have a little bit of a bullish stent to it. I don't know, like,
practically. It's not glaringly obvious. It's not like get in, buy on Thanksgiving and sell at Christmas. It's not.
Yeah, it's not. Yeah. I think markets move, things change, and this is just a coincidence. I would not. You can look at this at any other point in time and say, from Bat's birthday on July 12th through the following week, it's a little bit stronger than the rest of the market or a little bit weaker than the rest of the market. I just think you're picking a time frame here. It doesn't really mean anything.
I think that's a good indicator. I want to find out from birthday to Christmas because
there we go. We'll get the team on that. Next one, please.
Okay, do you think the fact that we haven't had a prolonged bear market in recent memory suggests bear markets aren't possible? Or do you think it's dangerous and the next bear market will be really bad because it's been so long?
Well, if you're bullish, you should never, this is like Beetlejuice. I know you like movies. This is like Beetlejuice. You never mention this, okay? You just, if you're bullish, you just continue to ride the wave. I mean, we're just a skosh off of all-time highs, although we've had a nice little sell-off, a couple of percentage points recently. You don't mention this, otherwise you will see what it looks like to get a prolonged bear market here. I mean, listen, it does seem like over the last, we've had V bottoms. I mean, so there's no other way of talking about this other than it does seem like every dip is met with a buy. Now, that is going to end at some point, and we might have gotten to that capitulation point where we are right now, where we haven't necessarily had the V bottom. We've had the rally backs and the sell off, the rally backs and the sell off, and maybe the market's just trying to get its footing, or maybe the market's a little bit too frothy, and you're going to get a lot more of this action going into the end of the year. I mean, it's anybody's guess, and that's exactly what it is. Anybody's guess.
Right. But I do think we mentioned it in the last one. Watching the volatility here is going to be your tell. I mean, you're not going to get market at all-time highs with the VIX at 22. You're not going to, because that volatility is a precursor in my mind.
I agree. I am a volatility junkie. I look at /VX intraday for keys on what the market is going to do, or at least in the shorter term trend, at least to get me in at an advantageous price if you're looking to do anything on, especially on the shorter dated options. If you're looking to do anything there, I always key on volatility. I think /VX is the best daily indicator of small market moves that you're going to see in the futures and in the market. So,
you ever look at VIX one day?
I don't.
I don't usually either. People have been bringing it up a lot lately with us.
Yeah, I don't, because it's not really a tradable product. I'm going to put it up there for you so that you can see it. But the VIX one day has been elevated. But again, /VX is elevated. So like 6 of one, half dozen of another. If you told me, that volatility was 21 and change, I would say the one days are volatile too. I mean, they're going to have a much larger move than anything else. We always look at the ES just to see what the expected move for the day is, and it's about $46. Now, I quote that every day, and last week it was around, the last 2 weeks, it's gone from around 26 to around 60.
Yeah.
So 46 on a daily move, you have high implied volatility. So I think anybody who watches the show or trades on a daily basis knows that volatility is high. You don't have to look at the VIX one day, but you certainly can.
Yeah, people like to see it though, which I thought was pretty.
Yeah, it's a good representation for sure.
All right, next question.
Oh, that's it. We're all done. Listen, Kai is a talker, so we have to give him some time to talk. Okay, he presents. He's got about 10 slides for you. So let's take a quick 90-second break and come back, and we'll talk with Kai, and we've got an option jive. Sound good to you?
Sounds great. See you in
90 seconds. It's Tasty Live.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Global markets never sleep. Explore them with Forex on tastytrade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on tastytrade.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
tastytrade's Money Match event, Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with Active Trader Mode. Smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. tastytrade. Download today.
It's options. Jive. That's right, Liz. We are back, and it is time for an option jive. We're joined by my man Kai. What's up?
Not much. How are you doing on Monday?
It's great to see you, Kai. Thanks for coming and joining us, and I love this segment each week.
Same here, same here. All right.
Wow, Kai, isn't it nice to have Liz on? Because you don't get any of those accolades when it's Nick and I.
I was telling Kai at the
Kind of
break,
true, yeah.
we do this segment. We take pieces of it on the SIBO floor on Tuesdays, and some of the traders, they're afraid to be on camera, by the way, which I think is pretty funny. But they'll stand like just on the peripheral and watch these segments.
That's cool.
That's interesting. Yeah. I'll take it as a compliment.
Yeah, for sure.
You should.
Great.
Yep. Very nice.
Ooh. You want to jump into content because we have 12 slides, some information because something interesting happened last week, especially the later half of the week.
Was it a market? Was it a moving market last week, Kai? What happened?
Yeah, moving market for sure. So last week, can we go to first slide?
Sure.
Definitely, we experienced much higher volatility last week, driven by the more broad market pullback rather than any specific events. I was keeping up all the live events every 5 minutes, 2 minutes. Nothing actually happened, but the market actually start to fall down on Thursday and have a huge move on Friday at the same time, right?
Yes.
True.
If you're zero DT traders, I have two interesting slides. You can take a look at it. If you keep mechanical, the results might be different from what you experienced.
So you know what's crazy is the zero DTEs. We've really dug our teeth into this, and I know you guys do the segment after us on I think you do it on Thursdays, right?
Thursday, yeah.
But we've been doing these even in these whippy markets. The regular puts have been okay.
Yeah. I saw the Tony Rehan's post weekend. He posted a chart for this year's probably zero DTs. The P&L is actually reaching the highest point, but the swing is huge.
Yeah, the swing is
correct.
Yeah. So Thursday, which was the pretty interesting day, NVIDIA earnings actually was good, positive, and we had like 1.5% to the upside, and we'd have a huge reverse to the downside, another 3% reversal.
Mm-hmm.
So we ended up like down 1.5%. Nasdaq were even lower.
Yeah.
The last one is a cryptocurrency was getting closer to $80,000. This morning it went back up to 86,000.
88 last night, 86 right now.
Oh, 88? Okay.
Mm-hmm.
All right. So we're actually testing the bottom here for the cryptocurrencies. I read some articles about some conspiracy theory behind it, but I don't know what are the real reason. But it looks crazy.
Why does it have to have a reason? This is what I was talking with Liz. Like, why is that? So there was no reason for it to go to 125. Everybody was happy with that because we usually, you usually lean long and then blah, blah, blah. And everybody's, it's all happy. Somebody goes, why can't it just be natural movement in markets? I just don't understand.
Right. We've got
Ryan
Grace coming on. We're going to shake him down for the answers, Tony.
Yeah, well, you can shake him down all you want. He owes me some money because I got hurt on it too. So yeah, you can shake him down for me.
Okay, good.
Yeah. So this upcoming week, we had a really short week. So not too many things happening. Economic news, not too important. So I'll put it here as a holiday. And the Thursday, the equity market closed. Can we go to the next slide? Stock market closed. Bond market. So equity market closed on Thursday. Friday, we multiple markets closed early. all Central Standard Time, close at noon. Stock market, bond close 1. Futures market close somewhere between 12 and 12:45, depends on the products. Metals and kind of crude oil, those agriculture products that they close at different times, but around 12 to 1.
Yes.
Awesome. Now don't need to get the emails. Everybody knows it's right there for you.
And Tasty Live will be, there will be no Tasty programming on Wednesday after the Tasty Live show. The Liz and Jenny on will be canceled, and no shows on Friday.
That is correct.
Yep. So talking about the indices performance last week, we're down 1.9% in S&P 500. NASDAQ leading the all the way to more than 3% to the downside. Russell, which was always underperforming the rest of the indices, actually was fine, only down 0.8%. I was surprised to see that.
I'm surprised to see that.
Yeah.
Yeah, the Nasdaq was the real big loser. Obviously, from here, the real big loser of the week.
Yeah, again, there's no specific economic or political news trigger that sell-off. So this is just some market correction.
I do like that you put the weeks next to each other. It's a good comparison.
It is.
Yeah, we see what happened last week is the comparative feeling.
For sure.
But the Russell, I think, has been down the last 4 weeks in a row.
I think you're right.
Yeah. He actually, on average, has underperformed the other indices over the years. And so that brings up to the next slide. The expected move from the beginning of last week's 1.9%. So fortunately, we're still inside the expected move, but intra-week, it's volatile.
That's correct.
Yeah,
But look at last week's. Your expected move was 1.9%, and it was. The actual move was 1.9%.
Yeah, most of the weeks we actually saw the inside a week. That's one reason is we have elevated VIX. The expect range is almost 2%, and I believe a couple of weeks ago we had only 1%, 1.0%.
Yeah.
For weekly moves. And so because we have slightly higher implied volatility, VIX is 21 right now. So the end of last week's 23.4. So that brings us the 134 in SPX weekly move. That's 2%. What do you think? Because not too many activities we're gonna have to the since Thursday, right? So I personally guess it's going to be inside move.
I don't know. Kai, I was saying this earlier. I think sometimes Thanksgiving, especially when you've got an elevated VIX like this, I think Thanksgiving can be a whippy and choppy. I think I'm going the over.
We could still be inside or at the expected move, like you just showed just a moment ago. I mean, the expected move was 1.9%. We were down 1.9%. I mean, you could still be inside the expected move, but every day when you're trading 0 days is its own day, right?
Correct.
Just being inside the expected move doesn't help you with 0 days when you get, a 4% move, 2% move up, 2% move down, almost intraday.
That's true.
Yeah. But I believe Jacob did a segment comparing the VIX 1D and VIX. If you're looking at intraday, probably VIX 1D can give you more accurate numbers. Because the VIX was up, 1D was up to what, 28% or something?
So, the VIX 1D got up to, the high of the VIX 1D last week was 32.84. I happen to have that chart still up from when Tony and I were looking at it.
Okay.
It's high.
It's a lot. It's a lot if you watch the market on Thursday. Okay, so the IVR, if you look at the IVR from the last week, mostly up, but I don't think, even though you see more green arrows, but it doesn't mean the volatility actually increased that lot. I think the meaningful one is the equity, the other one's the Bitcoin. They were up pretty significant. IVR of SPX is up to 33%. Bitcoin's
all a big up move in Bitcoin.
Oh yeah, 94%. The rest, like natural gas is up 10%, but it's not very extremely important for the most traders. So I would say it's kind of mixed, just Bitcoin and the equity market.
Yeah.
Very good.
Okay. So next 2 slides, we're gonna have some fun. This is the what happened on Thursday. I want to emphasize. So S&P 500 from open to close, we saw a 199 points range, not from high to low, just from open to close. That's the third largest intraday downside move that our database can ever show.
What was the move open to close? It was way bigger than that, wasn't it? And not open to close, high to low, high to low.
High to low is slightly higher because we didn't even have any pull back, like a bounce at the bottom.
No,
it's a little bit. It's you can see the tip of the high of the from that chart candlestick, right? It's slightly higher. So the only 2 days or 2 periods that exceeds this move is one is the big beautiful day this April, and the other one is the beginning of the COVID.
Really?
Yeah, so this is the third largest one. It's understandable because right now the SPX price is much higher than before. So the percentage-wise, I showed the percentage. Percentage is exactly down 3% from open to close. This is actually probably only not even the top 10. We have a lot of 4% move on daily basis, but from the just actual range, this is the third largest one. But it's still, you feel the pain if you long any delta in that day. It's a pretty huge move.
Oh, this felt worse because your volatility stays high. So even if you had short delta and short calls, it didn't do anything.
Yeah, no, your calls didn't help. Your calls are going to actually help you today on the way up, by being able to hold on to the puts. Your calls won't move as much as you would expect on I don't know what's going to be a $4, $3.50 to $4.50 move on SPY.
So unless you were actually just short a product without using options, those didn't help you at all.
That's correct.
Yeah. So next chart's next 2 charts. These are the one I want to talk about. This is 0DT from last week. So as a standard setup, we use 20 delta and with the $20 wide iron condor. The target is either 25% of the max profit or we hold to expiration. We do not manage downside risk. Interestingly, all 5 trades you're able to close as winner before 10:30. So within 3 hours. Yeah. I checked like 10 times for all these data.
Well, no, the only reason, and I know this because I'm on from 10 to 11, and I'm telling you that the market moves. Like something happens during our show. We'll reverse.
That's right, but between 10 and 11, yes, you're right.
10 and 11, and I think this is an opinion, Kai, and maybe you can do some research into this. I think it's when European markets close or those close, and then it shakes out.
When do they close in Chicago time?
10:30.
10:30, okay. Oh, interesting.
Mm-hmm.
Okay, but all these trades.
Maybe 10. I could be wrong. Maybe it's 10 o'clock. Maybe it's not 10:30. But I know. But during our show is when the European markets close.
Okay,
I'll take a look at it. These trades on 3 or 4 of the times last week, and they all were able to close.
Yep.
Like you said, Kai, before 10, 11 o'clock. So you're right on these.
Yeah,
they all became losers, and then they all came back to be winners, I believe.
That's what I want to show in the next slide.
Yeah.
Let's go to the next slide. But if you're slightly greedier, now this is what happened.
We like to call it more aggressive, Kai. Not greedy, more aggressive. Go ahead.
Again, 4 out of 5 trades, you're able to close more than 50% of winners before 12:30. But Thursday, there's no one buying the dip all the way down. So
that would have been there was a max loss. Yeah.
Yes, max loss is more than 400%. Losers if you don't manage them. So that's why we probably should keep mechanical.
Yes.
You know what our studies also show, and like I said, they all build on each other, but it says if you don't get your profit out before noon, close it at noon because it'll be less of a loss.
Yep. It does seem to work that way.
Mm-hmm.
Okay. Now we have more and more rules to analyze the zero.
The rules keep adding up.
Yeah. Next one is the top 5, bottom 5 performers in the S&P 500. Top one is the Ross. That one had earnings on Thursday, up 9%. Lennar, I just want to try to put some name here that we don't trade that often. RCL, up 7%. Decker, 5%. Of Google is 5%. None of these high-tech companies had an up move like Google in the past week, mostly in the red zone. We can see in the bottom.
And Google up another $12. It'll be a new high here in Google if it closes here today.
Mm-hmm.
Really?
Mm-hmm.
Yeah. So Buffett still got it.
AMD got killed last week, leading the worst performers, down 15%. IVR is 48. So you can see how the IVR actually elevated after the earnings.
Yeah.
Right? So all the high tech companies reaching 50% IVR. It's a great time for traders, as you and Nick talked about on Friday.
Yep, you're 100% correct. AMD on the radar.
Okay. Wow. Yeah. So the rest of the companies are here. If we look at the next slide, is earnings. Earnings, interestingly, none of these had more than double-digit move the day after earnings. None of these, even including Nvidia or anyone here. Even the Ross had a 9% weekly move, only up like 6 or 7% after earnings.
Yeah, they all kind of stayed within their expected move.
Yeah.
Sure did.
Yeah. Looking at the all the underlines that already announced the earnings for this season, the quarter 3, we had a roughly 200 to 300 companies announced last week. The performance is slightly worse than the week before. So right now we have 47% winners. The average return is down 0.3%. This is kind of on the negative zone.
Yeah, I mean, 53-47, that's definitely getting more negative territory.
Yeah, mostly we see 49-51 or 51, very close to 50-50. 47 is kind of negative from...
Especially for earnings, right? They usually skew them to the upside because, companies want to kind of underserve you in the beginning so they can
Oh, that's true, yeah.
When their earnings come out. I mean, that's typically... how they do it. So having this kind of thing would make it a lot more weaker than some would expect, I think.
It's still close to 50-50, but this from like 3,000 companies, this is kind of toward the worst performance week. The last one, we don't have too many earnings companies announcing earnings. Probably the interesting one is after today, Zoom. All of these are before Wednesday. Baba, definitely the one that's most people traded. Best Buy. And what else?
Is Nick still in Neo? Because I remember this was, I'm not blaming Nick by any stretch because I'm out of it a long time ago. But one time we were all sitting at the table and we're like, okay, if you had to buy one stock right now, what would it be? And Nick's pick was Neo.
Really?
This was a while ago.
I don't see we don't have a position in Neo.
Okay. And then Neo went straight down and now I think it's risen up a little bit.
Just a little bit. It's still like a $6-7, right?
Yeah.
6-7.
Yeah.
Yeah. So any other underline that interests you? You're probably gonna put a trade in. John Deere used to be the kicker of this season.
So as far as, I've been kind of skewing, instead of these earnings trades, I've been doing the 0 to SPX. I'd rather do those. Then I'm in, I'm out. There's no risk overnight. I don't care what the market does.
Yeah, we've been doing the same.
Yeah.
We've been kind of hanging out in the 0-day world too, as opposed to looking at earnings. But we will today for Zoom, Agile. We'll see.
Cool.
Awesome, man. Good job out of you, Kai. Great timing. Even the S&P is hanging out up 39, Nasdaq up 224, Russell up 6, and the Dow up 98. We'll take a quick 90-second break and come back. We got the opening bell next. Liz, get prepared. We'll be back in 90 seconds.
Happy Thanksgiving, Kai.
Happy Thanksgiving.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
tastytrade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Got the need for speed? No problem! At tastytrade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. tastytrade, make your move.
Liz, we are back, my friend, and you know what that means? The opening bell is imminent in about 2 minutes or less here. Even the S&Ps are up 38 handles. They've really been hanging out here for most of the morning that we've been on the show. NASDAQ up 216. I guess on a percentage basis, that's your leader in the clubhouse. Russell's only up 4. Russell's been down 4 weeks in a row here. It's weak right now this morning, relative, although it's up $4, and the Dow is up 20. Volatility in by 30 cents. Doesn't tell you the whole story there because it traded just like the other futures, so it's been lower the last couple of hours. You can see here lower than Friday's lows. Bonds are up 14 ticks to 117.08. As bonds go higher, rates go lower, but it's really been in a very tight range here. Top to bottom.
Yeah, that's a tight.
I don't look at it anything as it's just trading like anything else. I mean, we have been able to buy dips in there and had some two-sided action. Well, there's your opening bell, my friend. So
there we go. We made it. We made it, Tony.
We made it. We made it. Good on us. Good on us. Did you think that we weren't going to make it?
I didn't. I actually wasn't looking at the time, and I thought Kai got off at 8:30. So yes, I thought.
All right, fair.
But they're not really moving much, right? I mean, they've been even the S&Ps have been sitting there all night or all day since we've been on, since about 38.
Yeah, no, they've been like you said, they've been sitting all day. We haven't really done anything in the overall market. You are 100%.
Okay, so what do you do? I'm going to say what I do real quick too is I will sort by P&L day and I flip it to the positives first because you always got to look at the positives. Then flip it to the negatives and see if there's anything that needs to be managed in my account.
Yeah, I do. We do the same. I mean, it really is. I mean, you want to look at your problem children first, right? I mean, isn't that?
I always look at positive. Sunny side of the street.
Right. I think you have to, right? I mean, I think that's the way you wanna the way you want to do it. I don't know if it's the best way to do it, but I don't know. Is there any good or bad way of doing it? Look at even the S&P's up 49 here. We'll also go over everything just to see what's been moving, kind of thing. So I like to look at the highs and lows of all the different stocks. Like right now, I'll go to the high option volume list. I'll see what the buckers are, right? And you look at some of the buckers. Try to look at the names. You got Oracle down at $1.40. Oracle has been low, continues to be low. Really can't get out of its own way.
You're
right?
long Oracle.
I'm short some puts in Oracle, which have not.
Wait, let's take a look at it. I want to see. I might take a look at Oracle.
Okay, go. If you must.
I must.
If you must. I mean, Oracle's been has been a tough one. I mean, I'm not going to lie. It's been a very tough one.
So you're just because I know Vanetta was talking about it a while ago. It's been kind of like back in the 90s. I just wanted to see. That's one thing that we're not in.
Well, good on you, because if you are, it just goes in.
I have a lot of other charts that look like this, though, Tony. So if you covered that up with a black piece of tape, I could tell you some of my other positions that look like that.
And then you also we'll also look at what's moving the market here. So I'll just change it from net change from high to low on the top here. And you'll see that Tesla's caught itself a bit. It's up 15. Google, which has been a leader in the clubhouse, up 13. AVGO been a little soft as of late. If you look at AVGO, kind of on the lower end of its range, been a market leader. Definitely not a stock that's been on fire sale, but definitely catching a bid, up 13. MU up 11. Coin for one of the first times up $6 or so.
Yeah, Coin got hit pretty hard. Coin and Meta have been myrtleated.
Yes, those seem like they've been on a fire sale, up $6 today. Meta's another one you just mentioned, does seem to be on a fire sale also. But I think Meta's the stock that everybody loves to hate, kind of thing. Yeah. Does that make sense?
I get it.
Yeah, definitely. Taking a look at the rest of the market, what do we have here? Interesting to look at. If you're looking at Bitcoin, it's flirting with 87,000, although it still is relatively low here across the board. Expected move in the E-mini S&Ps down to 42. So it's coming in ever so slightly.
So, we're already up 56 right now. So that's what I want people to realize. We're up 56 right now. It's a 42 expected move.
Yes.
That's up or down. So we could go to unchanged on the day or just a little bit of
Yes, we could. Most definitely.
Yeah.
Most definitely could. Most definitely could. What else do we have here? Pretty complacent kind of market, right? I mean, we've been higher, we've been significantly lower, and now we're higher on the day. I don't know. Seems like
So you know what? It's so funny because I think I'm a little bit more gun shy right now because we act like you've been here before. We watched this go up to 120 and then swing right back down.
Sure,
Anything goes in this market right now.
Yes, anything does go in this market right now. It's definitely a trader's market. I think you have to stay nimble here. I mean, I know we've been used to just buying the dips here, but I think you have to stay nimble. I think that's the best thing that you can do, or the best advice that I can give somebody is, if look at this, even the S&P is up 60 now. Volatility /VX down 75 cents. This is about the area in volatility that we were at when the market was significantly higher than where it is right now. Yeah, there you go. We just got that's that day right there on the 18th. So.
Yes.
So we'll see what volatility is. Even the S&P is up 62 or 63. Good job out of the S&Ps.
Yeah, well, we're back. So what do you think? Okay, Tony, prediction time, because it's fun. What do you think is going to happen the rest of the day?
I mean, volatility, 20 and change.
Has it gone down since we've been on? Has volatility gone up or down since we've been talking this morning?
Oh, it's gone down for sure. For sure. Since we've been on the show, it's gone down for sure.
Okay, volatility's gone down. I'm going to say we're going to end the day up 87.50.
On the even the S&Ps?
On the SPOOs, yes.
Wow. Okay.
So we're right now up 63.50, if I'm looking at that correctly, which I really can't see because we're not on the platform. But I think we're up about 64. I think we're going to end the day up 84.75.
That would be outside the expected move. That's a pretty bold call.
No, go to the option chain. I don't think it's that bold.
Yeah, I mean, sure. So you go to the option chain when you're looking at it, you look, well, 40.
So, yeah, go 0 DTE.
Days,
and what did I say? I said 80, 60, 67.
Yeah, you're inside the expected move for the day if you don't factor in last night's move.
Yes, inside the expected move for the day. That's what I'm saying. That's not a bold call. It's kind of a weenie call.
Yeah, Dow's up 100, Russell's up 10, about a half a percentage point. This is definitely a NASDAQ rally, which is a little bit healthier for the market. I think like the NASDAQ should be the leader. It really is just a rotation here. NASDAQ got hit pretty good. Now NASDAQ's catching itself a little bit of a bid. I love your true believer. I'm a little bit more not as optimistic as you on the overall market. I mean, I think
20 points. All it is 20 points today. I don't think it's going to hold. I think tomorrow we're going to get hammered, but I think we're going up another 20.
Well, key on volatility, it just made a low at 2065. It's 2071. If you don't see it back up at 21 again, then you're right, Liz.
And I'm telling you, I'm glad we're going to be. Well, I won't be on the show with you, but at 10:30, usually around 9:05, you'll see some. The other thing that we noticed too is around 9 o'clock. So the market's kind of shaking out. Everything's opening right now between 30 and 9. Around 9:05, when we're walking into the trading floor, is also when we'll see some movement. Usually there's something happens around 9 o'clock and something happens around 10:30.
Well, beautiful. Well, we'll see if anything happens at 8:37 because we'll take a quick 90-second break. It comes to the point in the day, even the S&P's up 56. It comes to the point in the day when I have to say nothing says Monday like this man, Dr. Jim. I mean,
we've got Dr. Jim in the house.
Yeah, of course. Are you kidding me? When Dr. Jim comes on, it's like a mackerel hitting you in the face. But I'll let you see how it feels. We'll be back in 90 seconds. It's Tasty Live.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The tastylive research team and on-air personalities post refreshing content updated daily, covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Liz, my friend, we are back, and I get to say it with him on the show. Nothing says Monday like this, man. That's right, Dr. Jim. The scan options.
Can I get the applause? Who's got the sound effects?
Yes.
Who's got the sound effects?
Let's go. Man, I'm excited.
What's up, good doctor?
Man, what's going on? All I know is, come on, man, you got to be sending, if you're going to be showing off the guns like that, I need a company-wide email. Like, I need time to prepare. Like, I can't just be walking into that site unseen. Come on, man. Come on.
Tony, you should have seen him on the road in Austin. I was like, are you flexing over there?
Well, you know, it's an old man. It's like a shining star. Like, you ever see like a star in the galaxy?
Yeah, that's like about to die and like be
before
gone
it burns
forever.
out,
Yeah.
it has its brightest moments. Yeah.
Yeah.
Right.
That's good. No, that's good. Speaking of brightest moments, hey, so my fence is done. It's done. It's over.
Wow.
Okay.
It's over.
What kind of fence? What kind of material? I need to know the deets.
I won't. We've been talking about this for weeks. So to save all the viewers, I won't go over every detail. But it's a wood fence. It was destroyed last year in the hurricane.
Got it.
I finally got it repaired. I had a good friend of mine do it. He's done an amazing job. Tony's been ragging on him for weeks. But I've had neighbors come by and say, "Dude, your fence looks amazing." And I'm like, "I know it does," because my guy
I'm calling total BS.
No, wait a minute. My question is, do you have the kids out there painting the fence like they did in Currencies?
No, we got to stain it like you can't stain it right away. Oh, you mean like a wax on, wax off deal?
Yes, that's what you got to do. Paint the fence.
Yeah.
First they sand the fence.
Yeah.
And then they paint the fence. You got.
No, we gotta wait. Apparently, you have to wait like 2 months. You gotta wait for like the pre-treatment or whatever to come off of it. So anyway, I'm in high spirits, man. Fence is done. We got Thanksgiving this week, guys. So what's the Thanksgiving? What's the power move on Thursday? Like what are you guys going for? Like what have you been thinking about? Like give me the dish that gets you excited.
Oh, you wear your fat pants and then you eat it all. That's fair enough, right? All of it.
For me, it's not having to clean up as much stuff as I have to. That's why I like to order all my food and not make it. I think cleaning up for Thanksgiving is probably the least thankful job that anybody can have.
If you were in the room, I'd give you a hug, Tony, because I actually feel your pain. I don't cook anything, so I have to clean everything at my aunt's.
Yep. It's horrible.
Yeah, that's brutal. That's a brutal trade for you. Like you're on the wrong side of that trade, I think.
I am.
Yeah.
I agree.
Yeah.
Yeah, because when you're cooking, like you're excited, you even get the taste test, you get to do all these things, but then when it's over and everybody's cashed out, it's like you've got to step up and clean it up. That's brutal.
Yeah.
Yep. It certainly is. It certainly is.
Yeah.
That's
All right,
good.
Dr. Jim, what about you?
It's got to be, So, I mean, it's such a tough call for me because, like, growing up in Detroit, like, obviously the dish in the North is, and even I'm sure it's the same in Chicago, is stuffing, right? Like, it's stuffing. It's 100% stuffing.
Is it dressing or is it stuffing? Do you
Well,
know?
that's what I'm getting to. In the North, it's stuffing, but you go south of the Mason-Dixon line, it's dressing now. Like, they don't know anything about any stuffing.
No, but
so
I had to. If it's in the bird, it's stuffing. If it's out of the bird, it's dressing.
It's more complicated than that. Like, it's way more complicated than that. And so, down in Memphis, like I had to adopt and I had to adapt to a Southern way of life. And so, honestly, now I never thought I would say this, but I think I'm actually a dressing guy now. Because it's different. You've got cornbread as a base, not regular bread. Like, there's a lot of differences.
All right. I like it all. So whatever's in front of me is what, it's like if it's they're in your hands, they're real kind of thing. If it's in front of you, it's good.
Remember when you had a tight line crossed.
And then my mother-in-law makes a chocolate pie that I'm very excited about. And it is like, pecan's always been number one for me. Well, pumpkin was number one for me for a long time, then pecan. But she makes a chocolate pie. Guys, it's pretty solid.
Yeah,
All right. Well, I'm with you there. I got a chocolate peanut butter coming. I got a chocolate pecan coming. I got a regular pecan coming.
Where'd you order those from?
Jimmy Bread, thank you for asking. Algonquin, Illinois. That's right. If you haven't gotten your pies or your bread for your Thanksgiving, the preferred baker at Tasty Live is Jimmy Bread in Algonquin, Illinois.
Do they deliver?
No.
Nice.
You're not supposed to ask the questions that are a downtrodden question. You're supposed to be, ooh, is it good? Oh, I'm going to say, yes, the best chocolate peanut butter pie I've ever had, Liz.
Sorry, wrong question. I didn't get those questions in advance.
Oh, that's too funny. All right, you guys want to do some finance?
Sure.
Man, let's do it. I need y'all's help this morning because I don't even know the answer to this. Payment for order flow, or maybe I do know the answer and I'm sandbagging a little bit. Payment for order flow, is it good or is it bad?
Oof.
All right, so yeah, that's right. Today we're going for it, man. We're going for the jugular.
All right.
We are going to address the elephant in the room.
I'm going
Payment
good.
for order flow.
So I saw the movie Wicked. This weekend, and I'm saying I'm going for good. I say payment order flow is for the good.
I'm like, how is she going to tie Wicked into payment for order flow? I'm waiting for this.
She did it, though. She did it.
So I'm curious. So you guys, I'm curious. So obviously payment for order flow, which we're going to talk all about it for the next couple of minutes and whatever. But back in the pits, like before like the electronic age of trading, was something like payment for order flow, was that even a thing? Did that even exist?
Back in the day, no, but you had a designated primary market maker, then they had to take on all the risk. So before payment for order flow, it was DPMs, meaning that somebody had to do it, right? So that's kind of, I think then the jump was payment for order flow. Am I off base here, Tony?
Yeah, we never had payment for order flow, and then when payment for order flow came in, it was originally the burden of whoever the lead market maker firm was in
designated primary market maker. That's correct.
Right. Whoever each one was in the pit. And then from there, they started spreading the cost to everybody that was in there. I'm doing a 0 day at 5:05 here on the / ES options instead of the SPX options, just because I was on them. So you'll see that come through on the follow page.
Good job. I'm waiting until 9:05. You'll see mine come through on the follow page too.
Understood. Makes sense. So they spread the wealth. So we never had it. We thought it was going to ruin business for sure,
Mm-hmm.
and take a lot of business from one exchange, which was really the lead exchange was the CBOE.
SIBO, Tony.
Yeah, the CBOE, sorry. It used to formerly known as the CBOE. We thought that was going to be the death of it, and it really was the life of it. So we were completely
No,
wrong.
what's the life of it? And little fun fact, Dr. Jim, and I don't know if you know this, I was on the payment for order flow committee on the SIBO floor. So
I didn't know that.
I was in the meetings when it was developed. I was in the room where it happened. How about that?
Yeah.
Wow.
Do you like that? Do you like that Hamilton reference? I was in the room where it happened. Now I had no input because I was very young and green at the time, but I was in the room when they were talking about it. And it did come from a good place of good intentions. And it did do a good job.
Yeah, it did. It definitely did.
Okay.
Yep.
That's really that is an interesting little fun fact. Wow, that's really cool.
Fun fact. That's why.
Well, I knew it was a big deal that I knew and was friends with Liz Deerking, but now it's a whole different. You're on PFOF committees and stuff. I'm like, wow, that's crazy, man.
Oh yeah,
this is crazy stuff, Tony.
Yeah. Who knew, right? Who knew?
I mean,
This way, when I saw this, I opened it up and closed it. I was like, I don't need to read this. I was in the room where it happened.
That's pretty cool. That's pretty cool. All right, John, hit us on the next slide. So let's get going. Let's talk about this. Let's see if we can figure this out.
Ready?
So at one time or another, active trading always finds its way into the crosshairs of the financial space, where the usual suspects, such as high-frequency traders or payment for order flow, are often painted as enemies to the retail trader. But when it comes to what actually happens, is payment for order flow actually a net negative for the average trader? So I'm curious, why do you guys think these two things in particular continually get, they get a lot of negative press, and they're oftentimes kind of hung out as the bad guy that's essentially stealing all the money from all the retail traders? Like, why do you think? Like, it's almost like clockwork. Every few years, it'll pop up. Why do you think that's the case?
You're killing me with this because I'm going to give you another wicked reference. It's exactly, this is exactly what happened with Elphaba. She's misunderstood. And once you're misunderstood, from the outward appearance, it looks like it's going to be negative. So people can hang their hat on it being a negative, angry animal. There, that's it. I'm done. I'm going to mic drop right now.
So do you kind of feel like it's almost like once it's been painted and colored a certain way, it's hard to shake that association? Okay.
100%. And I think it's also misunderstood where people are like, payment for order flow, high frequency traders, you put those together and we can make a lot of people mad.
Well, you know what? It breeds competition is what it does. And I
but
think
it doesn't say that. It's kind of like the Tower of Terror is called the Tower of Terror. If you call it the Fluffy Bunny Ride, people would get on it.
Right. Fluffy bunny ride.
There you go.
I'm going to try that tonight. Honey, Fluffy bunny ride is ready
Omaha.
tonight.
Let's get back to the task at hand. Okay. So very, very good points. Fluffy bunny rides aside. So, so let's understand, like, I think you guys are absolutely 100% correct. I think that the misunderstanding is kind of the key. And this morning, we're going to unpack basically, what happens because of this competition that I think is going to allow everyone out there to better understand what this actually means. So, John, go ahead and hit us on the next slide. So it all begins with the bid-ask spread differential, right? Which obviously you guys made your career on the bid-ask spread. You guys are very well versed on the bid-ask spread. And I think a lot of people that have been trading for a while are also familiar with the bid-ask spread. But we have to make sure that we understand exactly what it means and kind of the different mechanics that are happening. So you have a bid and you have an ask. So one thing that we need to understand is that market makers, liquidity providers that are out there, what you all did for the beginning parts of your careers, is you are standing ready, right? You will buy on the bid and sell on the ask or offer all day long. So
but they were our markets. We got to make them. It wasn't somebody else's.
Right.
Of course. Yes, of course. So if you're buying on the bid and selling on the offer, that means that the counterparty, so the retail trader, in this instance, it's not all retail flow, of course, but for this example, we're going to assume that it is. That means that I'm selling bids and I'm buying offers. I'm buying on the ask. And so obviously, that's how y'all make your money. Like, you're going to make the spread. We're going to pay the spread. That's how the game is structured. That's how the game is played. And so when the quote is posted, the transactions can happen immediately, if I'm a retail trader and I'm willing to sell on the bid and buy on the offer. Okay. But generally speaking, we have this mid price, right? This mid price between the bid and the offer, the bid and the ask. And we're always trying to sell slightly above the bid price and buy slightly below the bid price. And what we're going to see on the very next slide is it is because of things like high frequency trading, it is because of things like payment for order flow that we are actually able to do that more often and more consistently. Again, you can sell on the bid and buy on the offer all day long if you want to. That's not a problem. And the market makers and liquidity providers are always standing ready to take the other side of your trade. But if you want to get some type of price improvement, there has to be someone that's willing to improve that price on the other side. And what we're going to see on the very next slide is it really is the PFOF that allows that to happen a lot more often and a lot more consistently.
PFOF. Never heard that.
I'm just trying to be included in the conversation with you. You were in the PFOF community.
Fluffy bunny.
PFOF. Never heard the word PFOF in my life. I learned that something new. I like it. I'm gonna run with it.
Yeah, I mean, it's just, I don't have time to say the whole thing. PFOF. I don't have time to say payment for order flow. Payment for order flow. We gotta go PFOF. Okay.
I like it. PFOF.
So next slide there, John. Okay, so now, right, you've got PFOF in the house. So now I've got payment for order flow. So what does that actually mean? That means that the market makers pay the brokers for priority in participating in retail order flow, right? So that is what it literally means. The market makers, the liquidity providers are saying, hey, we will pay you if you give us priority for the order flow that comes from your broker. Okay, when this happens, we have to understand a couple of things. Number one, there are lots of different liquidity providers and lots of different market makers that are out there. And what they are doing, retail order flow, or any order flow for that matter, it's incredibly valuable to them. It is priceless to them because that's how they make their money, right? And so they are willing to pay. And of course, it's going to be a competition of sorts in terms of, you have all these different market makers and all these different liquidity providers all kind of fighting for the retail traders' order flow. And here's one thing that I think a lot of people, and especially the financial press, financial media, whatever, they don't quite understand. If you are a market maker and or liquidity provider, and you are willing to improve the retail trader's price the most, you will get top priority in the queue for PFOF. Is that correct?
Yeah.
Yes.
Yeah, that's called getting competition. Otherwise, if there wasn't, remember when we had no payment for order flow, people like Liz and I'll throw you in there, Liz, would make the widest possible market we could make so that we could get the largest edge on the entry of the trade, because the only thing that we can control really is the entry of the trade. We didn't know if we were buying or selling. Remember, when you're improving a market, you're improving it on both sides. You have no idea what the person is going to do. So it really made markets tighter and tighter and tighter, which was the best thing for retail investors.
For customers, not for us, but for customers. And that's why this was met with such disdain, I should say, from the traders, because it made it easier for your self-directed retail investors. As we would say, your grandma in Virginia that's buying and selling options.
That's correct.
Yeah, exactly. And so that's why, again, I think the understanding is so important, because if you look at the slide here, so again, I've got my bid-ask spread differential, right? If I'm a retail trader and I end up selling above the bid by a few cents or whatever the case may be, then the market maker is buying from me at that price. Well, then he can then flip around, or she can then flip around and sell it at a slightly higher price. And so there's still a spread to be made. Now, again, because of the payment for order flow, because of the competition, that difference is shrinking. Right? The difference between essentially where the market maker is transacting, they're not buying bids and selling offers anymore. They're buying slightly above the bid and selling slightly below the offer. Mm-hmm. And again, if another liquidity provider comes in and is willing to do that at an even better price for the retail trader, now it shrinks even more.
That's correct.
So think about this from the vantage point of us, from the vantage point of the retail trading space. Man, I want more high frequency traders. I want more payment for order flow, because all that's going to do is it's going to drive the spreads even lower, even lower, even lower. And that's, part of the decimalization, part of going from eighths to teenies.
16.
Right? I mean, I remember the teenies, right? Teenies. Yeah, there you go.
Yes, so that's true, and I'm glad you're actually bringing awareness to this right now, Jim.
That's what we do, Liz. That's what we try to do.
Yeah, because it's something that I actually understand, but you can't. It's almost as if you could write this on the wall, because the PFOF, people do think that it's negative for them, that people are getting paid to take the other side, but in actuality, it's helping them, because your mom and pops, your retail investors aren't doing the hundreds of thousands of orders that the market makers are.
Well, see, that's another thing that's always interesting to me, and I can actually speak from. So this was back. So I left academia in, let me think, 2016, which is obviously when I came and joined Tasty Trade at the time, tastylive now, of course. But so I was in academia from 2009 to 2015, 16. And so this came up at times. And I mean, hey, guys have to understand something about academia. It's the polar opposite of what you guys experienced. Like you guys experienced, you're on the floor, you're doing the trading, you feel like there's an edge, there's a big advantage to being actively engaged in the market. Generally speaking, financial academia is on the complete other side of that argument, saying the markets are totally efficient. You're never going to beat, the overall market. You're wasting your time. You're wasting your money. You're wasting your resources, all those kinds of things. So when something like PFOF would come up, the general prevailing thought was always all of these, Ken Griffiths and whoever else is, Citadels of the world, they're stealing money. They're stealing money out of your pocket.
I understand. What was the logic? I mean, I understand I understand I don't understand their thought process to it. I understand what they're saying, the fear of it. Like, I get it. I'm not disputing that. What was the logic chain that got to that decision, got to that?
Yeah.
Well, honestly, you look at somebody's wealth, right? Like you look at Ken Griffith, he's extraordinarily wealthy. How do you think he got it? By taking from us. It's illogical, but that's the thought process.
Well,
exactly.
Then you hide everywhere.
No. This is a great question. The thought process was like all the PFOF, all the whatever, like that's skimming pennies off the top. The thought process was that's taking pennies off of the actual share price. That was the thought process. So that at the end, so that at the end of the day, right? And this is how kind of, this is one of those things where, like I always joke that like, not to go down the rabbit hole too much, but like, when I started teaching in 2000, I started teaching in 2009. I was straight out of my doctoral program. I thought I knew everything. I didn't know a single thing. I didn't know anything, right? And now I've been with you all for 10 years. It's like, man, if I ever went back to the classroom, I feel like I could do a much better job because I actually understand how things work and whatever. You have to understand that a lot of individuals in academia are in the same boat that I'm in, to where they've read all the books, they understand all the theories, they understand all the whatevers, but they've never actually been in it as a practitioner. And so because of that, they don't quite understand certain things that you really have to have a practitioner's grasp on. And so the idea was, even as a long-term investor where I'm just buying and holding, it's hurting me. It's taking intrinsic value out of, the system and out of the value of the company. And at the time, I didn't know enough to really combat it. But now I know clearly that's completely wrong because you're not even looking at it in the right way.
That's good. I'm glad you come to our side. I'm looking at the SPY right now. We're talking about just the stock price. You're getting a single penny wide markets. That's the greatest thing ever for somebody. Did it take it off? Maybe it's a realistic market. 11 million shares have traded penny wide.
You now, as a retail investor, you went from not knowing what an options value is to having the capabilities of what market makers could do because you have a penny wide market, and you're basically, that market will, if volatility changes and the market doesn't move, that option will move down a penny or up a penny just on the model itself. So you now have everything that a market maker has at its disposal. Now all you need is a strategy to fit your assumption. And that's really what we try to do here on Tasty Live, is teach you the strategy to fit your assumption, assuming that prices are perfect. And I don't know how you can say that they're not.
Well, that just it is. I think payment for order flow. There is no gaming of the system. There is no the word used to be arbitrage. The arbitrage is like there's something that's undervalued or overvalued. That's not the case anymore. And I think PFOF. I'm gonna go with your word. PFOF is one of those things that actually brought those values closer together. So you can trust the market because it is true.
Yep.
Competition is always good. Competition is always good. Like for the consumer, it's not going to be good for the producer. It's not going to be good for that side of the equation, but for the consumer, competition is always good.
Hey, we're on the other side. We're on the other side now, Jim.
Yeah, exactly. Well, right, exactly. And that's why when you have these, and this is a totally separate thing, but when you have all these different like monopolies that are kind of structured in the economy in a certain way, that's why you'll always notice that the monopolistic actors, they're going to fight to the death to protect that monopoly because they know that once you open the floodgates to competition, it's over. It's over, Johnny. Like it's done. And so that's essentially what's happened with PFOF.
Yeah.
So, all right, so John, hit us here on the next slide. So who wins in the end? Well, with PFOF in place, market makers and liquidity providers are highly incentivized to compete against one another for retail order flow. And thus, it is active retail traders as a whole who stand to benefit the most from this competition for order flow, as they ultimately end up with more favorable pricing on their entries and their exits. And again, Liz, I'm glad you brought it up because, I mean, you're 1 penny wide on SPY. You're 1 penny wide on SPY. And this was back when you guys were ripping everybody off for quarters and teenies. Like, look at how far we've come. And then Tony hit him again in the evening with his jeans on the back of his trunk. Like, you think he was selling those at a fair price? There's no chance. There's no chance.
Very true, Dr. Jim. Very, very, very true.
Just saying, we've come a long way, man. We've come a long way.
I like this segment. We haven't talked about payment for order flow in a long time.
I think you mean PFOF.
PFOF.
Yeah.
Fluffy bunny, yes.
All right, let's get him a few takeaways. All right, let's do it. Over the last decade or so, high-frequency trading and PFOF are certainly buzzwords that are often painted as enemies to the retail trader. But in the end, what actually happens is they provide significantly more liquidity to the marketplace, which ultimately ends up being a huge win for anyone actively engaged with the markets, just like we all are every single day.
I'm going to pin this segment and send it to the PFOF haters.
Man, dude, no, send it to your old PFOF colleagues in the committee.
Oh, yeah.
Be like, hey, we're still doing it. We're trying to make a change. There you go.
We're trying to help here. This is what we're doing.
Yeah.
25 years later, we're finally explaining it to the people.
Yeah, right. We finally understand it. Yeah.
Good job out of you, Dr. Jim. As always, have a wonderful Thanksgiving. Get yourself a haircut while you're there so you can be presentable for the family. Liz, we're going to take a quick 90-second break. We're going to let Dr. Jim go. I think he has an appointment for a haircut in an hour. We're going to take a quick 90-second break.
Oh, look at that, man. Look at that.
It's impressive.
It's something.
Fluffy bunny. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. What comes up next, Liz?
I don't know.
A market measure. That's right. A market measure.
I'm a guest.
We're talking about buying protection. I have 5 children. You know what my stance on that is. We'll be back.
Wow. I'm out of here. Get me out of here. John, get me out of here.
Take a quick break. Peace.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Global markets never sleep. Explore them with Forex. Now available on Tasty Trade. Get in on over 80 Forex pairs. 24 hours a day, 5 days a week. with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
We are back, and my furry friend is back too. There she is.
What is the cat's name?
Sandra Day O'Connor.
Sandra Day O'Connor. This is the cutest thing I've ever seen.
Yeah.
It almost looks fake, Tony.
What's that?
So pretty. It almost looks fake, like you're making this up.
She's
Oh, a big yawn.
she's chewing up the scene here a little bit. I could reach her, but she bites, and she's got claws and stuff.
Bites?
And I'm scared. Well, I mean, we got a couple of dogs. Come on, get down. Come on, get down. It's embarrassing. Anyway, even how about if I do this? Maybe if I switch the screen, she'll go away. Even the S&Ps are up almost 60 handles, 58 and change. NASDAQ up 411. Russell up 25. The Russell's caught itself a bit. Remember, the Russell was the weakest of the group earlier today. Yeah. It's now a leader with the NASDAQ. NASDAQ is the leader of the group, up 412. The Dow really is the lagger of the group. Now, the Dow has been, following the market, obviously, like everything else does. But the Dow was kind of bid the last couple of days, really a rotation, maybe out of those kind of Dow-ish stocks back into the NASDAQ stocks. I think that's just a story that you can paint for a day. I think it's got a lot of BS behind it. Volatility in by 95 cents. Really never got over 21. Traded close to 21.20, like 85, I think I saw, and never got any higher than that. Volatility has been high. It's still high. The world is your oyster. Bonds are up 10 ticks. Bitcoin's up almost 2,000 to 87. It got up to 88.7. You can see here Bitcoin's been on a slide. I know we'll have Ryan coming in later today. We'll talk about that. Ethereum on a percentage basis is actually up more than Bitcoin. Ethereum up $98, a 3.5% move. Oil's down 14 cents. And gold is up $8 to about as high as it's been on the day, 41.25. Let's take a look at some of the small movers here, keeping us higher. AVGO caught a bid up 22. You can see it traded down to 347, up to 368. It's about $6 off of its highs. Tesla up $21. Google up almost $18. App up $14. Meta finally catching a bid, up 14. Coin up 11 with Bitcoin higher. AMD up $7. You even got the Babas of the world higher too. That's all I've got for you right now. On the downside of the Buckers, it's Costco down $7 and change. I think, Liz, Costco is down $7 because they're calling it the Liz factor. Would you like to explain?
Because of my refund.
Yes.
This is so embarrassing, but everything we do on this show is realistic. Yes, I got $800 back from Costco for a Prosecco recall.
Wow. Okay.
I have to defend myself. I'm going to give a brief synopsis. So I got a letter in the mail saying that any Prosecco that I purchased for a 9-month period I need to make that glaringly obvious. I don't have to return the product, but if I bring this in, they will look up how many bottles I have purchased in the last 9 months. I walked in there. I go, I'm gonna give you this.
It's
Now,
because the bottles were exploding or something, like they
they
were
were exploding, and I did have a couple
spontaneously
explode.
combustion. Yeah. Mhm.
I had a couple explode, but I thought it was because they were in my garage because I was buying so many of them. I had a 300-person party here. I've been to tailgates. I buy
You're
this
a person party, and I didn't get the nod, man. I must have been.
You'll be invited to Annabelle's, but JD's was too big. The teenagers were a little bit too much for me. But
All right, that's fair.
So I went in there and he's like, "Oh, it's not bad. It's only 6." I was like, he's like, "It's only 6 bottles." I go, "I've never purchased an individual bottle in my life. Those are all cases." So I got $800 back from Costco in Prosecco purchases.
And Costco is feeling the pain, down $6 and change, even on a day when the rest of the market's catching itself a bit.
You would think the marketing department would be like, "Let's not send that letter to that lady. Let's send it to everybody else." It was impressive.
Good.
My husband was like, "You've got to be kidding me. There's no way they're going to refund you for all these." I was like, "That's what the letter says. I'm going."
Too funny. You might have to post that letter on Twitter or something like that so everybody can.
They took it.
Oh, they took it. Oh,
They took it. So I can't go back in and do it again. They took the letter from me.
Good one. See that? Yeah. All right. Well, let's do this market measure. You want to, and then we can bring in Q and Ryan.
Yes. So I'm not saying let's fire through this market measure, but let's get this market measure because I need Ryan in here. I need to get a handle on what the heck cryptocurrencies are doing.
Talking about the cost of buying protection.
Tony, I want you to keep it.
Yeah, no, I'm not saying nothing. I said my piece.
All right, good. All right. Next slide. Okay, I'm going to read to you, and you're going to give me the.
Sure.
Okay. With volatility rising into the holiday season and the VIX recently closing above 26, its highest level since April, concerns have grown across the markets. Many bullish traders are considered hedging their long portfolios by purchasing protection. Okay?
Yeah. I mean, listen, I think it's an accurate statement.
Since selling calls provides only limited downside defense, many traders turn to stronger hedging methods like buying puts. However, because puts often come with a high price tag, it's worth testing whether this type of protection is truly justified over the long run. I think that's the key sentence here is over the long run, because I do think occasionally, I mean, guilty as charged, I'll go buy puts if I'm like going on vacation or if I'm not going to look at the markets or if I'm doing something like that, but it's not a consistent thing that I do.
And let's be completely frank here. Like, if you're looking at, and I think they're really looking at here, like more of a classic strategy where you buy stock, sell call. I mean, you sell call for $5. The expected move is $10. It does protect you for 50% of the stock's move, but the stock can go down $20, right? And the call doesn't help you. You know what I mean? Like, or if the stock goes down quickly after you purchase it and sell the call doesn't help you. It has a lot of time factor to it. So a completely accurate statement here.
Well, and I mean, you and I alluded to this earlier today, and I think it is worth talking about again, is the fact that when the vol spikes, your calls aren't doing much for you anyway, because they're not. If you've sold calls and you get a violent down move and a huge up move in volatility, those calls are not giving you any protection.
That's correct.
Okay, perfect. Next. Oh, there we go. Here's a little chart. Long puts can perform well during market pullbacks. For example, a long SPY 16 delta put could have hedged roughly 4,000 during the correction this past April if the timing was perfect.
Yeah, again, I think they're going to find here that, timing your entry for this is going to be paramount. Not the strategy itself. Everybody knows if you buy puts and we go down quickly, they work. I mean, especially in the environment that we've had over the last couple of days. If you bought calls and we went straight up, they help a lot. But your timing has to be perfect. And I think retail investors have a very hard time with the timing. I know I do.
Right. And the timing has to be perfect, but it's only there for, correct. Retail, it's not something you can always put on. If I was always going to be doing this, I would say cut back your position.
Yeah, exactly. Cut back your buy-in of the stock and the sell of the call or the strategy that you're using, reduce the size. I would agree with you.
Yeah. I mean, if you're going to consistently hedge it with the same hedge, then just cut back your position. But it's pretty interesting to see. I think these have their time and their place, though.
Yep.
All right. Number 4. Consistently timing market corrections is extremely difficult. Buying puts repeatedly results in poor long-term performances. Okay, good. I'm glad they're monetarily saying what Tony and I actually just said.
Yep. Yep.
Okay, so your largest
Nothing to
profit.
add there.
But that's the largest profit on the put in a down move, right? If you bought the 16 delta put, your largest profit was $5,000 from the put.
That's correct.
Okay.
That's correct.
So nothing to add. Number 5. Most traders won't hold puts until expiration. Taking profits during market downturns can help improve results. In this test, long puts were closed at either a 500% profit target or at 21 DTE. Okay.
Right now, 500 sounds like a lot, but if you're buying a put at 2 and selling it at 10, you know what I mean? Like, where are you? You got to kind of put a number on it.
No, I get it. I get it. You have, they have to give something in order to test it.
Yeah, I mean, you can't say a 50-cent profit. I mean, you're not going to buy something as a hedge to try to, make 50 cents or $1 on it. It really is protection, right? So you got to have some sort of larger number.
But I would like to, I'm glad they did this because it's only protection if you're willing to close it. Otherwise, you've just wasted the money.
Yeah, well, that's the other quandary. Like, when do you close your quote protection? It's very hard.
Yes. All right, number 6. Managing early does improve performance metrics, but only modestly. Okay, so if you manage early, meaning 500% or 21 days.
Mm-hmm. You look at the success rate, 17%, but you do have that large profit of $4,000 on the overall, like your best case scenario. Your average P&L down $27 is really what you should be looking at here. And then the median P&L, it just doesn't seem to work.
No, it doesn't. And this is just the protection, not with the S&P, right? Like it's not
That's
with
correct.
the core.
That's
so
correct.
You're just looking at the hedge.
That's correct.
Number 7. Next, we examine a full married put portfolio, long 100 shares of stock paired with one long 16 delta put.
Okay, this is buying that downside protection that everybody always looks at, right? And always wants to have that outlier move, so to speak, right?
And in this study, were they using 45 days till expiration? Probably, right?
So.
Okay, let's go to the next one. Okay, over the long term, the unmanaged married put underperformed a simple buy and hold SPY portfolio. Well, that tracks. I mean,
this is what everybody always says, so why don't I just buy and hold the market as opposed to trying to do anything exotic? And you're right. You probably would do. I mean, you obviously would do better over time here. I mean, we're going back from 2013 up to 2025, and all things being equal here, you really did have a market a position that mirrored the market, just didn't do as well. So you might as well ride out the wave.
You might as well ride out the wave. And that's kind of what I was saying is if you're putting the hedge on, you're just paying for it. Just decrease your portfolio by X amount of percent because that's the same thing. That's how much.
That's right. You're exactly right.
Yeah.
Right. So buying 100 shares of stock, make it 90 shares of stock or something like that. I'm just throwing out a number.
But I think the zero DTEs have changed it where a lot of people can buy puts for small amounts or the expirations that are each day for small amounts of money. You can actually buy small amounts.
Sure. Now you're getting into more of I guess you would call it like a complex option strategy, which is not that complex. Like you're buying front month puts and maybe even selling back month puts against, the stock you have, or if you're looking at it, going from a very short period of time or maybe a news driven period of time. You're picking and choosing though. Like,
that's picking and choosing. If you say, oh, something's going to come out or I'm worried about it through this announcement, you can, that's become less expensive over the years.
Correct.
Yeah. All right. Number 9, please. Even when managed at 21 DTE or closed at 500% profit target, this hedged position still failed to outperform buy and hold SPY. Management improved results slightly, but not enough to overcome the cost of protection.
I think it basically says the whole thing here. When you look at the charts, they're almost two, one and the same. I mean, really what you're talking about is your timing has to be perfect. And even when you time it perfectly, you don't get paid. There are so many other things to do in the market. When you've got volatility that's going from, 17% to 23% and markets that are moving 100 handles a day, 200 intraday, there's so many other things to do than really actually kind of worry about this. So if you really want to be quote unquote long the market, if your friends and neighbors really want to be long the market, you tell them, you know what, you're right. All you really have to do, if you want to participate on the upside, you think the market is going to continue going higher, is buy SPY. It's what we talk about all the time here on the show. You want to participate and mirror the market? Buy SPY. You want to get dynamic and have your money use leverage, because most people don't have, multi-million-dollar portfolios. They have significantly less. I mean, I think the average portfolio is somewhere around $50,000. You've got to make that act like a $500,000 portfolio. And the only way you can do that is by providing the leverage that trading options allows you to do. And that's what we try to show you on the show.
I agree. And kind of to Dr. Jim's, I'm looking at the SPY markets right now. You can just buy that if that's what you're willing to do, but it's penny-wide markets. Yep. There's no gaming in the system. All right, let's see the takeaways.
Yep.
So the takeaways: hedging only works when timed well, which most traders can't do consistently. Agreed. Mm-hmm. Paying for ongoing protection usually hurts long-term performance more than it helps. And then managing long puts actively improves results a bit, but not enough to make the strategy profitable.
Yep.
He's pretty good.
Yeah. Very nice. Very nice. Very good. Good job out of you. Good job out of the market. It all comes down to timing, Liz. Really, that's what it comes down to. And the time right now is for us to get Quentin and then Ryan in here too. So let's take a quick 90-second break. Let's take a look at the market real quick before we do that. Even the S&P is up 61 handles. They've really had about a 15-point range up to around here and down to up around 45 on the E-mini S&Ps. NASDAQ up 400 and change. That's your big leader. The Russell is the surprising one. That was the one that was one of the weakest in the group. It's come back to be average, with the rest of the E-mini S&Ps up 60 on a percentage basis. The Dow is your weakest, up 120 and change. Volatility continues to contract down $1.10 to 2040. Bonds are up 11. Gold continued its rally, up $9, just a skosh off of its highs. It seems like the market's kind of settled in here a little bit. We'll find out in about 90 seconds what my man Quentin thinks from the trade desk, and then Ryan will be back in 90 seconds with Tasty Live.
Can't wait.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
In road trips, my family, it was like whoever could get the captain seat was it.
That's great. I'm having a great time.
Me too. But, I mean, stay a while. Take your jacket off.
No, I mean, I'll stay, but the jacket's not
Come
going
on,
up.
take your jacket off.
Nope.
Come on,
No.
take it up.
I'm sorry. I didn't mean to.
No, I'm sorry.
You hopped on this cowboy's horse, so I guess you got to hear his tale. In '87, I took it off. There was the market crash. In '92, NBC canceled Blossom. A couple of years ago, I lost it for 2 days, and the Lakers won the NBA Finals. Bottom line is when this thing comes off, bad things happen.
You've got to take it off sometimes. I mean,
Never do.
how do you shower?
The jacket's kind of gotten used to it. In fact, every few days it needs it.
No matter what, you keep it on.
I can take my shirt off if you want, but I'm not taking the jacket off.
I just don't know if that's something that I could deal with.
It'll be like a teal tornado. Just endlessly washing up on your shore.
I mean,
This is moving so fast, and I like it.
Yeah.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Said I'm all about it. Yeah, I'm all about it. Said I'm all about it. Yeah, 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 yeah. Said I'm all about it. Yeah, I'm all about it. Said I'm all about it. Yeah, 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 yeah. Oh, wound up, step out of the way. Louder, get better with age. I'm rowdy, I'm grounded, and I get my way.
Liz, my friend, we are back and we're joined by this man. No noise on my end, but my man Q, what's up?
Hello. How's it going?
Good. It's so good.
Well, man, how's it going for you?
Yeah, everything's good. You know, trade desk.
Q, I
has been
gotta
good. It's been an
ask you,
active
since
market.
you're from out of. I'm sorry to interrupt you. Since you're from out of town, do you have any place to go for Thanksgiving?
You know, that's a great question. I'm actually going to Jason. So my boss's boss, he invited me to Thanksgiving. Jason.
Much better to suck up to Jason than to suck up to me. I was going to invite you to our house for Thanksgiving, but I think it's much better that you go to Jason's. I think for your trajectory in your quest to get Jason's job, you probably should go to Jason's house for dinner.
Yeah, you know, one day at a time. We're working on it though.
One day at a
That's
time.
true. That is nice of you, Tony. I forgot Quentin's from out of town. So you're not going to see your dad on Thanksgiving?
No, I've been doing a lot of traveling recently. You know, like for the tastylive shows. I'll actually be in Tampa for Dr. Jim's show in a couple of weeks. And so, yeah, just been doing a lot of traveling. And I was like, all right, I just want to take a break. You know, I could go home for like maybe like Christmas time, something like that.
Yeah.
But yeah, I was like, I just want to, you know, chill in Chicago. And then Jason kindly invited me over for Thanksgiving. So shout out to him.
Oh, that was fun.
Very nice. Aww.
I like the sound effects.
They are good. I'll give them that. And timely.
Well, I was going to say, is there a lot of people in the office right now, Quentin?
There's a lot of people in the office. You know, Liz, as I've spoken to you, we would love to see you in the office more. But, you know, there's a good amount of people.
You at dinner, I was like, across 20 people, I was like, Quentin, stop it.
We need more people. You know, it's a fun environment.
So our office now, when we go in is the SIBO.
Yeah.
Live from the SPX.
Yeah,
so we
right,
do come,
yeah.
I do travel downtown. They don't even give us
that's your new home away from home.
They don't even give us lunch.
They don't.
Yes, so you got to come to Tasty for that.
I know. They don't give us lunch at all. But I do thoroughly enjoy it down there. And I was telling Kai, so a lot of the traders, they've gotten a lot more comfortable with Jenny and I. One of them spilled their drink the other day. We had to have like some other guy come film it. People are coming to talk to us now, never about anything on the floor because they're muzzled to say stuff like that. But they've been standing around the side of our show off camera and watching what we're doing, which is awesome. Yes. And so even like Jack Tucker and Blue Wackadoo will post their things on Twitter. And afterwards, I'm like, what did Jack Tucker do today? What did Blue Wackadoo do? I was like, that's Twitter. Hashtag LIZJNY. You can check it out yourself. Like we always do stuff like that to them.
Yeah,
but
getting some trade ideas.
Yeah. It's been pretty cool.
Very cool.
All right, there we go. Well, all right, let me get to some business here. We've got top 20 symbols going through the system and their IVR. At number 1, we've got Tesla, 16, Google, 37, NVIDIA, 25, Meta, 17, IBIT, 74, AMD, 42, Oracle, 95, Goog without the L, 38, PLTR, 21, NVO, 42, GLD, 45, Amazon, 23, MSTR, 47, Apple, 15, Microsoft, 26, TQQQ, 38, SoFi, 32, TLT, 3, OSCR, 23, and Micron, 77.
Good job.
I was literally writing these down because I only don't have 5 of them.
That's all you. Good. You're all the volume on these.
And these are and Tony, I'm sorry because I know you're in Oracle. I don't have AMD, Oracle, NVO, MSTR, or TQQQ. Everything else, I'm in.
Time to
Oracle
get into
finally
those.
Up $2. It's never up.
I didn't mean to rub salt in your wound, but yes.
You're not.
And that, you know, so yeah. Well, Tony, what were you about to say?
No, go ahead, Q. Go ahead.
Okay, because Friday we were cut a little short just because it was so busy. But I wanted to go over some of the like exercise and assignment stuff that we see on the desk. And then when you have spreads, how to close that out. So a lot of the time, if your short option goes in the money and it's getting really close to expiration or the extrinsic value is really dwindling on that short option, sometimes it gets assigned early. So we've seen with a lot of like short put spreads, you'll get assigned on that short put option early or even long put spreads. And then you could get assigned on that short option early. just because it's so far in the money potentially. And then so
But
how
you're
you
seeing that wheel,
close-
and it's randomly. So say you had a 10 lot, you might be assigned on one.
Yes. Yeah, you could get assigned on 1, 5, 6. Yeah, it's all random, like how it goes through the OCC and things like that. And then so what we'll see a lot of times is in smaller accounts or even like medium-sized accounts on a high price underlying, it could cause a margin call getting like long 100 shares, but the risk is still the same on the option because you have that long option covering the shares. So the risk is still the same. It's just the margin requirement for those shares is a lot greater than it is for the option spread. And so how you close out of that is you just right click on the close position. And then usually we'll see customers route it at like the strike price typically, because that's what it'll be trading for, the strike price of the long option. And then it keeps the position defined risk. And then it usually brings back all the buying power associated with it and then covers the margin call as well.
So asking, just you guys don't cover those, right? So it's not like the trade desk is going to close something for someone if they get
sometimes the margin team will, if it's causing like excessive risk or like excessive margin, something like that. But usually
it
if
wouldn't
the
necessarily cause excessive risk, right? If you have the other side of the spread still there, then it's not excessive risk.
Yeah, in
It's
terms of
excessive
like the
capital.
actual buying power on the on the trade, it will cause excessive risk because if there's like a large amount of shares, that could cause a large amount of margin interest as well. And so sometimes we'll close out of those. But if it's just like negative, you know, a small amount compared to the net lick, then we might not touch it, especially if like the option's expiring the next day, you're going to get the same amount of margin because it's charged settlement to settlement always. But yeah, if you ever see yourself in that situation, like I was talking to a customer who had options 60 days out that got assigned early, but they were just so far in the money that the long side couldn't, you know, sell them for the intrinsic value even, just because like there's no participation, there's no volume.
So then you just do it in the open market, right?
Well, so like let's say the long side's trying to close it, then and they can't. So then they just assign the other person the option, the short side the option. And so when that happens, if you're in the position, we typically like to see customers close it out in the open market rather than going through the exercise of their long option, just so they can get the buying power back intraday and then trade with that. But you know, if it doesn't get filled, we can always put the exercise request in for you. Just, you know, give us a call, send us an email, live chat, whatever. Or you can also, just like if the option's expiring the next day, that will automatically exercise for you. But I just want to go over that a little bit more in depth in case like some people still had questions about that.
We talk about it all the time on our show, just because when it happens in our show, we'll show like how your capital changes, your risk doesn't, all that stuff.
Yeah.
We don't get a call from our risk manager, Tony, immediately, and you haven't closed your positions. So we like to handle those live on air because it is very scary when you get the letter being like, you've been assigned, and now your capital is 10,000% more than it was. Or $10,000 more than it was, because you can have a $5 wide spread, and you know, in let's say Lily, it's $1,000 product. It's gonna be a lot of capital. Yeah.
Very nice.
Good job. Good PSA, Quentin.
Yeah.
Good PSA. Public service announcement out of you. Now I have to let you go and bring in this man.
Happy Thanksgiving, Quentin.
Tasty Trade World Headquarters. You're a friend of mine. That's right. Ryan is back. What's up, brother?
I've been waiting for 3 hours, Ryan, for you to sit in this seat.
I'm here now. How are you guys?
Good. It's great to see you. Okay, so I know you are on this show all the time, but you're not on ours that often. What the heck is happening in crypto?
It's nasty out there. So I think there's a couple of things to point to here. One, I think you're still seeing some residual effects from the blow up in terms of just the leverage that was taken out of the system back at the beginning of October. Initially, you kind of look for this quick bounce back. You kind of point or look to point to a catalyst somewhere in the market. And the longer that this has persisted, you know, it has become a little bit more clear that there's a market maker, somebody large on the institutional side here has persistently been selling and likely trying to plug a hole on their balance sheet. It really is the only way to explain the flows that you're seeing, especially out of Binance.
So when you're talking about early October, and we had Dan on, we called him Dan the Crypto Man on in October as well, and he was saying it was somebody that got, because the leverage, was it liquidated? Is that what was happening? Because the people were 50-1, and then they got liquidated, so they were completely wiped out?
Yeah, by some estimations, there's about 20 billion worth, which is just a huge number, 20 billion worth of liquidations that occurred. So in crypto, you can put on perpetual futures that have a lot more leverage than what you might see with a listed contract on, say, the CME, for example, where instead of 3 to 4 times, you might get 20 to 50 times. In some cases, 50 is a little extreme. But there's a lot of leverage that can build up. And given how these are auto-liquidated, how they're managed, and some of the prices that you saw as a result on Binance specifically, it resulted in liquidations that arguably wouldn't have happened otherwise, given the prints that you saw on Binance versus where something's traded on Coinbase and other exchanges. On Binance, you saw tokens lose 80, 90% of their value for a moment in time, which then caused these auto liquidations. And so there was a little bit of back and forth on crypto Twitter, some speculation as to which one of the larger crypto market makers maybe got hurt here. I don't know anything personally, but the flows that you've seen just over the last couple of weeks, and I think you're seeing it maybe is over now, but right about 9:30 Eastern, so I guess right when the market opens, 8:30 Central, our time here, you would see these flows show up almost every single day. And it's tough to point to a macro catalyst or a risk-off headline or a data point or anything. It seems like you've just had pretty persistent selling here as a result of that. We'll see if this bounce holds at all. The ranges have been huge here. You're looking at about a $9,000 to $10,000 move each week in realized terms. $4,000 a day has been your average range in there. It's a little bit less than what the implied volatility is pricing in on a 1 standard deviation. But yeah, that's what I think it is.
So are you buying the dip in these?
I've added a little bit here, just given you don't know when this is going to end and you don't really know who's on the other side of it, but you can see how big this flow is. Again, coming out of Binance, kind of just wondering, okay, does it push it to levels that maybe you're an opportunity? 75 is that big number from April. You got down to 80. Right now, you're roughly down about 30-ish% off the all-time high, which in most markets, that would be, the signal that, okay, you're in a bear market now. Historically, that's been the sort of correction you've seen in Bitcoin. Don't know if it's over. I tend to think.
Hold on a second.
Hold on. Yeah.
You can say it, Liz. Good.
No, go ahead, Tony. I think you're going to say exactly.
So historically, that's the kind of sell-offs you see. So why does it have to have a story about all this other bullshit?
Yeah, I don't think it does. I think if you look at, okay, where did this come from? You were at 126,000 on October 6th, and you're at 86,000 here today. What happened? If there is a catalyst that you can point to, it is that, it was a tweet or whatever it happened on Friday, October 10th, blew up the leverage in the crypto market. I think you're still seeing some of the effects of that. That said, I do think the persistent selling is likely over. But at the same time, you look around and you've got a VIX that spiked and you've got pretty choppy markets there. Vol has spiked. Bond market volatility spiked, but has since come back in a little bit. And so I think you're seeing, just a little bit more of a shaky environment elsewhere as well, where crypto is a high beta commodity that is also viewed as like a tech stock at times. And so an environment where you're starting to see some selling pressure there, it's going to make it tougher for crypto to go up, in my opinion.
What's the volatility in Bitcoin right now?
The vol in Bitcoin right now, the implied vol is 56%, realized on a 30-day basis is 43. ETH is closer to 80. And so when you put context around that through IV rank, you're closer to the top of the range. It's not 100 by any means, but it's more volatile than it's been in quite some time.
And so 30% is a typical typical sell-off.
It's what we've seen historically. Absolutely. You can remain within these kind of more bullish environments where you do get a big ripper and you gain most of it back. You've seen that previously, but yeah, right around 30% is 35% is where you kind of have drawn down before.
This is totally off the subject, but you're going to be a wonderful father because you keep like an even keeled tone about everything that you do. When Tony and I both jump, be like, wait a minute, 30%. And he's like, okay, just calm down.
I guess with this asset, and I appreciate the kind words, but I think, with this, I've just been in it for a long time. You kind of get used to this stuff.
Yeah.
And it sucks if you were, in October, we were talking about October. This is the first month in 6 years where you had a down month. Obviously, we're going to get that at some point. Q4, Q1 have historically been, seasonally decent times. and you haven't seen it. So a lot of people probably, you're up above 100,000, you're chasing this. There's this pretty positive backdrop if you look out 3 to 6 months or so. Like, I don't think this is the end of the thesis for this asset, but you got this big drawdown for one reason or another. And I've just been in this for a long time where you kind of get used to this stuff. But if you're new to it, boom, 30% in a month. Like, what the hell just happened? Well, that's actually how this tiny little thing actually trades. It's not that big, right? But yeah, it doesn't make it feel any better.
The XRP army is mad.
Uh-oh. Yeah, I mean, I think, in my opinion, if you get into an environment where it likely elevates all asset prices, Bitcoin's going to do well. We know at some point, you look at the back and forth with Fed funds probabilities for an interest rate cut here in December. A lot seems to be priced off of that, whether it matters or not. People pay attention to that or try to anchor in it short term. I think you do have an environment where more liquidity is coming. Certainly, if you just look at the QT, the ending of that, it equates to about 40 billion more per month in liquidity that maybe makes its way into the financial system, maybe makes its way into crypto. Should be a more positive environment. Those things are all coming, but it's hard to look at the drawdown in the near term.
So does it have any effect? And once again, please, I'm very ignorant to this, so I apologize. But is there any validity to the narrative that there's so much out there now? Meaning, now there's all the ETFs and there's all the stocks that are buying. Their entire mantra is just to buy more of this. Does that have anything to do with the movement of the price of your cryptos?
Yeah, absolutely. I think when you look at this cycle specifically, who the buyers have been, who's adopting crypto, it's been largely institutional. If you were to search Bitcoin, crypto, run the Google search trends, it's at the lows. I don't really think there's a ton of new retail money in here. I think the ETFs opened up some pipelines for large institutional capital flows. And then on the back of that here, you go back to September, you got these digital asset treasury companies that all just popped up left and right. And so when you look at the flows there, which is really all that matters to this asset, right? What's the intrinsic value? Okay, maybe it's a hedge for inflation over time. Well, inflation's come down a little bit here recently. Maybe it's a store of wealth over time. I mean, it's been a good performing asset, but it needs a buyer like anything else. And so if you go back into September, you're looking at weekly flows out of these digital asset treasury companies of a couple $1 billion every single week. You look at ETF inflows, a couple $1 billion every single week. You had some of the biggest weekly inflows on record. What are you seeing here today? That buying has dried up for now. Digital asset treasury companies are really not all that active. Maybe, that's a sign. Can they continue to raise capital and continue to buy? Only for so long. And then you look at ETF inflows. That can change, but have been pretty bearish here recently. And I think if you just look at the chart, it's pretty nasty. So not surprised to see that drying up. But yeah, Liz, to answer your question, I think that's definitely a factor here. If that's where the big buyer is and they step away, and at the same time, that leverage has been taken out of the system, then it's going to be harder for this to go up like it was in September.
Yeah, it's been fascinating to watch.
Yeah, I think you eventually get a bounce back. I mean, in my opinion, the long-term outlook hasn't changed. The thesis hasn't changed. There's just been a bunch of things that people have probably anchored in terms of potential positive catalysts that played out in the opposite way. Even most recently here, last week, you got any decision or any progress on the Clarity Act, which is the next big market structure bill coming out of the U.S. government that got kicked to next year. So there just hasn't been anything positive recently.
Now, have all of them been moving? I know we use them interchangeably because we say crypto and it means Bitcoin, it means Ethereum, it means XRP, and it means all those little ones. Have any of the little ones kind of been, you know what I mean? That don't, because there's so many now. I mean, there's coins for everything. And I mean, we have so many even on the Tasty site that aren't leveraged and are one for one. Are any of those, is there a point where some of those will start to go away and will start to be in the bigger names only? Or do you think that those are going to continue to be getting added into the system?
Oh, I think when you look at the smaller market cap stuff, you've been in a bear market in some of those tokens for a long time. You look at this cycle, it's largely been Bitcoin, what we call Bitcoin market cap dominance. About 60% of the market is Bitcoin. when you look at market cap, Bitcoin has outperformed just about everything up until recently. You did see the Ethereum treasury companies and some Solana treasury companies come out, and so that maybe boosted it for a second. But Ethereum's certainly seen a worse drawdown here. That said, there have been a couple outliers, and so what's been interesting in terms of the deviation that we've seen, you have Zcash and you have Monero. These are two tokens that the blockchains are privacy focused. And there's been a massive bid in Zcash. It's not on the tastytrade platform, but look to offer this. Neither is Monero. But recently, you've definitely seen outperformance there, both Zcash and Monero. But for the most part, everything is positively correlated. I think last I checked, Bitcoin Cash was an outlier. Don't know.
Really?
I don't know the reason for that, but on a relative basis, that's held up a
So
little
Bitcoin
bit
and Bitcoin
better.
Cash don't trade together?
I mean, most of the time, depending on your time frame, this stuff is all positively correlated, and it's going to be positively correlated with the Nasdaq, the crypto companies themselves. Everything kind of tends to move in that same direction. Long duration assets, they benefit from the same things in the market for the most part. But recently, within this sell-off in the market, you've seen less damage in things like Bitcoin Cash, and you've also seen outperformance in things like these privacy tokens or blockchains such as Zcash and Monero.
Interesting.
So there have been a couple spots to hide out, possibly, but for the most part, it's been pretty bad.
Okay, well, I will stop drilling you with questions because I know you probably had something that you would like to talk about.
Oh, well, we typically just have our one standard deviation moves for the weekly time frame here that we can pop up. Other than that,
Ooh.
yeah.
Okay.
So here are the ranges. All we do here for Bitcoin and ETH, because there's a pretty large options market, we use the implied vol and the spot price, and then for the others, we just use a 30-day realized volatility. So it is certainly a bit elevated here looking back. But for Bitcoin, you've got a range of about 80,000 to 93, ETH 2,500 to 3125, Solana 117, 145, SUI 121 to 155, XRP 187 to 229. What I really think matters here, and I wouldn't try to pick a bottom personally. If you think there's an opportunity, I might add a little bit here and there, but I don't think there's a true reversal in the market until you get a breakdown in equity market volatility. So you need a VIX under 21.5, vol well underneath 117 would be the levels I'd look at there. And then in terms of where does Bitcoin have to go to just retake the trend, you need Bitcoin back up above 103 before anybody would look at this and say, oh, you're back to bullish, where you have a series of higher lows and higher highs, and your volatility and the ranges that are pricing that in, start to look a lot better. Same thing.
You're saying 103, not that 100 level? It's 103 is the...
In terms of how I calculate this statistically, with volatility, I would want to see it back above 103. I mean, I think 100 is obviously the big psychological level, but you need to retake 103 here before I think you can feel very confident in trying to invest in this again. Volatility has to come down, and you need to see price improve for sure. And then on the ETH side, you really want to see this above 3,700. So we're way a ways from that right now.
For Ethereum. Yeah.
Yeah, but again, we've seen this at times. ETH is down 27% in the last month. It can go up 40% in a month. The drawdowns just naturally, psychologically, it's behavioral finance, right? They feel a lot worse than the up moves. But quite often the up moves are where the volatility really is.
Yeah. Yeah. Interesting. I like this chart. I've seen it before, but yes, it's pretty interesting to see. I find that Bitcoin's IVR, this is lower than it has been, isn't it?
Yeah, it popped a little bit more, I think implied, at least in terms of the numbers I take from the Deribit exchange. That was up about 59% last week, so it's come in a little bit, but generally we've been closer to 100. I mean, you can look at the IBIT, IV rank as well as a proxy for that. It just depends on what you're going to look at. But versus the last 6 months, I mean, these are some of the highs in the range have come in here recently.
Does the implied volatility in Bitcoin kind of not correlate with gold, but work like gold, where even if it's at the highs, the IV is higher?
Sometimes.
It's not like a normal, if you look at SPY's at the top of its range, the implied volatility is going to be lower. But if you look at gold, if it's at the top of its range, the implied volatility is higher. Those commodities, when they have the pendulum swinging in both directions if they're moving.
There's a higher frequency of that at times, but it's not like it's 80%. It's definitely above 50. You tend to, historically, at least you've seen this, doesn't mean that it will happen going forward, right? But historically, you have seen a positive correlation between Bitcoin price or crypto market price action and volatility. Certainly when you look at realized volatility, the up moves tend to be a lot larger, but it's not perfectly correlated in that sense. I think that's true, of commodities in general, right? We see that at times in oil, though in recent years, you've had bearish oil activity. You see it in gold at times. And so from a volatility perspective, I think the answer is yes, but recently, this volatility has obviously been driven by the downside price action.
I like it.
Well, my Taiwanese sources say we just got above the 50-day moving average in the market, whatever that means, because we've been doing above it, below it, just about every day. Liz, I'm going to give you your props. Even the S&P's up 80. You win, as foretold. Great job. I know you said 84. It doesn't matter. You're there. As far as I'm concerned, close.
I'll take it.
Yeah, you got to take it. Ryan, great job out of you. Have a very happy Thanksgiving. If I don't get to see you next couple of days, I think I will. But happy Thanksgiving to you and your family. Happy Thanksgiving to everybody else out there if we don't see you guys for the rest of the week. Although I'll be back on tomorrow, and I'll be with Jamal. And then the following day, I will be with...
you got Vecchio. Now, that brings that
yes,
also,
thank you.
I've also brought you back for last call on Tuesday.
Absolutely. I can't wait. So let's do that too. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. Even the S&Ps are about to be up Liz's number, which is 84 in just about 90 seconds. Peace.
It's option jive.
That's right, Liz. We are back, and it is time for an option jive. We're joined by my man Kai. What's up?
Not much. How are you doing on Monday?
It's great to see you, Kai. Thanks for coming and joining us, and I love this segment each week.
Same here, same here. All right.
Wow, Kai, isn't it nice to have Liz on? Because you don't get any of those accolades when it's Nick and I.
I was telling Kai at the
Kind of
break.
true, yeah.
We do this segment. We take pieces of it on the SIBO floor on Tuesdays. And some of the traders, they're afraid to be on camera, by the way, which I think is pretty funny. But they'll stand like just on the peripheral and watch these segments.
That's cool.
That's interesting.
Yeah.
I'll take it as a compliment.
Yeah, for sure.
You should.
Great.
Yep. Very nice.
Ooh. You want to jump into content because we have some information because something interesting happened last week, especially the later half of the week.
Was it a market? Was it a moving market last week, Kai? What happened?
Yeah, moving market for sure. So last week, can we go to first slide?
Sure.
Definitely, we experienced much higher volatility last week, driven by the more broad market pullback rather than any specific events. I was keeping up all the live events every 5 minutes, 2 minutes. Nothing actually happened, but the market actually start to fall down on Thursday and have a huge move on Friday at the same time, right?
Yes.
True.
If you're zero DT traders, I have two interesting slides. You can take a look at it. If you keep mechanical, the results might be different from what you experienced.
So you know what's crazy is the zero DTEs. We've really dug our teeth into this, and I know you guys do the segment after us on I think you do it on Thursdays, right?
Thursday, yeah.
But we've been doing these even in these whippy markets. The regular puts have been okay.
Yeah.
I saw the Tony Rehan's post a weekend. He posted charts for this year's probably zero DTs. The P&L is actually reaching the highest point, but the swing is huge.
Yeah, the swing is
right.
Yeah. So Thursday, which was the pretty interesting day, NVIDIA earnings actually was good, positive, and we had like 1.5% to the upside, and we'd have a huge reverse to the downside, another 3% reversal.
Mm-hmm.
So we ended up like down 1.5%. Nasdaq was even lower.
Yeah.
The last one is a cryptocurrency was getting closer to $80,000. This morning it went back up to 86,000.
88 last night, 86 right now.
Oh, 88? Okay. All right, so we're actually testing the bottom here for the cryptocurrencies. I read some articles about some conspiracy theory behind it, but I don't know what are the real reason. But it looks crazy.
Why does it have to have a reason? This is what I was talking with Liz. Like, why is that? So there was no reason for it to go to 125. Everybody was happy with that because we usually, you usually lean long and then blah, blah, blah. And everybody's, it's all happy. If something goes up, why can't it just be natural movement in markets? I just don't understand.
We've got
got
Ryan Grace coming on. We're going to shake him down for the answers, Tony.
Yeah, well, you can shake him down all you want. He owes me some money because I got hurt on it too. So yeah, you can shake him down for me.
Okay, good.
Yeah. So this upcoming week, we had a really short week. So not too many things happening. Economic news, not too important. So I'll put it here as a holiday. And the Thursday, the equity market closed. Can we go to the next slide? Stock market closed. Bond market. So equity market closed on Thursday. Friday, multiple markets closed early. All Central Standard Time closed at noon. Stock market, bond closed 1. Futures market closed somewhere between 12 and 12:45, depends on the products. Metals and kind of crude oil, those agriculture products that they close at different times, but around 12 to 1.
Yes.
Awesome. Now don't need to get the emails. Everybody knows it's right there for you.
And Tasty Live will be, there will be no Tasty programming on Wednesday after the Tasty Live show. The Liz and Jenny and on will be canceled, and no shows on Friday.
That is correct.
Yeah. So talking about the indices performance last week, we're down 1.9% in S&P 500. NASDAQ leading the all the way to more than 3% to the downside. Russell, which was always underperforming the rest of the indices, actually was fine. Only down 0.8%. I was surprised to see that.
I'm surprised to see that.
Yeah.
Yeah, the NASDAQ was the real big loser, obviously, from here, the real big loser of the week.
Yeah, again, there's no specific economic or political news trigger that sell-off. So this is just some market correction.
I do like that you put the weeks next to each other. It's a good comparison.
It is.
Yeah, we see what happened last week because the comparative feeling.
For sure.
But the Russell, I think, has been down the last 4 weeks in a row.
I think you're right.
Yeah. He actually, on average, has underperformed the other indices over the years. And so that brings up to the next slide. The expected move from the beginning of last week's 1.9%. So fortunately, we're still inside the expected move, but intra-week, it's volatile.
That's correct.
Yeah,
But look at last week's. Your expected move was 1.9%, and it was. The actual move was 1.9%.
Yeah, most of the weeks we actually saw the inside of week. That's one reason is we have elevated VIX. The expect range is almost 2%, and I believe a couple of weeks ago we had only 1%, 1.0%.
Yeah,
for weekly moves. And so because we have slightly higher implied volatility, VIX is 21 right now. So the end of last week's 23.4. So that brings us the 134 in SPX weekly move. That's 2%. What do you think? Because not too many activities we're gonna have to the since Thursday, right? So I personally guess it's going to be inside move.
I don't know. Kai, I was saying this earlier. I think sometimes Thanksgiving, especially when you've got an elevated VIX like this, I think Thanksgiving can be a whippy and choppy. I think I'm going the over.
We could still be inside or at the expected move, like you just showed just a moment ago. I mean, the expected move was 1.9%. We were down 1.9%. I mean, you could still be inside the expected move, but every day when you're trading 0 days is its own day, right? I mean,
correct.
Just being inside the expected move doesn't help you with 0 days when you get, a 4% move, 2% move up, 2% move down, almost intraday.
That's true.
Yeah. But I believe Jacob did a segment comparing the VIX 1D and VIX. If you're looking at intraday, probably VIX 1D can give you more accurate numbers. Because the VIX was up, 1D was up to what, 28% or something?
So the VIX 1D got up to, the high of the VIX 1D last week was 32.84. I happen to have that chart still up from when Tony and I were looking at it.
Okay.
It's high.
It's a lot. It's a lot if you watch the market on Thursday. Okay, so the IVR, if you look at the IVR from the last week, mostly up, but I don't think, even though you see more green arrows, but it doesn't mean the volatility actually increased that lot. I think the meaningful one, actually, one is the equity, the other one's the Bitcoin. They were up pretty significant. IVR of SPX is up to 33%. Bitcoin's
That's a big up move in Bitcoin.
Oh yeah, 94%. The rest, like natural gas is up 10%, but it's not very extremely important for the most traders. So I would say it's kind of mixed, just Bitcoin and the equity market.
Yeah.
Very good.
Okay. So next two slides, we're gonna have some fun. This is the what happened on Thursday. I want to emphasize. So S&P 500 from open to close, we saw a 199 points range, not from high to low, just from open to close. That's the third largest intraday downside move that our database can ever show.
What was the move open to close? It was way bigger than that, wasn't it? And not open to close, high to low, high to low.
High to low is slightly higher because we didn't even have any pullback, like a bounce at the bottom. No, it's a little bit. It's you can see the tip of the high of from that chart candlestick, right? It's slightly higher. So the only 2 days or 2 periods that exceeds this move is one is the big beautiful day this April, and the other one is the beginning of the COVID.
Really?
Yeah, so this is the third largest one. It's understandable because right now the SPX price is much higher than before. So the percentage-wise, I showed the percentage is exactly down 3% from open to close. This is actually probably only not even the top 10. We have a lot of 4% move on daily basis, but from the just actual range, this is the third largest one. But it's still, you feel the pain if you long any delta in that day. It's a pretty huge move.
Oh, this felt worse because your volatility stays high. So even if you had short delta and short calls, it didn't do anything.
Yeah, no, your calls didn't help. Your calls are going to actually help you today on the way up. By being able to hold on to the puts. Your calls won't move as much as you would expect on I don't know what it's going to be, a $4, $3.50 to $4.50 move on SPY.
So unless you were actually just short a product without using options, those didn't help you at all.
That's correct.
Yeah. So next chart's next two charts. These are the one I want to talk about. This is 0DT from last week. So as a standard setup, we use 20 delta and with the $20 wide iron condor. The target is either 25% of max profit or we hold to expiration. We do not manage downside risk. Interestingly, all 5 trades you're able to close as winner before 10:30. So within 3 hours. Yeah. I checked like 10 times for all these data.
Well, no, the only reason, and I know this because I'm on from 10 to 11, and I'm telling you that the market moves. Like something happens during our show. We'll reverse.
That's right, but between 10 and 11, yes, you're right.
10 and 11, and I think this is an opinion, Kai, and maybe you can do some research into this. I think it's when European markets close or those close, and then it shakes out.
When do they close in Chicago time?
10:30.
10:30, okay. Oh, interesting.
Mm-hmm.
Okay, but all these trades.
Maybe 10. I could be wrong. Maybe it's 10 o'clock. Maybe it's not 10:30. But I know. But during our show is when the European markets close.
Okay,
I think I put these trades on 3 or 4 of the times last week, and they all were able to close.
Yep.
Like you said, Kai, before 10, 11 o'clock. So you're right on these.
Yeah, this is very.
They all became losers, and then they all came back to be winners, I believe.
That's what I want to show in the next slide. Yeah. Let's go to the next slide. But if you're slightly greedier, now this is what happened.
We like to call it more aggressive, Kai. Not greedy, more aggressive. Go ahead.
Again, 4 out of 5 trades, you're able to close more than 50% of winners before 12:30. But Thursday, there's no one buying the dip all the way down. So there's
that would have been the max loss. Yeah.
Yeah. It's max loss is 400, more than 400%. Losers if you don't manage them. So that's why we probably should keep mechanical.
Yes.
You know what our studies also show, and like I said, they all build on each other, but it says if you don't get your profit out before noon, close it at noon because it'll be less of a loss.
Yep. Does seem to work that way.
Mm-hmm.
Okay. We have more and more rules to analyze the
rules keep adding up.
Yeah. Next one is the top 5, bottom 5 performers in the S&P 500. Top one is the Ross. That one had earnings on Thursday, up 9%. Lennar, I just want to try to put some name here that we don't trade that often. RCL, up 7%. Decker, 5%. Of Google is 5%. None of these high-tech companies had an up move like Google in the past week, mostly in the red zone. We can see in the bottom.
And Google up another $12. It'll be a new high here in Google if it closes here today.
Really?
Yeah. So Buffett still got it.
AMD got killed last week, leading the worst performers, down 15%. IVR is 48. So you can see how the IVR actually elevated after the earnings.
Yeah.
So all the high tech companies reaching 50% IVR. It's a great time for traders, as you and Nick talked about on Friday.
Yep, you're 100% correct. AMD on the radar.
Okay. Yeah. So the rest of the companies are here. If we look at the next slide, is earnings. Earnings, interestingly, none of these had more than double-digit move the day after earnings. None of these, even including NVIDIA or anyone here. Even the Ross had a 9% weekly move. He only up like 6 or 7% after earnings.
Yeah, they all kind of stayed within their expected move.
Yeah.
Sure.
Yeah. Looking at all the underlines that already announced the earnings for this season, the Q3, we had roughly 200 to 300 companies announced last week. The performance is slightly worse than the week before. So right now we have 47% winners. The average return is down 0.3%. This is kind of on the negative zone.
Yeah, I mean, 53-47, that's definitely getting more negative territory.
Yeah, mostly we see 49-51 or 51, very close to 50-50. 47 is kind of negative
especially for earnings, right? They usually skew them to the upside because, companies want to kind of underserve you in the beginning so they can
that's true, yeah.
When their earnings come out. I mean, that's typically how they do it. So having this kind of thing would make it a lot more weaker than some would expect, I think.
It's still close to 50-50, but this from like the 3,000 companies, this is kind of toward the worst performance week. The last one, we don't have too many earnings companies announcing earnings. Probably the interesting one is after today, Zoom. All of these are before Wednesday. Baba, definitely the one that's most people traded. Best Buy. And what else?
Is Nick still in Neo? Because I remember this was, I'm not blaming Nick by any stretch because I'm out of it a long time ago. But one time we were all sitting at the table and we're like, okay, if you had to buy one stock right now, what would it be? And Nick's pick was Neo.
Really?
This was a while ago.
I don't see a position. We don't have a position in Neo.
Okay. And then Neo went straight down, and now I think it's risen up a little bit.
Just a little bit. It's still like a $6-7, right?
Yeah.
6-7.
Yeah.
Yeah. So any other underline that interests you? You're probably gonna put a trade in. John Deere used to be the kicker of this season.
So as far as, I've been kind of skewing, instead of these earnings trades, I've been doing the 0 to SPX. I'd rather do those. Then I'm in, I'm out. There's no risk overnight. I don't care what the market does.
Yeah, we've been doing the same.
Yeah.
We've been kind of hanging out in the 0-day world too, as opposed to looking at earnings. But we will today for Zoom, Agila. We'll see.
Cool.
Awesome, man. Good job out of you, Kai. Great timing. Even the S&P is hanging out up 39, NASDAQ up 224, Russell up 6, and the Dow up 98. We'll take a quick 90-second break and come back. We got the opening bell next. Liz, get prepared. We'll be back in 90 seconds.
Happy Thanksgiving, Kai.
Happy Thanksgiving.
Liz, my friend, we are back, and I get to say it with him on the show. Nothing says Monday like this, man. That's right, Dr. Jim, the scan options.
Can I get the applause? Who's got the sound effects?
Yes.
Who's got the sound effects?
Let's go. Man, I'm excited.
What's up, good doctor?
Man, what's going on? All I know is, come on, man, you got to be sending, if you're going to be showing off the guns like that, I need a company-wide email. Like I need time to prepare. Like I can't just be walking into that sight unseen. Come on, man. Come on.
Tony, you should have seen him on the road in Austin. I was like, are you flexing over there?
Well, you know,
just
it's
saying.
it's an old man that's like a shining star. Like you ever see like a star in the galaxy?
Yeah, that's like about to die and like be
before
gone
it burns
forever.
out,
Yeah.
it has its brightest moments. Yeah,
Yeah.
Right.
That's good. No, that's good. That's good. Speaking of
where I am in
brightest
my life.
moments, hey, so my fence is done. It's done. It's over.
Wow.
What kind of fence?
Johnny,
Okay.
it's over.
What kind of fence? What kind of material? I need to know the deets.
I won't. We've been talking about this for weeks. So
Just
to
give me-
save
just
all the
give me the-
viewers, I won't go over every detail. But it's a wood fence.
Wood
It
fence,
was
okay.
destroyed last year in the hurricane.
Got it.
I finally got it repaired. I had a good friend of mine do it. He's done an amazing job. Tony's been ragging on him for weeks, but I've had neighbors come by and say, "Dude, your fence looks amazing." And I'm like, "I know it does," because my guy
I'm calling total BS.
No,
on-
wait a minute. My question is, do you have the kids out there painting the fence like they did in
No, we got to stain it like you can't stain it right away. Oh, you mean like a wax on, wax off deal?
Yes, that's what you got to do. Paint the fence.
Yeah.
First they sand the fence.
Yeah,
and then they paint the fence. You got.
No, we gotta wait. Apparently, you have to wait like 2 months. You gotta wait for like the pre-treatment or whatever to come off of it. So anyway, I'm in high spirits, man. Fences done. We got Thanksgiving this week, guys. So what's the Thanksgiving? What's the power move on Thursday? Like what are you guys going for? Like what have you been thinking about? Like give me the dish that gets you excited.
Oh, you wear your fat pants and then you eat it all. That's fair, right? All of it.
For me, it's not having to clean up as much stuff as I have to. That's why I like to order all my food and not make it. I think cleaning up for Thanksgiving is probably the least thankful job that anybody can have.
If you were in the room, I'd give you a hug, Tony, because I actually feel your pain. I don't cook anything, so I have to clean everything at my aunt's. And
Yep. It's horrible.
Yeah, that's brutal. That's a brutal trade for you. Like you're on the wrong side of that trade, I think.
I am.
Yeah.
I agree.
Yeah.
Yeah, because when you're cooking, like you're excited, you even get the taste test, you get to do all these things. But then when it's over and everybody's cashed out, it's like you've got to step up and clean it up. That's brutal.
Yeah.
Yep. It certainly is.
Yeah.
Not
All right,
good.
Dr. Jim, what about you?
It's got to be, yeah. So, I mean, it's such a tough call for me because, like, growing up in Detroit, like, obviously the dish in the North is, and even I'm sure it's the same in Chicago, is stuffing, right? Like, it's stuffing. It's 100% stuffing.
Is it dressing or is it stuffing? Do you
Well,
know?
that's what I'm getting to. In the North, it's stuffing. But you go south of the Mason-Dixon line, it's dressing now. Like, they don't know anything about any stuffing.
No, but
So
I
had
learned
to.
if it's in the bird, it's stuffing. If it's out of the bird, it's dressing.
It's more complicated than that. Like, it's way more complicated than that. And so, down in Memphis, like I had to adopt and I had to adapt to a Southern way of life. And so, honestly, now I never thought I would say this, but I think I'm actually a dressing guy now. Because it's different. You've got cornbread as a base, not regular bread. Like, there's a lot of differences.
All right. I like it all. So whatever's in front of me is like, it's like if they're in your hands, they're real kind of thing. If it's in front of you, it's good.
Remember when I had a tight line crossed.
And then my mother-in-law makes a chocolate pie that I'm very excited about. And it is like, pecan's always been number one for me. Well, pumpkin was number one for me for a long time, then pecan. But she makes a chocolate pie. Guys, it's pretty solid.
Yeah,
All right. Well, I'm with you there. I got a chocolate peanut butter coming. I got a chocolate pecan coming. I got a regular pecan coming.
Where'd you order those from?
Jimmy Bread, thank you for asking. Algonquin, Illinois. That's right. If you haven't gotten your pies or your bread for your Thanksgiving, the preferred baker at Tasty Live is Jimmy Bread in Algonquin, Illinois.
Do they deliver?
No.
Nice.
You're not supposed to ask the questions that are a downtrodden question. You're supposed to be, ooh, is it good? Oh, I'm going to say, yes, the best chocolate peanut butter pie I've ever had, Liz.
Sorry, wrong question. I didn't get those questions in advance.
Oh, that's too funny. All right, you guys want to do some finance?
Sure.
Man, let's do it. I need y'all's help this morning because I don't even know the answer to this. Payment for order flow, or maybe I do know the answer and I'm sandbagging a little bit. Payment for order flow, is it good or is it bad?
Oof.
All right, so yeah, that's right. Today we're going for it, man. We're going for the jugular.
All
where
right.
we are going to address the elephant in the room.
I'm going
Payment
good.
for order flow.
So I saw the movie Wicked. I saw the movie Wicked this weekend, and I'm saying I'm going for good. I say payment order flow is for the good.
I'm like, how is she going to tie Wicked into payment for order flow? I'm waiting for this.
She did it, though. She did it.
So I'm curious. So you guys, I'm curious. So obviously payment for order flow, which we're going to talk all about it for the next couple of minutes and you know, whatever. But back in the pits, like before like the electronic age of trading, was something like payment for order flow, was that even a thing? Did that even exist?
Back in the day, no, but you had a designated primary market maker, then they had to take on all the risk. So there, before payment for order flow, it was DPMs, meaning that somebody had to do it, right? So that's kind of, I think then the jump was payment for order flow. Am I off base here, Tony?
Yeah, we never had payment for order flow, and then when payment for order flow came in, it was originally the burden of whoever the lead market maker firm was in
Designated primary market maker. That's correct.
Right. Whoever each one was in the pit. And then from there, they started spreading the cost to everybody that was in there. I'm doing a 0 day at 5:05 here on the / ES options instead of the SPX options, just because I was on them. So you'll see that come through on the follow page.
Good job. I'm waiting until 9:05. You'll see mine come through on the follow page too.
Understood. Makes sense. So they spread the wealth. So we never had it. We thought it was going to ruin business for sure, and take a lot of business from one exchange, which was really the lead exchange, was the CBOE.
CBOE, Tony.
Yeah, the CBOE, sorry. It used to formerly known as the CBOE. We thought that was going to be the death of it, and it really was the life of it. So we were completely wrong.
What's the life of it? And little fun fact, Dr. Jim, and I don't know if you know this, I was on the payment for order flow committee on the CBOE floor. So
I didn't know that.
I was in the meetings when it was developed. I was in the room where it happened. How about that?
Wow.
Do you like that? Do you like that Hamilton reference? I was in the room where it happened. Now I had no input because I was very young and green at the time, but I was in the room when they were talking about it. And it did come from a good place of good intentions. And it did do a good job.
Yeah, it did. It definitely did.
Okay.
Yeah.
That's really that is an interesting little fun fact. Wow, that's really cool.
Fun fact. That's why.
Well, I knew it was a big deal that I knew and was friends with Liz Deerking. But now it's a whole different. You're on PFOF committees and stuff. I'm like, wow, that's crazy, man.
Oh yeah,
this is crazy stuff, Tony.
Yeah. Who knew, right? Who knew?
I mean,
It's why when I saw this, I opened it up and closed it. I was like, I don't need to read this. I was in the room where it happened.
That's pretty cool. All right, John, hit us on the next slide. So let's get going. Let's talk about this. Let's see if we can figure this out.
Ready?
So at one time or another, active trading always finds its way into the crosshairs of the financial space, where the usual suspects, such as high-frequency traders or payment for order flow, are often painted as enemies to the retail trader. But when it comes to what actually happens, is payment for order flow actually a net negative for the average trader? So I'm curious, why do you guys think these two things in particular continually get, they get a lot of negative press, and they're oftentimes kind of hung out as the bad guy that's essentially stealing all the money from all the retail traders? Like, why do you think, like, it's almost like clockwork? Every few years it'll pop up. Why do you think that's the case?
You're killing me with this because I'm going to give you another Wicked reference. It's exactly, this is exactly what happened with Elphaba. She's misunderstood. And once you're misunderstood, from the outward appearance, it looks like it's going to be negative. So people can hang their hat on it being a negative, angry animal. There, that's it. I'm done. I'm going to mic drop right now.
So do you kind of feel like it's almost like once it's been painted and colored a certain way, it's hard to shake that association?
100%. And I think it's also misunderstood where people are like, payment for order flow, high frequency traders, you put those together and we can make a lot of people mad.
Well, you know what? It breeds competition is what it does. And I
but
think
it doesn't say that. It's kind of like the Tower of Terror is called the Tower of Terror. If you call it the Fluffy Bunny Ride, people would get on it.
Right. Fluffy bunny ride.
There you go.
I'm going to try that tonight. Honey, Fluffy bunny ride is ready
Omaha.
tonight. Not
Yeah,
the
let's get back. Let's get back to the task at hand. Okay. So very, very good points. Fluffy bunny rides aside. So okay, so let's understand. Like, I think you guys are absolutely 100% correct. You know, I think that the misunderstanding is kind of the key. And this morning we're going to unpack basically, you know, what happens because of this competition that I think is going to allow everyone out there to better understand what this actually means. So John, go ahead and hit us on the next slide. So it all begins with the bid-ask spread differential, right? Which obviously you guys made your career on the bid-ask spread. You guys are very well versed on the bid-ask spread. And I think a lot of people that have been trading for a while are also familiar with the bid-ask spread. But we have to make sure that we understand exactly what it means and kind of the different mechanics that are happening. So you have a bid and you have an ask. So one thing that we need to understand is that market makers, liquidity providers that are out there, what you all did for the beginning parts of your careers, is you are standing ready. Right, you will buy on the bid and sell on the ask or offer all day long. So you have
but they were our markets. We got to make them. It wasn't somebody else's.
Right.
Of course. Yes, of course. Of course. So if you're buying on the bid and selling on the offer, that means that the counterparty, so the retail trader, in this instance, it's not all retail flow, of course, but for this example, we're going to assume that it is. That means that I'm selling bids and I'm buying offers. I'm buying on the ask. And so obviously, that's how y'all make your money. Like, you're going to make the spread. We're going to pay the spread. That's how the game is structured. That's how the game is played. And so when the quote is posted, the transactions can happen immediately, if I'm a retail trader and I'm willing to sell on the bid and buy on the offer. Okay. But generally speaking, we have this mid price, right? This mid price between the bid and the offer, the bid and the ask. And we're always trying to sell slightly above the bid price and buy slightly below the bid price. And what we're going to see on the very next slide is it is because of things like high frequency trading. It is because of things like payment for order flow that we are actually able to do that more often and more consistently. Again, you can sell on the bid and buy on the offer all day long if you want to. That's not a problem. And the market makers and liquidity providers are always standing ready to take the other side of your trade. But if you want to get some type of price improvement, there has to be someone that's willing to improve that price on the other side. And what we're going to see on the very next slide is it really is the PFOF that allows that to happen a lot more often and a lot more consistently.
PFOF. Never heard that.
I'm just trying to be included in the conversation with you. You were in the PFOF community.
Fluffy bunny.
PFOF. Never heard the word PFOF in my life. I learned there's something new. I like it. I'm gonna run with it.
Yeah, I mean, it's just I don't have time to say the whole thing. PFOF. I don't have time to say payment for order flow. Payment for order flow. We gotta go PFOF. Okay.
I like it. PFOF.
So next slide there, John. Okay, so now, right, you've got PFOF in the house. So now I've got payment for order flow. So what does that actually mean? That means that the market makers pay the brokers for priority in participating in retail order flow, right? So that is what it literally means. The market makers, the liquidity providers are saying, hey, we will pay you if you give us priority for the order flow that comes from your broker. Okay, when this happens, we have to understand a couple of things. Number one, there are lots of different liquidity providers and lots of different market makers that are out there. And what they are doing, retail order flow, or any order flow for that matter, it's incredibly valuable to them. It is priceless to them because that's how they make their money, right? And so they are willing to pay. And of course, it's going to be a competition of sorts in terms of, you have all these different market makers and all these different liquidity providers all kind of fighting for the retail traders' order flow. And here's one thing that I think a lot of people, and especially the financial press, financial media, whatever, they don't quite understand. If you are a market maker and or liquidity provider, and you are willing to improve the retail trader's price the most, you will get top priority in the queue for PFOF. Is that correct?
Yeah.
Yes.
Yeah, that's called getting competition. Otherwise, if there wasn't, remember when we had no payment for order flow, people like Liz and I'll throw you in there, Liz, would make the widest possible market we could make so that we could get the largest edge on the entry of the trade, because the only thing that we can control really is the entry of the trade. We didn't know if we were buying or selling. Remember, when you're improving a market, you're improving it on both sides. You have no idea what the person is going to do. So it really made markets tighter and tighter and tighter, which was the best thing for retail investors.
For customers, not for us, but for customers. And that's why this was met with such disdain, I should say, from the traders, because it made it easier for your self-directed retail investors. Your, as we would say, your grandma in Virginia that's buying and selling options.
That's correct.
Yeah, exactly. Exactly. And so that's why, again, I think the understanding is so important, because if you look at the slide here, so again, I've got my bid-ask spread differential, right? If I'm a retail trader and I end up selling above the bid by a few cents or whatever the case may be, then, you know, the market maker is buying from me at that price. Well, then he can then flip around, or she can then flip around and sell it at a slightly higher price. And so there's still a spread to be made. Now, again, because of the payment for order flow, because of the competition, that difference is shrinking, right? The difference between essentially where the market maker is transacting, they're not buying bids and selling offers anymore. They're buying slightly above the bid and selling slightly below the offer. And again, if another liquidity provider comes in and is willing to do that at an even better price for the retail trader, now it shrinks even more.
That's correct.
So think about this from the vantage point of us, from the vantage point of the retail trading space. Man, I want more high-frequency traders. I want more payment for order flow, because all that's going to do is it's going to drive the spreads even lower, even lower, even lower. And that's, you know, part of the decimalization, part of going from what? Eighths to what? To teenies?
16.
Right? I mean, I remember the teenies, right? Teenies. Yeah, there you go.
Yes, so that's true, and I'm glad you're actually bringing I'm glad you're bringing awareness to this right now, Jim.
That's what we do, Liz. That's what we try to do, you know.
Yeah, because it's something that I actually understand, but you can't. It's almost as if you could write this on the wall, because the PFOF, people do think that it's negative for them, that people are getting paid to take the other side, but in actuality, it's helping them, because your mom and pops, your retail investors, aren't doing the hundreds of thousands of orders that the market makers are.
Well, see, that's another thing that's always interesting to me. And I can actually speak from, so this was back, so I left academia in, let me think, 2016, which is obviously when I came and joined Tastytrade at the time, tastylive now, of course. So I was in academia from 2009 to 2016. And so this came up at times. And I mean, hey, guys have to understand something about academia. It's the polar opposite of what you guys experienced. Like you guys experienced, you're on the floor, you're doing the trading. You know, you feel like there's you know, there's an edge, there's a big advantage to being actively engaged in the market. Generally speaking, financial academia is on the complete other side of that argument, saying the markets are totally efficient. You're never going to beat, you know, the overall market. You're wasting your time. You're wasting your money. You're wasting your resources. All those kinds of things. So when something like PFOF would come up, the general prevailing thought was always all of these, you know, Ken Griffiths and whoever else is, you know, Citadels of the world, they're stealing money. They're stealing money out of your pocket.
I understand. What was the logic? I mean, I understand I understand I don't understand their thought process to it. I understand what they're saying, the fear of it. Like, I get it. I'm not disputing that. What was the logic chain that got to that decision, got to that?
Yeah.
Well, honestly, you look at somebody's wealth, right? Like you look at Ken Griffith, he's extraordinarily wealthy. How do you think he got it? By taking from us. It's illogical, but that's the thought process.
Well,
exactly.
Then you hide everywhere.
No. This is a great question. The thought process was like all the PFOF, all the whatever, like that's skimming pennies off the top. The thought process was that's taking pennies off of the actual share price. That was the thought process. So that at the end, so that at the end of the day, right? And this is how kind of, you know, this is one of those things where, you know, like I always joke that, like, you know, not to go down the rabbit hole too much, but like, you know, when I started teaching in 2000, I started teaching in 2009. I was straight out of my doctoral program. I thought I knew everything. I didn't know a single thing. I didn't know anything, right? And now I've been with you all for 10 years. It's like, man, if I ever went back to the classroom, I feel like I could do so much a much better job because I actually understand how things work and whatever. You have to understand that a lot of individuals in academia are in the same boat that I'm in, to where they've read all the books, they understand all the theories, they understand all the whatevers, but they've never actually been in it as a practitioner. And so because of that, they don't quite understand certain things that you really have to have a practitioner's grasp on. And so the idea was, even as a long-term investor where I'm just buying and holding, it's hurting me. It's taking intrinsic value out of, the system and out of the value of the company. And at the time, I didn't know enough to really combat it. But now I know clearly that's completely wrong because you're not even looking at it in the right way.
That's good. Glad you've come to our side. I'm looking at the SPY right now. We're talking about just the stock price. You're getting a single penny wide markets. That's the greatest thing ever for somebody. Did it take it off? Did it take it off? Maybe it's a realistic market. 11 million shares have traded penny wide.
You now, as a retail investor, you went from not knowing what an options value is to having the capabilities of what market makers could do because you have a penny wide market, and you're basically, that market will, if volatility changes and the market doesn't move, that option will move down a penny or up a penny just on the model itself. So you now have everything that a market maker has at its disposal. Now all you need is a strategy to fit your assumption. And that's really what we try to do here on Tasty Live, is teach you the strategy to fit your assumption, assuming that prices are perfect. And I don't know how you can say that they're not.
Well, that just it is. I think payment for order flow. There is no gaming of the system. There is no the word used to be arbitrage. The arbitrage is like there's something that's undervalued or overvalued. That's not the case anymore. And I think payment PFOF. I'm gonna go with your word. PFOF is one of those things that actually brought those values closer together. So you can trust the market because it is true.
Yep.
Competition is always good. Competition is always good. Like for the consumer, it's not going to be good for the producer. It's not going to be good for that side of the equation, but for the consumer, competition is always good.
Hey, we're on the other side. We're on the other side now, Jim.
Yeah, exactly. Well, right, exactly. And that's why when you have these, and this is a totally separate thing, but when you have all these different like monopolies that are kind of structured in the economy in a certain way, that's why you'll always notice that the monopolistic actors, they're going to fight to the death to protect that monopoly because they know that once you open the floodgates to competition, it's over. It's over, Johnny. Like it's done. And so that's essentially what's happened with PFOF.
Yeah.
So, all right, so John, hit us here on the next slide. So who wins in the end? Well, with PFOF in place, market makers and liquidity providers are highly incentivized to compete against one another for retail order flow. And thus, it is active retail traders as a whole who stand to benefit the most from this competition for order flow, as they ultimately end up with more favorable pricing on their entries and their exits. And again, Liz, I'm glad you brought it up because, I mean, you're 1 penny wide on SPY. You're 1 penny wide on SPY. And this was back when you guys were ripping everybody off for quarters and teenies. Like, look at how far we've come. And then Tony hit him again in the evening with his jeans on the back of his trunk. Like, you think he was selling those at a fair price? There's no chance. There's no chance.
Very true, Dr. Jim. Very, very, very true.
I'm saying we've come a long way, man. We've come a long way.
I like this segment. We haven't talked about payment for order flow in a long time.
I think you mean PFOF.
PFOF.
Yeah.
Fluffy bunny, yes.
All right, let's get him a few takeaways. All right, let's do it. Over the last decade or so, high-frequency trading and PFOF are certainly buzzwords that are often painted as enemies to the retail trader. But in the end, what actually happens is they provide significantly more liquidity to the marketplace, which ultimately ends up being a huge win for anyone actively engaged with the markets, just like we all are every single day.
I'm going to pin this segment and send it to the PFOF haters.
Man, dude, no, send it to your old PFOF colleagues in the committee.
Oh, yeah.
Be like, hey, we're still doing it. We're trying to make a change. There you go.
We're trying to help here. This is what we're doing.
Yeah.
25 years later, we're finally explaining it to the people.
Yeah, right. We finally understand it. Yeah.
Good job out of you, Dr. Jim. As always, have a wonderful Thanksgiving. Get yourself a haircut while you're there so you can be presentable for the family. Liz, we're going to take a quick 90-second break. We're going to let Dr. Jim go. I think he has an appointment for a haircut in an hour. We're going to take a quick 90-second break.
Oh, look at that, man. Look at that.
It's impressive.
It's something.
Fluffy bunny. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. What comes up next, Liz?
I don't know.
A market measure. That's right. A market measure.
I'm a guest.
We're talking about buying protection. I have 5 children. You know what my stance on that is. We'll be back.
Wow. I'm out of here. Get me out of here. John, get me out of here.
Take a quick break. Peace. We are back, and my furry friend is back too. There she is.
What is the cat's name?
Sandra Day O'Connor.
Sandra Day O'Connor. This is the cutest thing I've ever seen.
Yeah.
It almost looks fake, Tony.
What's that?
So pretty. It almost looks fake, like you're making this up.
She's a
Oh, a big yawn.
she's chewing up the scene here a little bit. I could reach her, but she bites and she's got claws and stuff.
Bites?
And I'm scared. Well, I mean, we got a couple of dogs. Come on, get down. Come on, get down. It's embarrassing. Anyway, even how about if I do this? Maybe if I switch the screen, she'll go away. Even the S&Ps are up almost 60 handles, 58 and change. NASDAQ up 411. Russell up 25. The Russell's caught itself a bid. Remember, the Russell was the weakest of the group earlier today. Yeah. It's now a leader with the NASDAQ. NASDAQ is the leader of the group, up 412. The Dow really is the lagger of the group. Now, the Dow has been, following the market, obviously, like everything else does. But the Dow has kind of bid the last couple of days, really a rotation, maybe out of those kind of Dow-ish stocks back into the NASDAQ stocks. I think that's just a story that you can paint for a day. I think it's got a lot of BS behind it. Volatility in by 95 cents. Really never got over 21. Traded close to 21.20, like 85, I think I saw, and never got any higher than that. Volatility has been high. It's still high. The world is your oyster. Bonds are up 10 ticks. Bitcoin's up almost 2,000 to 87. It got up to 88.7. You can see here Bitcoin's been on a slide. I know we'll have Ryan coming in later today. We'll talk about that. Ethereum on a percentage basis is actually up more than Bitcoin. Ethereum up $98, a 3.5% move. Oil's down 14 cents. And gold is up $8 to about as high as it's been on the day, 41.25. Let's take a look at some of the small movers here, keeping us higher. AVGO caught a bid up 22. You can see it traded down to 347, up to 368. It's about $6 off of its highs. Tesla up $21. Google up almost $18. App up $14. Meta finally catching a bid, up 14. Coin up 11 with Bitcoin higher. AMD up $7. You even got the Babas of the world higher too. That's all I've got for you right now. On the downside of the Buckers, it's Costco down $7 and change. I think, Liz, Costco is down $7 because they're calling it they're calling it the Liz factor. Would you like to explain?
Because of my refund.
Yes.
This is so embarrassing, but everything we do on this show is realistic. Yes, I got $800 back from Costco for a Prosecco recall.
Wow.
Okay. I have to defend myself. I'm going to give a brief synopsis. So I got a letter in the mail saying that any Prosecco that I purchased for a 9-month period I need to make that glaringly obvious. I don't have to return the product, but if I bring this in, they will look up how many bottles I have purchased in the last 9 months. I walked in there. I go, I'm going to give you this.
It's because the bottles were exploding or something? Like they were
exploding. And I did have a couple
combustion? Yeah.
I had a couple explode, but I thought it was because they were in my garage because I was buying so many of them. I had a 300-person party here. I've been to tailgates. I buy this.
You had a person party and I didn't get the nod, man. I must have been.
You'll be invited to Annabelle's, but JD's was too big. The teenagers were a little bit too much for me. But
all right, that's fair.
So I went in there and he's like, "Oh, it's not bad. It's only 6." I was like, he's like, it's only 6 bottles. I go, I've never purchased an individual bottle in my life. Those are all cases. So I got $800 back from Costco in Prosecco purchases.
And Costco is feeling the pain, down $6 and change, even on a day when the rest of the market's catching itself a bid.
You would think that the marketing department would be like, let's not send that letter to that lady. Let's send it to everybody else. It was impressive.
Good.
My husband was like, you've got to be kidding me. There's no way they're going to refund you for all these. I was like, that's what the letter says. I'm going.
Too funny. You might have to post that letter on Twitter or something like that so everybody can.
They took it.
Oh, they took it. Oh.
They took it. So I can't go back in and do it again. They took the letter from me.
Good one. See that? Yeah. All right. Well, let's do this market measure. You want to, and then we can bring in Q and Ryan.
Yes. So I'm not saying let's fire through this market measure, but let's get this market measure because I need Ryan in here. I need to get a handle on what the heck cryptocurrencies are doing.
Talking about the cost of buying protection.
Tony, I want you to keep it.
Yeah, no, I'm not saying nothing. Not saying nothing. I said my piece.
All right, good. All right. Next slide. Okay, I'm going to read to you, and you're going to give me the.
Sure.
Okay. With volatility rising into the holiday season and the VIX recently closing above 26, its highest level since April, concerns have grown across the markets. Many bullish traders are considered hedging their long portfolios by purchasing protection. Okay?
Yeah. Yeah, I mean, listen, I think it's an accurate statement.
Since selling calls provides only limited downside defense, many traders turn to stronger hedging methods like buying puts. However, because puts often come with a high price tag, it's worth testing whether this type of protection is truly justified over the long run. I think that's the key sentence here is over the long run, because I do think occasionally, I mean, guilty as charged, I'll go buy puts if I'm like going on vacation or if I'm not going to look at the markets or if I'm doing something like that. But it's not a consistent thing that I do.
And let's be completely frank here. Like, if you're looking at, and I think they're really looking at here, like more of a classic strategy where you buy stock, sell call. I mean, you sell call for $5. The expected move is $10. It does protect you for 50% of the stock's move. But the stock can go down $20, right? Yeah. And the call doesn't help you. You know what I mean? Like, or if the stock goes down quickly after you purchase it and sell the call doesn't help you. It has a lot of time factor to it. So a completely accurate statement here.
Well, and I mean, you and I alluded to this earlier today, and I think it is worth talking about again, is the fact that when the vol spikes, your calls aren't doing much for you anyway, because they're not. If you've sold calls and you get a violent down move and a huge up move in volatility, those calls are not giving you any protection.
That's correct.
Okay, perfect. Next. Oh, there we go. Here's a little chart. Long puts can perform well during market pullbacks. For example, a long SPY 16 delta put could have hedged roughly 4,000 during the correction this past April if the timing was perfect.
Yeah, again, I think they're going to find here that, timing your entry for this is going to be paramount. Not the strategy itself. Everybody knows if you buy puts and we go down quickly, they work. I mean, especially in the environment that we've had over the last couple of days. If you bought calls and we went straight up, they help a lot. But your timing has to be perfect. And I think retail investors have a very hard time with the timing. I know I do.
Right. And the timing has to be perfect, but it's only there for, correct. Retail, it's not something you can always put on. If I was always going to be doing this, I would say cut back your position.
Yeah, exactly. Cut back your buy-in of the stock and the sell of the call or the strategy that you're using, reduce the size. I would agree with you.
Yeah. I mean, if you're going to consistently hedge it with the same hedge, then just cut back your position. But it's pretty interesting to see. I think these have their time and their place, though.
Yep.
All right. Number 4. Consistently timing market corrections is extremely difficult. Buying puts repeatedly results in poor long-term performances. Okay, good. I'm glad they're monetarily saying what Tony and I actually just said.
Yep.
Okay, so your largest
nothing to add there.
But that's the largest profit on the put in a down move, right? If you bought the 16 delta put, your largest profit was $5,000 from the put.
That's correct.
Okay.
That's correct.
So nothing to add. Number 5. Most traders won't hold puts until expiration. Taking profits during market downturns can help improve results. In this test, long puts were closed at either a 500% profit target or at 21 DTE. Okay.
Right now, 500 sounds like a lot, but if you're buying a put at 2 and selling it at 10, you know what I mean? Like, where are you? You got to kind of put a number on it.
No, I get it. They have to give something in order to test it.
Yeah. I mean, you can't say a 50-cent profit. I mean, you're not going to buy something as a hedge to try to, make 50 cents or $1 on it. It really is protection, right? So you got to have some sort of larger number.
But I would I'm glad they did this because it's only protection if you're willing to close it. Otherwise, you've just wasted the money.
Yeah, well, that's the other quandary. Like, when do you close your quote protection? It's very hard.
Yes. All right, number 6. Managing early does improve performance metrics, but only modestly. Okay, so if you manage early, meaning 500% or 21 days.
Mm-hmm. Look at the success rate, 17%, but you do have that large profit of $4,000 on the overall, like your best case scenario. Your average P&L down $27 is really what you should be looking at here. And then the median P&L, it just doesn't seem to work.
No, it doesn't. And this is just the protection, not with the S&P, right? Like it's not with the core.
That's
so
correct.
You're just looking at the hedge.
That's correct.
Number 7. Next, we examine a full married put portfolio, long 100 shares of stock paired with one long 16 delta put.
Okay, this is buying that downside protection that everybody always looks at, right? And always wants to have that outlier move, so to speak, right?
And in this study, were they using 45 days till expiration? Probably, right?
So.
Okay, let's go to the next one. Okay, over the long term, the unmanaged married put underperformed a simple buy and hold SPY portfolio. Well, that tracks. I mean,
well, this is what everybody always says, so why don't I just buy and hold the market as opposed to trying to do anything exotic? And you're right. You probably would do. I mean, you obviously would do better over time here. I mean, we're going back from 2013 up to 2025, and all things being equal here, you really did have a market a position that mirrored the market, just didn't do as well. So you might as well ride out the wave.
You might as well ride out the wave. And that's kind of what I was saying is if you're putting the hedge on, you're just paying for it. Just decrease your portfolio by X amount of percent, because that's the same thing. That's how much.
That's right. You're exactly right.
Yeah.
Right. Buying 100 shares of stock, make it 90 shares of stock or something like that. I'm just throwing out a number.
But I think the zero DTEs have changed it, where a lot of people can buy puts for small amounts, or the expirations that are each day for small amounts of money. You can actually buy small amounts.
Sure. Now you're getting into more of I mean, I guess you would call it like a complex option strategy, which is not that complex. Like you're buying front month puts and maybe even selling back month puts against the stock you have, or if you're looking at it, going from a very short period of time, or maybe a news driven period of time. You're picking and choosing, though. Like
that's picking and choosing. If you say, oh, something's going to come out, or I'm worried about it through this announcement, you can. That's become less expensive over the years.
Correct.
Yeah. All right. Number 9, please. Even when managed at 21 DTE or closed at 500% profit target, this hedged position still failed to outperform buy and hold SPY. Management improved results slightly, but not enough to overcome the cost of protection.
I mean, I think it basically says the whole thing here. When you look at the charts, they're almost two, one and the same. I mean, really, what you're talking about is your timing has to be perfect, and even when you time it perfectly, you don't get paid. There are so many other things to do in the market. When you've got volatility that's going from 17% to 23%, and markets that are moving 100 handles a day, 200 intraday, there's so many other things to do than really actually kind of worry about this. So if you really want to be quote unquote long the market, if your friends and neighbors really want to be long the market, you tell them, you know what, you're right. All you really have to do, if you want to participate on the upside, you think the market is going to continue going higher, is buy SPY. It's what we talk about all the time here on the show. You want to participate and mirror the market, buy SPY. You want to get dynamic and have your money use leverage, because most people don't have multi-million-dollar portfolios. They have significantly less. I mean, I think the average portfolio is somewhere around $50,000. You've got to make that act like a $500,000 portfolio, and the only way you can do that is by providing the leverage that trading options allows you to do, and that's what we try to show you on the show.
I agree. And kind of to Dr. Jim's, I'm looking at the SPY markets right now. You can just buy that if that's what you're willing to do, but it's penny-wide markets. Yep. There's no gaming in the system. All right, let's see the takeaways.
Yep.
So the takeaways: hedging only works when timed well, which most traders can't do consistently. Agreed. Mm-hmm. Paying for ongoing protection usually hurts long-term performance more than it helps. And then managing long puts actively improves results a bit, but not enough to make the strategy profitable.
Yep.
He's pretty good.
Yeah, very nice, very nice, very good. Good job out of you. Good job out of the market. It all comes down to timing, Liz. Really, that's what it comes down to. And the time right now is for us to get Quentin and then Ryan in here too. So let's take a quick 90-second break. Let's take a look at the market real quick before we do that. Even the S&P is up 61 handles. They've really had about a 15-point range up to around here and down to up around 45 on the E-mini S&Ps. NASDAQ up 400 and change. That's your big leader. The Russell is the surprising one. That was the one that was one of the weakest in the group. It's come back to be average with the rest of the E-mini S&Ps up 60 on a percentage basis. The Dow is your weakest, up 120 and change. Volatility continues to contract down $1.10 to 2040. Bonds are up 11. Gold continued its rally up $9, just a skosh off of its highs. It seems like the market's kind of settled in here a little bit. We'll find out in about 90 seconds what my man Quentin thinks from the trade desk, and then Ryan will be back in 90 seconds with Tasty Live.
Can't wait.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
What's up, everyone? Welcome back to the show. This is Options Trading Concepts Live. My name is Mike. I'm here with Jamal. Hey. And of course, the one and only Ryan Grace from the Tasty Crypto team. And it is a green Monday. I don't know if this surprises anyone. Maybe it does, maybe not. But seeing the E-minis up 80, NASDAQ up over 500, Bitcoin catching a bid up 2,600 in the futures, and volatility getting hammered here. VIX futures down to 20, solid contango in the VIX futures, and the VIX itself down to 21, down almost 10% after reaching a high last week of around 28, we'll call it. So seeing that vol pop and the vol crush, we'll see if it holds, but definitely an interesting rally to start the week here.
One time my kid came home, my oldest kid, he's still my kid, he's 22, and there was no Diet Coke, and we got some delivered. And he said, peace is restored. That's exactly what this is. Peace has been restored. Peace is restored.
Feels like it. I think, we've fallen from the recent highs in the E-minis, had some choppy days. Last week we had that big intraday range, but 2 green days in a row and seeing a little bit of a vol crush here. We'll see if we can sustain it and just get back to a level where everything's forgotten. What do you think?
I mean, this is exactly what you want to see heading into a shortened week, honestly. I mean, you hope that this continues to tomorrow and even the shortened Wednesday trading day. No, Wednesday's not shortened. I'm tripping. But then there's Friday, right? Wednesday's not shortened. It's a regular day, I think.
Yeah,
and then
Thursdays.
Yes, futures-wise. Obviously options aren't open on Thursday, and then Friday, I think, is shortened is how it goes. Correct me if I'm wrong. But this is exactly what you want to see on a shortened week like this, and you hope it can continue after some real volatile days like we talked about.
Mm-hmm. But yeah, we've seen much more volatility in the crypto space, so nice to have Ryan on. We'll talk through all of the updates here and see if there's some opportunities. Especially, I'm interested most in the potential shift in Bitcoin dominance relative to other products. I mean, it's been a bearish movement, of course, from the recent highs down to where we're at now, just under 90K. But yeah, we can dive in and see what we've got. But what is your elevator pitch for what's going on right now?
Well, I think outside of crypto, I mean, I'm with you, Jamal. You want to see volatility continue to break down. That'd be great if that happens in the shortened holiday week here. I'm not really feeling comfortable until we've got the VIX in the teens, vol breaks down, bond market volatility as well, maybe a little bit of weakness in the dollar too. Everything's been working against us recently, assuming we're bullish. It's been working against us. It's been working for you for sure if you've been bearish. But I think, a little bit of concern here over what kind of economic environment you're in for really the month of December into the end of the year. Could you get a little bit of a slowdown? We've pointed to kind of markets that have gone up almost every single day. Some of the momentum for sure has been taken out of that. You'd love to see that momentum regained. So I think you've got a little bit of a growth scare here. You've got an unwind of some pretty kind of heavy positions. And then when you do get that spike in volatility, naturally you're going to see degrossing and you're going to see some of those positions get taken down. So I think that's what you're seeing separately from crypto. Crypto is not going to be immune to any of that. It's going to obviously trade lower in that environment. But I think you have this added pressure from going back to October, the blow up. You got the Trump tweet about tariffs in China. You had the just massive blow up in leverage positions in crypto. So you saw about $20 billion worth of liquidations. You've seen very persistent selling pressure almost every day if you go back last couple of weeks. I think that likely ends, but I don't know if you recover the trend anytime soon. You'd really need to see Bitcoin back above 103. So I think you've got, again, that added pressure given what happened in the crypto market specifically. And then you have certainly a choppy environment here when we look outside of crypto. And, well, we need to see that change until I'm comfortable again personally.
Mm-hmm. Yeah, speaking of the market sentiment around interest rates, that kind of just speaks to that as a whole. We've had the probability of getting another 25 basis point cut in December just like completely flip over the last week. Last week we were at 60%. We were staying where we're at 37540. Now we have almost an 80% chance that we will get a 25 basis point cut in December, and it's just like every day it feels like it's shifting around. Speaking to the volatility of the bond markets, and yeah, I think the market itself is still pretty uncertain. I mean, we're getting the green day today, but like Ryan said, nothing is clear as a low VIX environment, which we're not in just yet.
Yeah, it's going to take a little bit more to convince people that this is here to stay, I think, especially after what we've seen in the last couple of weeks.
Yeah, and we were just talking before the show started, MicroStrategy. This was everyone's, volatility exposure to crypto or Bitcoin specifically, sub 200 now. But this is one of those times where it feels like there's obviously some bearish sentiment here, but this is feels like the bottom of the barrel where nobody wants this, nobody's talking about it. And if you do think that it's going to recover, Bitcoin specifically, back to 100K plus, this product and other products that are surrounding the price of Bitcoin could be a beneficiary of that. But yeah, it's been wild. It's been wild.
Yeah. That's why we put on the Delta Buster next week. I feel like I probably should have put on it in February, though. I don't know if I have enough time on it. I just did it in Jan. We'll see.
Yeah, I mean, lots of volatility still, lots of potential. But why don't we pop over to the slides, and we'll give you guys a full rundown. If you want to join us on the YouTube channel, we're streaming live there. Just pop over to Tasty Live. You'll see this video streaming. You can throw in your trade ideas, questions along the right-hand side chat, and we'll get to them shortly here. But yeah, what's going on from a short-term, mid-term, long-term basis in the crypto space, Ryan?
Yeah, so right now, I mean, short term, no doubt about it, very bearish out there. The momentum indicators that we track are flashing red. That's not a good sign, obviously. Said we would, highlight this when it happens. If it happens, it happened. Weekly price momentum in here is not at all positive. I don't really think that you look to chase a bottom here. This could go 75, it could go 70, it was 80, it's back to 88-ish. It hasn't been able to push above 88. I want to see the structure change before I rush back in here. I mean, sure, you might be able to buy 80 and you get that move to 90. It's a good trade. But if you're looking at this from the long-term perspective where you're comfortable buying dips, this isn't a dip that I'm all that comfortable in buying just yet. There are some signs possibly of some exhaustion. You have, if you use technicals, you have an RSI that is as oversold as it really has been in quite a few years. You've seen persistent selling pressure almost every single day last week. At some point that kind of exhausts itself as well. You look at perpetual futures and funding rates can go positive at a certain point where you're getting paid to go long, right? And that kind of helps to clear the market. But when I look at price momentum here, this is not a bullish environment anymore. It changed very quickly. We were at 126,000 all-time high on October 6th. By October 10th, $20 billion in leveraged positions blew up. And I think we are just starting to see, again, the outcome from that. And it has to work itself out in the market. You really need to see Bitcoin back above 100 for sure, back above 103 specifically to retake that bullish trend for price momentum to shift back into bullish territory. 3,600 for ETH. We're far away from that right now, as you guys can see. So I just want to call that out. This can go down 30% in a month. It can go up 40% in a month. We've seen that as well. Right now, the path of least resistance seems to be lower. And I think that, you have to really take this market into consideration. You've got to take the VIX and what we're seeing in equities into consideration. You're seeing similar signs there as well, at least when I look at the momentum and we look at exponential moving averages. First time since February, and that February, March, April period, we had a very bearish environment until we ultimately bottomed in equities. You have those same signs in equities right now. So I'm not overly bullish. It could change in a week. It could change in a month. It could happen pretty quickly. But right now, it's not really something that I'm rushing in to buy necessarily here with Bitcoin. So when we look at where we are, double digit declines here just across most of the time frames that we track. The outlier is Bitcoin Cash. Don't know what the reason for that is, but that has been a place to hide out. Relative outperformance in XRP, but that's also down a bunch. So yeah, I wish there was something better to say, guys, but it's pretty bearish out there right now.
Did I see something about a Doge ETF?
There are a few different ETFs that are making their way through the approval process or have been launched recently. We also got a little bit more clarity around ETH staking rewards being passed on to investors. But none of that seems to matter right now. What matters is, at least in the short term, is this price action. That said, a lot of intermediate term bullish catalysts out there. Unfortunately, any decision or any progress really that would be made around the Clarity Act has been pretty much kicked into next year. You don't have really a very liquid environment right now, but that could change as well. We know that, as Mike, you mentioned, kind of have seen this kind of back and forth in terms of what the market's pricing in around a rate cut in December. I think you're probably going to get a rate cut in December, but you got the FOMC minutes last week, and there was just seemed to be a lot of uncertainty and a lot of indecision at times. And so without that clarity, the market, again, the path of least resistance has been lower here. That said, let's take a look at the weekly expected moves on the next slide so you get a sense of, okay, what's the market pricing in? Potentially, you could definitely see underneath 80 in Bitcoin, 2,500 in ETH, Solana 117 to 145, SUI 121 to 155, and these are numbers where if you look at SUI or XRP, XRP was $3, SUI was $4 or $5 not too long ago. So huge drawdowns here. At some point, you're going to have a huge rally, but again, has been trading pretty weak. Yeah. Volatility, kind of towards the top of the range, has come off of where it was, but yeah, more volatile environment.
Yeah, when you have a chart that looks like Bitcoin futures, whatever you're looking at, you're going to see some heightened implied volatility, but it is interesting to see sub 80K. I don't know when the last time we saw that priced in as a possibility, but I think you also should realize that, we've seen this come down, but if and when you get the reversal, it could be very quick, and that could also increase implied volatility like we've seen before, where when Bitcoin markets are ripping higher, implied volatility of those markets could also expand, and especially when you think of like the call skew. I think that's another interesting thing to check out too, is if you're trying to inventory delta in a long-term perspective, that call skew with the price so suppressed here is likely not as elevated as when you were getting that move up to 100K and 120, 125. So could be an opportunity there. And again, it just goes hand in hand with the fact that not many people are interested in this product at this point, but there will be a point where that changes.
Yeah, I don't at all think the long-term thesis has changed here, and I don't mean to be all doom and gloom. The best approach to this is probably just a dollar cost average, and that would have you buying it in the 70s, and it actually has you unfortunately buying it in the the hundreds as well, closer to the top. But if you have a long-term perspective and you think that this goes higher than 126, which is the all-time high, which I do, I think there's some factors that can get you there over time. You're probably not all that concerned. You probably look at this as an opportunity. If you're looking for that quick trade where previously in some environments, I buy the dip, it just rips higher the next day, the next week. I don't think that's the environment you're in, at least right now. That could change by the end of this week. But today, when I look at the markets, this is not a dip that I'm rushing to buy because I think I'm going to pick up, 10, 20 grand or 10%, as you could easily in a more bullish market, where I would rather see us retake that 100 level, hold above it. Sentiment shift for sure. Fear and greed index, if you look at coinmarketcap.com, it's at like 11. I don't know if it's been lower in history, even around FTX. So I'd like to see that change. And then I'd buy those dips. I'd rather buy 110 down to 100, knowing that we're stair-stepping higher versus this has just been one way to the downside.
Yeah.
No, I think the doom and gloom is appropriate. Given the environment that we're in, you're right. That's exactly the environment that we're in. And I think it's appropriate that we talk about things as they're happening, not like what we think should be going on, et cetera, right? And so I think the biggest thing for me, like the biggest green shoots you can find, I've been like saying this for weeks, it's clear the tie between Bitcoin and the markets. And of course, Bitcoin's a little bit more volatile than the market. So the move has been a little bit harsher than it has in stocks, but stocks have experienced the same thing. So it's true. Like, I mean, yeah, I came on and I said, oh, peace is restored for the most part because markets seemingly are higher. I mean, they are higher and seemingly a lot of the worries are over, but they still exist there, right? Like people are still talking about the high evaluations in AI and what's going on with the FOMC potential chance of a cut, like you mentioned, top of the show, Mikey. And so these are things that still exist that are overhangs on all of these markets. And so there's an overhang on Bitcoin right now. But the one thing that I find encouraging is that it seems to be mirroring what stocks are doing. So if you want to find any green shoots, that's the thing.
Yeah, and as always, just keeping an eye on these implied moves, expected ranges. If you're trying to get in at the lower bound, for example, or if you're trying to get in now and you see that we bounced to 93K or above, then we know that we are outside of that weekly expected range. So always understanding the weekly ranges kind of helps you put a ballpark range on what you could expect if you are engaging in these markets to the upside or downside.
Yeah, if we jump to the next slide, guys, relative performance here, maybe one thing to call out, Solana has been a little bit stronger recently. You have a couple Solana ETFs that have seen pretty positive inflows, buck the trend, I suppose. When you look at ETF outflows in the crypto space, you look at the digital asset treasury company buying that's kind of dried up, at least versus the couple $1 billion a week that we were seeing previously. You know, that slowed down quite a bit. Inflows into ETFs have slowed down as well. But when you look at Solana inflows, those have been positive. You've seen some weekly outperformance when I look at Solana versus Bitcoin, as well as Solana versus ETH. I think that story remains intact. You know, I think that's the other thing too. It's like we get very caught up in the short term, but with any of this, these are long duration assets. You typically want to have a longer term time horizon. I think Solana at 130 is very interesting. It could still go to 100. But I think on the upside, you have a lot more room to go. That said, it's pretty painful and it can be it can move pretty quickly here in the short term, and so that's why I think you want to remain patient. But that, again, looking at the chart here, Solana has been a slight small outperformer versus Bitcoin and ETH.
It's a trip as I'm pulling up Solana and looking at all these different ETFs. It's the usual players, right? Grayscale, ProShares, et cetera, Fidelity. God, I used to talk to Fidelity's crowd a whole lot. I cannot believe that they have a Solana ETF. I just absolutely cannot believe it.
Right. So on that, to that point, it's pretty bullish, I think.
Yeah. Bet your ass
at least long term. But yeah, there will be an environment where these things go straight up along with the rest of the equity market. And I think you're in the opposite of that kind of macro environment, at least very short term here. As we head into the end of the year, which is not what people want to see. They want to see that Santa Claus rally. They want to see the volatility continue to decline. You could get that, right? Maybe we get a breakdown in the VIX underneath, let's say, 2019 by the end of this week. That would get me to think a lot differently. Today, I'm using this bounce to lighten up on my positions. Where last week, you try to sell those puts, maybe buy some NASDAQ futures, whatever it might be. You had big dips, right? Now you got that bounce. Trend hasn't changed. That's the way that I'm trading it.
Yeah, and I think, even in these downside moves, you have these days where you get the bounce, and then it's just a matter of what you decide to do with it. But to your point, there hasn't really been kind of a floor that's been held, which is can be scary. But at the same time, if you're dollar cost averaging, maybe it's an opportunity for you. But yeah, I mean, the markets are going to be volatile. I think the general market outside of the crypto space will continue to be volatile as long as we see volatility in the indecision of what we're going to get in December and how these numbers start to play out that have been delayed for so long with government shutdown. I think that plays a role too. But yeah, definitely what we've said this whole year, where Bitcoin tends to and will be typically more volatile than the equity space, we're seeing that in real time.
So one more slide for you guys here, cross-asset correlations. It's all kind of the same thing. It has been for some time. These aren't extremely strong positive correlations. They have come down. You were at like 0.7, 70, 75% on a short-term basis when we were looking at the S&P and the NASDAQ just a couple of weeks ago. So that's come in a little bit, but still, when I look at these different time frames, we use a 30-day, 90-day, relatively strong positive correlation between the NASDAQ, between the S&P, and Bitcoin. Even though you've had pretty persistent dollar strength here since really the beginning of October, less of a daily correlation in terms of returns between the dollar and gold. You might expect to see a stronger inverse correlation there, but less of a correlation if we use the ETF UUP. That said, it has been an environment where dollar's been strengthening, so it makes it a little bit harder for, I think, commodities priced in dollars like crypto to go up. Stronger positive correlation with gold. Short term, I think a lot of that's just going to be based on, kind of the back and forth with the repricing of interest rate probabilities. And then obviously, as we've seen for some time, when the VIX explodes, you get that drawdown in risk assets, and Bitcoin's not immune to that. So just a quick look at how these have been trading alongside other areas of the market.
I'm glad this shows me I'm not crazy, because I know there's been this correlation between gold and Bitcoin and the S&P 500 for sure, and Qs. I'm curious, how have you noticed like the dollar correlation change over time? Has there been much of one with Bitcoin or what?
There really hasn't been. In terms of day-to-day, if we look at a rolling 90-day, 30-day period, there hasn't been much of a correlation with the dollar. But I think what you're seeing is you've had these points in time where the dollar, if you get the dollar right, you can kind of get a lot of other things right. It is the king. It's probably the thing that matters the most in macro is that base currency. And so when you have these periods where there's a bit of dollar strength, it's more of the reason behind that. And I think when you look at the lack of liquidity here recently, the concerns over slowdown in terms of economic growth, which up to this point seemed pretty robust. I think it still is positive, generally speaking, but we have seen some of that inflation data roll over as well. So if you get into that period where growth is down, inflation is down, there's just not a lot that works, right? Gold tends to do okay. Dollar does well. Long end of the yield curve does well in terms of bonds. Prices outperform, yields move lower as the market starts to anticipate. What's the Fed's reaction going to be to a slowdown here if that's what materializes? And I don't think we have enough data yet in the slowdown or shutdown, threw a wrench into the gears there. But that's what the market, I think, is starting to wrestle with. And so in those periods where you have a stronger dollar, even though you don't have that kind of daily correlation with price returns, with Bitcoin or the dollar, I think it reflects an environment that does make it tougher for crypto to go up. Versus what would you want to see, right? The other end of that spectrum, if you're just super bullish and you believe that this is a debasement hedge and there's an inflation component to it, well, you'd want to see a very weak dollar. You'd want to see low interest rates. And I think that would benefit asset prices on the margin, specifically those that, don't have cash flows, right? And that could be non-profitable, unprofitable tech companies. It could be something like cryptocurrency.
Yeah, it's something interesting, I think, to watch, because I just, across times, things do change. There was one point in time where there was no way you could get a positive gold move with the dollar being up, and then we've seen that move around more recently. And I'm talking across years. And then similar deal, there was no way you'd ever see the gold correlation and the S&P 500 that correlated positively. You just wouldn't see it. And so I'm just curious over time, I feel like those are things that are interesting to me to watch for, to see how these correlations sort of adjust over time in different, like you said, in different environments, in different government environments, in different, economic environments, et cetera. So.
Yeah, and I think when you have true fear come back into the equity markets, it's not too surprising to see the 15-day super positive correlation between Bitcoin and gold, simply because that narrative of the digital gold aspect kind of comes back into play, at least in that specific lens. But yeah, always good to look at, always good to understand how these things should move, given the strong positive and negative correlations that we see here. And that's another nice thing. A lot of these figures are above 50, below 50, so you have a nice strong correlation. Where the correlation in the teens or closer to zero, it's less of a clear relationship in those environments. Lovely. Well, thank you for the analysis. I believe that was the last slide, right?
That is the last slide. I don't know what the takeaway here is, guys. Aside from, I'll put it this way: I'm bullish crypto. Very, very bullish crypto, and I think you have to have a time frame for any of this stuff as well, whether it's it's crypto, it's AI, it's tech, it's these long duration assets, right? I'm bullish out to 2030. There's going to be periods where it's a little bit more challenging, but I think the trend is generally up and to the right. In terms of adoption, use cases, revenue on chain, et cetera. Like, I think assets tend to do well. But right now, for this week, for this month, possibly into the end of the year, not what I want to see, but I'm going to let the price action dictate what I do next. And I'm just not in any rush to buy 88,000 after it came down from 100. Let's kind of wait and see if the knife bounces around on the floor a little bit before we try to catch it. Maybe that 80,000 print is the bottom. But I'm fine with, let's give it a couple more days. Let's see if the VIX breaks down. Let's see if the NASDAQ can kind of retake this 2,500 level, which is key. Let's see if the S&P trades a little bit better. Because if it's just a dead cat bounce and you see some selling pressure as a result of this, simply because people are just lightening up on their positions, then, you get information in that price action.
Yeah, and I think that's a good call out. I mean, nothing, even though we're seeing green today, nothing has materially changed over the weekend, really, and volatility is still staying bid. So I think that's a huge call out too. Like, we say this all the time. If we're seeing market sell-offs that are not paired with volatility spikes, I'm more inclined to buy the dip in that environment, where here you're getting a nice big rally in the NASDAQ and E-minis and crypto's catching a bid, but you're not seeing volatility collapse all that much. Like, yes, you're getting a vol collapse today, but it's not substantial. Like, if the VIX futures were down 3-4 points and we saw a change of over 10% and the VIX futures were back into the teens and the VIX is back into the teens, like, that would be different. But we're still seeing volatility stay a little bit bid here. And if you just look at the last couple of days, our average is well above 20. And in those environments, like, yes, you can see it stay elevated, and then over time we come back down into the low teens. But this thing can change very quickly. The sentiment can change very quickly, and it often does. To Ryan's point, I think it would behoove us to just keep our hands at bay for a little bit and see if we get a continuation. And even if you do, you'll have the opportunity. Like, crypto has fallen, like you said, from 125, 100 back down to the 80s. If it chops around here and then we start to see volatility get into the teens, the E-minis and NASDAQ continue to rally, Bitcoin continue to rally, like, that's a better signal to get in if you're trying to get in from a short-term trade at the very least.
Mm-hmm.
How have the liquidity pools been working the last couple of weeks? We talked about that, I want to say like maybe a month ago, but have you seen higher yields from that? Have you seen more? Of course, it's been more volatile from the upper and lower bounds standpoint.
Yeah, so I'll have to take a look here and see if the yields in terms of the APRs or APYs have moved higher. My pools are maybe no surprise out of range, right, on the downside. So those positions now look like what happens when you have a strangle on and you breach that short put, right? In this case, it's all ETH. So ETH USDC liquidity pool before within the range, generating some yield, feeling good. Now we're just 100% long ETH. And the reason why I haven't rebalanced is because I don't want to take that loss. I'm still bullish. I think you could recover. Some of my pools don't need that much more to go to get back in range, but I don't want to, sell out of that ETH at these lows just to rebalance and then see it move higher. I'd rather just hold 100% ETH at these prices and, I guess wait patiently if that's what it's going to take.
Yeah, that makes sense. But still interesting to see the engagement through a market like this for sure. Popping over to the YouTube chat now. Let's see if we have any trade ideas here. Poor man's covered call in IBIT. I mean, yeah, it's definitely an interesting thought. I mean, IV rank at 70. Implied volatility itself is in the 60s, mid 60s. So still pretty healthy there in terms of implied volatility, in terms of reducing cost basis. But a poor man's covered call. And this I want to see, like, what does the skew look like right now in IBIT? So we're sitting at 50. If we just look at like the 40-60 strangle, yeah, it's kind of come out a little bit. I mean, the 60 strike trading for just over $1. The put is trading for 95 cents. So it's not a substantial call skew that we're seeing in IBIT, at least right now. which is interesting. That's in the January cycle, but if we go further out, if we go to January of next year and do the same exercise, what does this look like? Okay, now you're seeing the call skew in here for a number of reasons, but this makes more sense that you would see call skew stay in these longer term periods. But still, 50 price point is the lowest we've seen since April, honestly. So what does a performance cover call look like? Usually something like an at the money, slightly in the money option that you're buying to inventory delta, and then you're selling something against it in Jan or December, whatever you decide. But yeah, you can throw this on and reduce basis over the next couple of months here. And you'll always have the opportunity to buy this back, roll it out, and move it up, stuff like that to give yourself more offensive firepower. But yeah, I still have this December strangle. The 65. The market's really trying to kill this beautiful year-long trade we have. But still a great position. I mean, it's up $1,500 through this whole year, and the fact that we're at 50 now. And when I rolled into this position, we were around 65. We were just below 65, and I rolled into a 65 straddle. But still collected so much premium over the year that, yes, this move isn't fun, but we're still net profitable because we've cushioned with extrinsic value collection throughout the entire year. So we're still looking good there, but just a wild sell-off we've seen. And yeah, I think if you're looking for trying to buy the dip here, defined risk makes a lot of sense, and inventorying delta with something like a performance covered call, I think makes a lot of sense too.
I love these year-long strangles that you do. I kind of like those, man. I'm like I said, I'm starting to try to employ some of those myself, and I bet is one of them. As of now, it's not a strangle; it's the 55 straddle. But it's just going to be. I'm looking forward to the year-long challenge. It's fun.
Yeah, I mean, IBIT's it's a digestible price point.
Yeah.
You're basically trading Bitcoin price action. You're getting that super liquid markets here, and yeah, over the course of a year. Like, this is a great example. We had a really good trading range where it didn't really move too much, but I was still able to pick up a ton of premium. Started with $500, got it to $3,000 throughout the year on one contract. So
it just speaks to how much options decay, like in general. I mean, sure, they move around a lot. We have big moves. Things happen. Some, explode, but a lot of times they mostly decay.
Yeah. Do you have any positions on IBIT?
I do, yeah. I have some synthetics, short puts and long calls in there, long call spreads. A lot of short puts in ETH-A. I don't own calls in there, but I own shares. If we get a pop, I'll probably sell some calls against that position just to reduce the cost basis a little bit. So yeah, I have for my portfolio, a good percentage of it is in these assets. I'm very bullish. But, I'm not adding to it here today. Comfortable with the size. I think you've had opportunities to sell some downside volatility, and you're clearly seeing those puts get a little bit cheaper today. But, yeah, I've got kind of max position at this point.
Yeah. But yeah, ETH, another great product if you're trying to trade ETH, but still seeing a lot of call skew here, especially as you go further out in time. But this one's interesting because you're seeing a little bit more call skew in ETH-A in January of this year relative to IBIT. Markets are a little bit wider, so that could contribute to it, but about $1.50 on the upside, 3 points out of the money, 90 cents, 95 cents. If you were to take the mid price there on the 18 strike, 3 points out of the money. So yeah, lots of ideas. You can really trade it however you want. That's a nice thing about these lower priced products that track these things. But yeah, the world is our oyster here at these lower price points. ETH up 7% today. Yeah, big move there. What do you just attribute to this as like general volatility? We've seen ETH outperform Bitcoin before, but just general volatility. Are you seeing anything under the hood?
No, I think that's all it is. You're looking at an asset that went down 30% in a month, maybe more at the lows. You look at the average true range, which I think is something we probably don't talk about as much, but like, what is this actually doing, right? If I just pull up my chart here, if I look at the last 21 days, on average, ETH has moved $220 a day. These are levels that we haven't really been at in some time. These are big moves. Realized volatility. We might look at implied, and okay, it's come off a little bit here. It's no longer the 100 IV rank, but realized vol is pretty high. The actual movement that you're getting here in Bitcoin has been about $10,000 a week. So when you're moving like that, and it's been one way to the downside, not at all surprised to see that you get a decent bounce, or with ETH, you're up 7%, 5%, whatever it is, because we were going down 8%, 9% a day.
Yeah, makes total sense. And this kind of exercise too, I think, is super interesting when you look at gold into that big rally up to 400. Like, look at this massive spike in ATR. And that goes to show when volatility wasn't increasing, implied volatility wasn't increasing nearly at the rate that gold was rallying. I think those are interesting points in time to call out and maybe avoid selling upside risk undefined. And yeah, we're staying with pretty much defined risk in there anyways. But when you have this increase, I think it gives you the ability to kind of shift your strategy a bit, especially if you're trying to buy dips, like Ryan said, like maybe not throwing on short puts here, but if you're trying to do something smaller, diagonal spread, calendar spread, it's much more digestible. Any other crypto?
What?
Any other crypto questions here? I'm long ETH, liking this pop. Yep. Someone has AIBS, AI bubble syndrome in the chat. Okay.
Yeah, yes.
Where are you guys there? Because you have kind of two competing camps, right? We'll put Michael Burry of Big Short.
It's funny, I was going to mention something about that.
In one camp, and then, I don't know, you look at the other side of that, you have the Sam Altmans of the world, and not that he's an investor necessarily in the same way that Michael Burry is running a hedge fund, but you have calls for this $1 trillion valuation for something like OpenAI, which I think is a bit stretched. But where are you guys?
I think over time we'll see these stocks and companies continue to move up and to the right. But I think we're at an interesting point in time. It reminds me of the pot stock craze, where you had all these new tickers coming to the surface, and some of them ripped and then dropped out. Like some of these companies we don't even talk about or see anymore. I think you'll see the same thing, whether that's through companies failing or getting acquired by other larger players. But I think we're at an interesting time right now where there are a lot of fringe names that are ebbing and flowing. But I think if you're sticking to your macro players, if you have a longer term sentiment, I think that's an easier bet to make than something like OpenAI reaching a valuation that's pretty frothy.
Yeah, and I think that's the interesting thing about it. At the end of the day, we're talking about valuations, right? Like based off of things that are actually being created and real stuff. I mean, it is. I mean, again, when you talk about Michael Burry, this dude obviously he's looking to make a big move. He's looking to make a profit off a position off a big move. And who knows I don't know his real position again, but I just assume he probably has some puts with a little bit of stock as well, so he doesn't completely blow out if these things just keep going up. And that's the difference, right? That's what you can do with a hedge fund versus those of us who mostly trade in just literally one direction for the most part. So I think this AI narrative, I think this is somewhat of a small reckoning, if you will, for the time being. I think a lot of the companies are going to get their ducks in a row. And I think we're going to see a little bit more up and to the right until the next reason to question what the valuations are in a lot of these companies. That's how I feel.
Yeah, and I think another thing that we don't talk about nearly enough is just the fact that like this will continue to happen, and it's really a concentration thing. Like you have 7 companies that make up more than 50% of the queues. It's like, okay, if that's the case and we see a macro sell-off in the queues, we're going to be able to create this narrative around something like AI.
Yeah.
You know, like if
Yeah,
we
right.
had a more balanced ecosystem of products and sector diversification, then it's more of like, what's going on with the actual economy versus this one thing that we're kind of creating this narrative for.
That's the thing. That's what is going on with this economy right now. I don't know about you guys, but every time I look around, it's AI or it's something related to payments or something like that, right? I mean, that's literally our everyday life. 50 years ago, it was IBM and whatever else was concentrated in the Dow. And so there's a reason why these things are the concentration. I always say, like, whether it's the Dow or the S&P, it's a reflection. The biggest names are a reflection of what we use or what we want to be in our society every day in life. There's a reason. So it's so funny that there's all this challenge of, well, maybe it's too far and it's too fast. But yet everything I see is like AI. You can use AI for your groceries. You can AI for Walmart or whatever. Like, it's like, that's what's going on right now. So that's what's so funny about all of this, you know? So you can argue whether it's gone too far, too fast, or the valuation of like OpenAI is too high. Like, you can definitely argue that. And I think that's what we're seeing. For those people who say it's like the .com situation, well, even with that, last I know, that was the big change. And from there forward, everybody used email and everybody went to websites, et cetera. And that's what we're seeing change right now. It's not going to be about websites sooner or later. It will be. I mean, we talked about this, the amount of people that use ChatGPT for their search engine, like, that's changing. It's literally changing as we sit here and speak. So I think to say like certain stocks are going to zero is stupid. Certain big stocks, certain other stocks, like you mentioned, certain smaller ones, definitely will be going to zero at some point in time. I don't know what those names will be. We'll find out. But I think that's what we're figuring out right now.
Yeah, and I know it's hard to imagine the markets continuing to just rip higher, but at the same time, 50 years ago, you could get an ice cream cone for like 10 cents. Like, that's always going to be the case. We're always going to look back 20 years and be like, wow, you remember when you could go to McDonald's and get the dollar menu for an actual dollar?
Yeah.
Now it's like $3 for anything on there. Like, that's just the way of the world. So if we assume that inflation is going to increase asset prices relative to the strength of the dollar, then you must also assume that the price of these products, regardless of what you're looking at, will increase over time as well. And that's especially true for something that's finite, like Bitcoin. So yes, there will be periods of volatility that are going to hurt you, but at the same time, in the long run, there's a real case for all asset prices increasing, the value of the dollar today being weaker than the value of the dollar yesterday, and like that's what we're in. And I think if you get rid of the noise and you position yourself for that, in 20 years, obviously that's a long time, but let's even say 5 years. Like, there's also plenty of data that says when the E-minis and NASDAQ are down 5 or 10%, if you look 1 month, 3 months, 6 months, a year out, like, it's almost always higher. So take it with a grain of salt, but the salt has been historically accurate.
Yeah. To that end, great point. What is the price of a cost of a dozen donuts at let's just say no, I mean, because I kind of forgot. I really wasn't sure. What's the price of a dozen donuts at not like Jewel. I mean, obviously you can get them fairly cheap, but What is it at Dunkin' Donuts?
At Dunkin' Donuts?
Yeah, give me your number.
$30.
What is it?
Yeah, I was gonna say above $20.
It's actually $16.99.
$16.99.
And so the way this came about, yesterday we went to buy donuts. We bought a dozen. And my wife ordered a dozen, and then she ordered like 25 munchkins too. And then, sometimes you just put the card in, right? You don't even hear the price. But I thought I heard her say $50. And I was like, wait, goddamn, like, did I just pay $50 for that many donuts? And she was like, no. And then I was like, no, this is the price. And then she showed me, and I was like, oh, $16.99. And I bring this up because that's exactly what can happen over time. I remember a dozen donuts being like $8.99. All of a sudden, it's $16.99. It does change fast. So asset prices do change fast across time. So it's just interesting. If you don't pay attention, it can sneak up on you.
Yeah, and that's the one thing too. It's like people ask, why don't I just be in cash right now for like the next couple of years? And it's like, well, you could, and maybe you time a market sell-off that's like down 20-30%, but also your cash is slowly decaying in value, and the more
so
we
now than
infuse
ever.
more cash, it just accelerates that. So yeah, I mean, if you're trying to make your dollar stronger or at least avoid the deterioration of it, then it makes sense to be involved in real estate, the crypto markets, the stock market, like whatever it is. But these things will continue to happen regardless of what the market sentiment is. But definitely seeing some fear in the markets today.
Yeah, more so now than ever, the dollar. The last thing I'll say, like that DXY, a friend of mine, I actually interviewed on Engineering the Trade a couple months back, who is with OIC. He was like, man, that DXY, when we used to look at that thing, it used to be like $200-something, $300. I was like, really? It's like, yeah. And now it's 100. So more so than ever, the dollar has been eroding.
If we were to continue an IBIT trade through next year, what would you do? My trade in particular, I would do nothing. I'm about to take stock on this thing. The 65 strikes have very little extrinsic value. I think if anything, I would just buy back this, move it to January, and call it a day. I mean, if you want to keep the options position, I guess in theory I could go inverted, but one of my principles on this position was that I never wanted to have bearish delta or avoid being limited in upside profit potential. So I would just stay here, and then if we get a rally, and really with how low it is, I actually want the static delta more than keeping my options position. So rolling options positions out for a couple of cents doesn't really make a lot of sense unless you're trying to just avoid having a higher buying power requirement. But at these levels, I would rather just have the static delta of IBIT, see if we get a rally, and then sell a call against it. It's an easier position to manage when you have no upside risk at all. And my basis is already down at 35. So still have plenty more room to run to the downside before we're break even on this position, but that's what I would do, is just keep that bullish delta. I would want to have even more bullish delta now with the lower price point, and it's a year-long trade or a multi-year trade, so I'm not super keen on reducing delta to hedge it. I want to just ride the wave to the upside and be prepared for that, knowing that I'm going to be in this trade for multiple years. Let's see. What about 2026? We don't have many segments with you left to the end of the year, which is kind of wild to say. But 2026, is there anything on your radar in terms of ETF approvals, anything legislative? Like, what are you looking for?
Yeah, right now it is the Clarity Act. It is U.S. regulation around cryptocurrency markets. I think the industry will benefit from that. I think it'll bring in bigger players, more money, brings in more builders, results in more use cases, increases adoption over time for those of us that are investing in things like Ethereum or some of these platforms that you can build applications on top of. I think that's probably the biggest thing to point to. Do you get clarity around whether the SEC is in charge of this area of the market or the CFTC oversees this area of the market? What's a security? What's a commodity? How do we move forward? That should be a boon for tokenization. And there should be a lot of efficiencies that are gained from that, given what blockchain technology facilitates. So that's probably the biggest thing that I would point to from the kind of more fundamental perspective, I guess, when you look at what regulations could be coming down the pipeline, or we know are coming down the pipeline. Government shutdown threw a wrench in the gears, as I mentioned earlier. The other thing that you've got to be on the lookout for is just more liquidity in the system. You talked about debasement of currency. And that's only going to continue, right? It's going to ebb and flow. We've gone from a period where, for a couple of years, we had balance sheet reduction. Trillions of dollars have come off of the Fed's balance sheet. That's all about to end. So starting in December, you're going to see the Fed back in the markets effectively as a buyer of treasuries. There's going to be more liquidity. When you look at what that represents, well, right now it's about $40 billion in monthly liquidity that could find its way one way or another into the system, into assets. It's about over $400 billion a year. So that's a very different environment than the one that we've come out of, coupled with potentially lower interest rates on the horizon. I think that liquidity picture looks a little bit more bullish. It just isn't here today.
So we'll see, how much longer this drawdown persists, whether it's in the Nasdaq or it's in Bitcoin. But at some point, you're going to get on the other side of that, and I think it looks a lot better into 2026. And it's probably a first quarter, first half of 26. You kind of look at this. I think this cycle it gets extended, but we'll see.
Yeah, I think there's plenty on the horizon, lots to consider. But yeah, I think when it comes down to your time frame of investment in something like this, or just generating trade ideas, I think if you're a shorter term trader, sticking with defined risk, if you're trying to buy the dip here, Ryan wants to see more of this chop, a little elevation. I think that point you made earlier is a great one. Like, you'd rather be getting in at 100. If it goes from 110 back down to 100, at least then like we were in the 80s, we're back to the 90s, back above 100, sentiment shift, as opposed to trying to get 10K out of a product like this now, where you could take further losses because there isn't really a floor that's been set, given the current market that we're seeing. But yeah, lots to think about, lots to digest. E-minis are up 101, Nasdaq up 600 and change now. Bitcoin continuing its rally too, up 4% now, up 3,500, and Ethereum up over 7%, 200 points, just shy of that on the net change today. But thank you, Ryan, for coming in.
Thank you, guys.
Absolutely. Glad to have you on. We'll have you on a couple more times through the year. But if you want to reach out to us on Twitter, we've got the handles there. I'm at Trader Mikey B. Jamal is at Jamal Chandler. Ryan is at Ryan Fred Grace. And give Tasty Crypto a follow as well. I've got the Tasty Crypto newsletter in the YouTube chat. Sign up for that, totally free. You can stay on top of the analysis that Ryan provided today in a newsletter format every Saturday morning and Wednesday as well. But yeah, stay tuned. We got plenty more content coming your way on the YouTube channel, as well as tastylive.com. We'll be back same time, same place, 11 a.m. Central tomorrow. And like Jamal said, Thursday, no show. Friday, no show for us, but the markets will be open on Friday morning for an abbreviated session. So just keep that in mind with your trades this week. But yeah, we'll see you tomorrow. Peace.
the show. Watch me go, watch me go, watch me go. Start the show, start the show, watch me go, watch me go, watch me, start the show, one foot in front of the other, put your best one forward. You've got everything that you have ever wanted. It's already the best day. It's only the rest of your life. You've got the hair, you've got the style. Don't even care, you'd walk a mile in those high-heeled shoes and your velvet suit. Two eyes on the prize. Once you win it, then it's yours. You've got all the time in the world to make a score. It's already the best day.
Everybody, and what a happy Monday it is. We got the markets moving up. It's risk and reward. We're here noon sharp. As always, I'm joined by my wonderful co-host, Errol. Errol, how we feeling?
Feeling good. Got a little bit of whiplash, but feeling good, feeling great. Market's bouncing on us today. Got a little bit of volatility sucking back into the market. So, I don't know. We're feeling good. We had some positions that we put on yesterday, positioning for the pullback that we got in the market. So I was thinking about managing a little bit of that today.
You're talking yesterday futures or Friday?
I think it was last Friday or last Thursday. We sold some out of the money puts for a little bit of long delta. Today I bought another micro NASDAQ contract to get long. We're up just a little bit on it, but where we're sitting right now, I'm a little too long, so I might end up taking off that contract for a little bit of a break-even kind of trade. So that's kind of where I'm at. That's what's new on this end over here. What about you, though? What's new over on your end?
Yeah, nothing super new. I mean, everything moving in the right direction. Rivian looks like it's going to double doink for me beautifully.
Is it going to do that?
Yeah, settling right into the middle of its range. I'm deviously long Meta, as I alluded to towards the end of last week, and Meta is taking a nice little move today. So yeah, not a whole lot new on my end, but things just finally going the way that they're supposed to a little bit. And as I alluded to on Friday, which we are just getting continuation on Friday now, that was something that we threw around on Friday. Are we gonna, what's gonna happen headed into Monday? Now that we've gotten that continuation off Friday, I feel pretty solid about the risk management that I did in the midst of the downturn. Managed to minimize my losses pretty well there, and now we look like we're making a push back to the highs. So I'm a happy camper.
Yeah, we're trying to a little bit. I mean, not only that, with the push back to the highs, we get that contraction on volatility, right? You want to let us know a little bit about that volatility play that should be working out pretty well,
yeah.
right?
Oh yeah. You know I'm short VIX every time it goes up. Yes, I have the 1920 short call vertical that expires 8 days. December 3rd is the expiration date. And it's 1920. So amid the VIX contraction, which has been very prominent, I mean, VIX itself as an asset is down 11% today. We're still at 2082 on VIX as I speak right now. So still a little bit left to go there. But that was kind of the whole plan, was that if things chilled out even a little bit this week, even if we just flatten out this week and stop going down for a week, that would be all that I need to get those home. And that looks like it's going to bear fruit. So feeling good right now.
I mean, as we continue the conversations into today, into the rest of this week, how are you feeling as an American consumer, right? I know we've gone through a lot: government shutdown, inflation, markets at its highs, crypto pulling back. As we get into it, how are you feeling just as an American consumer? How do things feel right now?
That's an interesting question.
It's a little bit broad right now.
Yeah,
it's a broad question.
I mean, I guess fine. Fine. I haven't. There hasn't been anything. And I'm sure that obviously this could be empirically disproven, but there hasn't been anything that I've gone to buy like in the last 6 months where I've gone to buy it and been like, damn, like this costs this much now.
Yeah.
Aside from fast food, which I complain about regularly, they're the fast food prices are radically outpacing the inflation of anything else that you can name in the market. But yeah, outside of that, in terms of like grocery store prices, there hasn't been anything that has been like shockingly more expensive to me.
Yeah.
I will say also there's this whole conflating thing that's happened because I moved to Chicago in February and everything immediately took a giant jump in price once I moved, from the Texas suburbs into the inner city Chicago.
Timing of everything.
Yeah, everything took a giant step up in price then. So now anytime I see things that my brain says, man, that's way too expensive, I'm just like, Chicago, and I just keep doing it.
Even just like every 5-year period, I kind of feel like our perception of the value of things kind of shifts because of the value of the dollars is shifting all the time. And then we got inflation, of course. But it is kind of just funny to look back at, every 5-year window. And then also, like, let's say we're in high school, we're looking at what colleges we want to go to, maybe what we want to study in college. It is funny to just look at the environment to see how, the way we perceive things and the way we perceive value is going to shift in another 5-year window. So, depending on what you're looking at to get into, the perception of that opportunity might look a little bit different 5 years from now, 10 years from now, for the better or worse, right? Opportunity shifts everywhere. So
yeah, absolutely. Yeah, and it's also always, I think, perspective and kind of what seems like a great deal to you, like because your income level changes as well. So especially in especially in our particular case, 5 years ago to now, your income level changes kind of radically. That's like the biggest income increase you're going to see in your life is when you first come out of college. So yeah, your perception of things shift a little bit. But I'm not going to stop shouting about the McChickens though. They got to bring that back.
We got to
get. I can't believe it.
No, McChickens and I'm never gonna let go of the fish fillets. I can't do it until I have one. Maybe we eat one live one day, but I don't know about all that. But anyways,
I am a fish fillet enthusiast. This is an off-camera thing, but yeah, I'm a proponent of the fish fillet. I enjoy a fish fillet from time to time. What's going on, everybody in chat? Big deal. Ranch, Ken, Jared, Stan. Margin Walker, big deal. I said you twice. Good to see all of you. happy to have you here. Thank you for all the kind words. VIX will be under 20 tomorrow, Gus. I can feel it. I hope so, Jared. I hope so. I can't say I necessarily feel it myself because of the way because of the way this market action has been, but we're definitely moving in the right direction. We've come down 2 cents since I originally mentioned it. So, just need to do that 40 more times. Yeah. Oh, I guess I need 40 more times and we'd be good.
We got new metrics down here. We got the Taco Bells.
Never save in cash. That's true. Only the shock pricing affects you. They will slowly rob you of your income. Yes, that's true also. I mean, yes, and I should elaborate on that. I'm also not ignorant to the fact that prices have increased. I'm not trying to make that assertion by any stretch of the imagination. Like this isn't a cover up. It just like you said, it's happening so gradually that it's lulled me to sleep. There hasn't been anything that has shocked me. That's well put. 2 McMuffins for $5, not too shabby. But was 2 McMuffins not $3 like 2 years ago? I mean, that's sort of what I'm getting at. I feel like I can recall my college roommates getting 2 for $2 McMuffins in the McDonald's app, and I just graduated college in December 2024. So that's very, very recently.
The McMuffins were definitely $1. I mean, we lived off of those in college. I mean, we would get like 5 for $5.
Yeah.
Just get like 6 or 8 of them Saturday morning with the boys. Just 8 to 10 McMuffins, you're good. You're good to go.
Yeah, and the values, and Taco Bell is, oh my gosh, don't even get me started on how much Taco Bell is falling apart.
It's been a while for me for Taco Bell. What's going on over there? Have they jacked up the prices too?
Just everything's up. They still have a competitive value menu, and it's competitive in the space. And
it's competitive now because everybody else is.
Yes, exactly, because there is a market-wide increase that keeps them competitive. But yeah, I mean, I remember when I was working my first job in high school, we had a Taco Bell like a quarter mile from us, and I would go there for lunch all the time, and legit could get more food than I could eat for $6. I mean, it was crazy what they had going, and now it's like their cheapest menu items are $2 and $3. Commercial $8 meal deal for 10 McNuggets.
Yeah.
How do they think that's a deal to advertise? Yeah, I saw that the other day too. That McDonald's has one now. They're acting like it's a good deal. I think it's $12 for Big Mac, 4 nuggets. Medium fry, medium drink, and it's like $12, and you're presenting that like it's value. It's crazy to me.
Well, that's what I was gonna say, especially because our perception of value is gradually increasing, like where that threshold is, and I think that from a visual standpoint, when we look at price, eventually in the future, whenever we see a single digit, it's gonna look like a good value to us, right? So if it's $8, $9, then when it's 10, it's like. Psychologically, it's getting into the double digits, but we can market the most valuable products as the cheapest items, below $10. Get that single digit. It's like 99 cents. It's like that psychological.
Yeah. I saw an article the other day from maybe Fortune magazine. It was a big magazine like that from 1990 was the article, but it literally said it said in 2025 burgers will be $5 and they will try to tell you it's a good deal. Like that was like the exact.
That is a good deal.
And it's like that. Yeah, exactly. And that's exactly where we're at. So shout out to Fortune on that one. I like to make fun of publications when they get things wrong 25 years ago, so 30 years ago. So I might as well. Praise them when they get it right as well.
Yeah,
anyway, I'll just talk about inflation. Maybe consumers buying a little less leads somewhat straight into our topic for today. We're going to be talking the Great Divide in the Mag 7. Mag 7 or Stag 7, as I have so aptly titled these slides. And I was just poking around this morning, and it dawned on me that half of the Mag 7 has maintained momentum straight through this recent slowdown that we've seen, and the other half very much has not, and is in fact near 3-year lows in aggregate. So we can get right into things here. First slide is a synopsis. I've got the two groups here. So the companies that are at or near all-time highs are Alphabet, Tesla, which kind of has an asterisk put into it in the next slide, and Apple. Did I say Apple twice? Alphabet, Tesla, Apple. Alphabet and Apple get confused in my brain. I want to just call it Google, but I'm trying to be formal here. And then these other 4 companies are at or near a 3-month low, that being NVIDIA, Microsoft, Meta, Amazon. And NVIDIA and Amazon are kind of the asterisks there. Again, we'll get into it in the next slide. So just to lay it out at a glance here, there's this great divide going on right now. Do you have any initial thoughts?
Great divide. When I hear of Great Divide and I hear the Mag 7, I think of maybe breaking up a level of potential monopolies. That's what pops in my brain when I hear Great Divide, Mag 7.
Sure. And let me ask you, as you look at this list here, was there anything that you perceived as doing better or worse right now?
Like company-wise relative to each other?
To me, if you were like blindfolded me and just had me make this group, I probably would have guessed that Google fell into the second category and that NVIDIA was still firmly in the first category. Like I think I would have switched those two. The other ones I probably could have gotten right, but it just Google feels like they're struggling a little bit more than they are to me, and NVIDIA feels like they're doing a little bit better than they actually are to me in the last 3 months.
I'm pretty much in the same boat. NVIDIA kind of feels like it's going to take a little bit more of a swing. The pendulum might swing in the opposite direction here soon, just for a little bit of a cool off. But for the most part, I'm pretty much in the same boat.
Okay, cool.
Yeah.
All right, let's go next slide then. We can talk specifics here. So to break it down, Apple and Google are basically at all-time highs. Good. Tesla is 13% off its all-time highs, but they're 33% above their 3-month lows. So I included them in the close to all-time highs category. They had a massive run-up in September. You guys remember it. Microsoft and Meta are the same story. They are basically at 3-month lows, and actually in the case of both of those companies, you'd have to go back to June to find lows that they're at. So 6-month lows almost on those two. NVIDIA is 11% above their 3-month lows, but is closer to those lows than they are to the highs. They're 16% down from their all-time highs. Amazon, same story. They're 6% above 3-month lows, but they're still 13% from their all-time highs. So I've included them both in this category. So, anything surprising you there?
I would say nothing. I would actually think maybe Tesla would have been down a little bit, maybe a little bit more. So Tesla's a little bit of a surprise. Other than that, Amazon pretty in line, NVIDIA pretty in line, Microsoft, Meta, Apple, Google. Pretty in line for the most part, I would say.
I see Tesla being mentioned in chat as well. And I think that one was surprising to me as well. You think, Elon's had all this controversy this year, and he keeps making the wrong people mad, and $1 trillion pay package. Tesla can't be doing well, and yet they are. They had a really, really good month of September. And then also Jared saying, as a company, Amazon is doing way better than people realize.
I almost feel like with Amazon, especially this last year, with all the new tech, all the new...
AWS is a good point. Sorry, go on.
No, you're good. Just this last year with just all the new tech as a whole, I mean, NVIDIA, Google, just everything, all the buzz, I feel like it's taken a lot of attention off of Amazon for a little bit.
Yes, I agree. And AWS is a great point. People, and holistically, broader context between AWS, Azure, and Google, do they just call it Google Cloud? Between those three, and Microsoft, Amazon, and Google run the internet. And I think that a lot of people forget that in terms of the
I was one of those
too. Server hosting.
I was one of those. Like I had a good understanding for that, but it was really tough to conceptualize. And especially after AWS going down recently, it helped me conceptualize the magnitude a little bit more. Like I understood it, but I couldn't conceptualize it till we had a firsthand experience with it.
Yes, absolutely. I'm inclined to agree. And I think that made a lot of people aware of how
woke you up a little bit.
How powerful AWS is. Yeah, exactly. Anyway, so we can go next slide here, and I have questions. This is where we get into the questions. So first and foremost, what's causing this divide? What about the list is already escaping my mind.
Yeah.
What about Tesla, Google, and Apple separates them from the other 4 companies? Why have they been able to sustain? And I'm posing these questions to chat as well, guys, because like I said, these are questions. I don't have pre-prepared talking points here.
Yeah.
But yes, why is the first question that came to mind. And then secondly, are any of these companies actually in trouble? I don't think so.
Yeah.
Is my short answer. And by in trouble, I mean in danger of falling out of the Mag 7. Obviously, nobody's in danger of going bankrupt.
No, I would say maybe in trouble, just like any company for that matter, in trouble of the inevitable uncertainty that's out there, the inevitable innovation that's out there in business that's going to come. We talk about Google and Sam Altman all the time. How did Google even how is there even another competitor making Google even have to get on their toes to compete for market share for their, for search at all. So I think their biggest fear is going to be the inevitable of the uncertainty that's to come, which is innovation.
Okay.
So no, I would say I don't see them any 7 of them getting knocked down.
Sure, I'm with it. What if I framed the question as, what if I told you that one of these companies is not going to be in the Mag 7 anymore next year? It'll be replaced with I don't know, Broadcom. I think Broadcom deserves a spot right now in this conversation anyway.
Yeah.
But
which one would I choose? Who do I think got knocked out?
Who do you think got knocked out in that situation?
This is a touchy subject. No. I'm just kidding. That's a tough one. I'm going to have to put a little bit more thought into that. I'll circle back around to it. I'll have an answer here shortly.
Sure.
You have one off the top of your mind?
I don't know. I would love to lean Google because of the search engine revenue thing, but between Waymo, between Google Cloud, between Warren Buffett, they're putting their money on the line, I feel like I can't necessarily be in the Google camp anymore.
Yeah.
I'm really high on Meta. I don't think Microsoft can go anywhere for the same reason as Amazon and Google. They control too much of the internet. So I guess I would have to say Tesla. I guess Tesla would have to be my pick.
Yeah.
Just because, Tesla, it's like, I don't know. It's just not as speculative as those other companies. I feel like at some point, I think Tesla starts trading like a vehicle company. I don't know when that is, but at some point, I think that their PE chills out a little bit more, and they start trading a little bit more like a vehicle company, although at a much, much higher valuation.
Yeah.
And that could be enough to potentially get them out. And I think that that's a pretty square answer as well, because their valuation is actually lower than Broadcom and Saudi Aramco and a few other companies right there.
Forgot Tesla offered vehicles for. When I think of Tesla, I think robo, I think AI, and then cars. So many different categories.
It's just
now,
like I think
Tesla.
The issue to me is that I don't know what falls into the Tesla bucket, because everything that you just said is in the Elon bucket, and throw humanoid robots and rocket ships in there too while we're at it. But like the humanoid robots fall into the Tesla bucket. I think that those are Tesla branded things. But like the AI stuff, like and Twitter or X and Grok and the AI development stuff, I don't think that that's in the Tesla bucket. I think that's in the XAI bucket. And so I just don't know. There's so many moving pieces with Tesla and what's actually Tesla and what's not. And people like to just invest in Elon in general as well. But I think that at the end of the day, Tesla is a company that sells cars and is soon to sell robots, and then at some point they become a car and robot company and start trading like one, and that would potentially allow for other suitors.
Tesla might just be a cover up for a personal brand.
Sure.
Who knows? But anyways, we'll see how some of these respond.
Okay. And then what's causing the divide? What did the winners do to survive this drawdown? Those are both sort of the same question, and I think it's a very interesting one because I can't pinpoint anything. I mean, Google got an investment from Warren Buffett, which has spurred some of their recent charge. And I mean, they did pretty well. I mean, they're doing pretty well on the AI front, I guess, is Google, and the Google has plenty of web hosting stuff going on. But yeah, Tesla is just the surprising one to be in the good group. You have this perception that Tesla shouldn't be doing as well as they are to me.
Yeah, I just think that Tesla has a lot to prove. I think they've proven a lot, but they have a lot more to prove just because they bit off a lot that I think they're going to be able to chew, but they bit off a lot.
Okay, we have some good input from chat here. I'm starting to low-key hate Amazon. So much cheap foreign dropshippers with fake reviews. Mikos, I don't believe that was in response to the are any of these companies actually in trouble question, or who will fall out of the Mag 7 first. I think that was per the previous Amazon conversation. Wanted to make sure you got some love.
That's on Amazon, though. Yeah. I'd say that the quality control's got to be on Amazon. I think they provided a great opportunity to provide a free marketplace. If you have a market, something to sell, and you have a supplier, you can go on and sell. But of course, they're going to take on everybody because they control the bottleneck to the funnel to get on their platform. So it helps them, but the quality control is all on Amazon.
Well, and to give play devil's advocate, I'm not sure exactly what the vernacular is here. I guess to give other perspective, Amazon does sort of screw the sellers too. I mean, the return policy is so incredibly liberal. And what I always think back to, and what really kind of opened my eyes to, I wouldn't call myself a bootlicker of Amazon sellers, but I have a little bit of sympathy for Amazon sellers, because when I worked at the UPS store when I was in high school, we had a client who had a mailbox at the store that was an Amazon seller. And one of his main things that he sold was holiday decorations for all holidays. And around Christmas time, and so we would get his returns. Any products that were returned came to our store, and then he would come and pick them up. So then Christmas time rolls around and passes, and on like December 29th, suddenly, I'm not kidding, 30 or 40 boxes of Christmas decorations that people threw in their yards, used for Christmas, and then returned to Amazon start showing up at our store. And it's like, but that's Amazon's policy. You can use it as much as you want. As long as you're within the 30-day window, you can treat it as a rental if you want. Some of them are showing up in soggy boxes because people threw things with snow on them straight into boxes and then sent them back. Obviously, you can't resell those. All those things just operate at a loss, and Amazon just lets it happen. So there's screwy protections on both ends, I think, which is sort of the trade-off there. And part of why maybe they don't feel like they need as much QC if you can just return anything at no cost.
That's true.
What else we got here? I saw somebody say Meta. Meta is starting to be slower and slower to pivot. It's true. It's true. Meta has a lot, though, too. I mean, Meta, I guess all these Mag 7 companies just have a lot going for them. But Meta has WhatsApp. I think that's what people always forget, is that WhatsApp straight up is the messaging app in the majority of the developed world outside of the United States, where we use iMessage. But like, I have friends in Europe, and they think it's weird when I text them on iMessage. Luis thinks it's strange when you iMessage him. Luis wants you to text him on WhatsApp in Mexico.
Luis, my boy.
So yeah, I mean, there's a giant hold there that Meta has.
Yeah.
Tesla,
they do.
yeah,
Definitely
I see lots of
lastly on
echoing on the Tesla. Go ahead.
Lastly on Meta and Facebook, it is kind of interesting to see how Mark Zuckerberg wanting to build Meta was to connect friends and family is essentially the only reason, in my opinion, why the social aspect of Facebook is still used, just because people are primarily connecting with more so close friends and family, or else I think it actually would have died off a little bit sooner. The social aspect of Facebook, at least.
Yes.
I digress.
I'm inclined to agree. Yeah. Meta also had a big antitrust win last week. They don't have to. They were supposed to. The antitrust thing was, if they lost, they were going to have to divest both WhatsApp and Instagram.
Okay.
But they won, so they get to keep them all.
Gotcha.
Oh, there's Luis. Meta has been canceling Instagram accounts for no reason. They just took mine down. Oh man, I'm sorry to hear that, Luis.
Once you get past 35, they start to clip those accounts, Luis.
You can return half-eaten rotisserie chicken to Costco. Which is worse? The rotisserie chicken is decidedly worse. Although, Costco doesn't have to pay return shipping on your rotisserie chicken, and they only sold it to you for $5, which I suppose is kind of a loss leader in the first place. So, tough question. Neither of them can be reused. So,
yeah,
start there.
And Jared, over here, it's the only reason I have a Facebook is because I needed to log into certain things, and I think I might have a couple things saved on and connected with maybe a few people.
I know people really like, people who travel really like the Facebook like map as well. Like you can check in everywhere.
I haven't even got to experience it.
My parents both still use Facebook like exclusively for that. Like they've deactivated all public facing aspects of their account, but they keep their accounts active because they have a map of everywhere they've been, and you can like check in, and it builds you.
So Facebook's trying to grasp on as many straws as they can.
Yeah,
keep
exactly.
as many people in the community.
Yes, but it just builds you like a cool map. You can go back and look at and see when you were places.
I mean, that sounds useful.
Yeah, it's nice. Just like a little digital journal, basically, is the capacity that they're using it in. How are your sons doing? Are you already looking for college?
Bro. They're waiting for Uncle Luis to swing by and asking, if they can get some connection to some colleges, brother.
Was Luis also born in the 1900s?
Maybe 18. I wouldn't even give him that much grace, Luis.
Oh, man. I quit Facebook. It wasn't easy. They make it difficult. I've heard that. I've heard that canceling a Facebook account is like one of the hardest cancellations you can possibly do. Like they make it really, really, really hard to get your stuff actually all the way off.
Only reason why I still have one, really.
Sure.
To be honest, later on I realized I still needed to keep it for other reasons, but one of the reasons why I only have one. So.
Yeah, absolutely.
Cool.
Yeah, and Jared, this sentiment you're expressing here, it's funny, just generational difference, because that's why I keep Instagram. I mean, that's why I stay on Instagram. I mean, aside from part of my job being to post on Instagram.
Point.
But yeah, there's all kinds of people I follow that I haven't seen in forever and I don't really care about, but also like it's interesting to see what's going on in their lives, the different directions that everybody goes.
Yeah.
You got everything under the moon. You got people who are married with 3 kids already, and then you got Gus. on the other end.
You do. You do. I mean, and then 5 years from now, you're going to be like, wow, I was so in communication with said individual, and now I'm in communication with a whole bunch of other individuals. And it's just, I don't know, social media just puts things into perspective.
It does.
So
it does.
we were to look back on it. Anyways.
They make it really hard. Lots of loopholes. Anyway, yeah, so that's the Max Devin discussion. We got a divide going on. If you're looking for places to get long, you can consult the second half of the list. And if you're looking for places to get short, maybe consult that top half, and you can be contrarian either way. But I know that's getting close to all the time we have for today. You have anything else you want to touch on?
No, long a little bit on the micros right now. Might look to hold that contract a little bit longer, just long just above the 24,900s. Not doing too much today, but really just thinking about how to manage some of the long delta in the portfolio. We're kind of getting that dead cat bounce, if you will. Really, the mindset now is like, how long is this bounce going to last? Is it going to last? Is it going to continue? Or is this going to be a dead cat bounce? Are we going to give the gains back from that which we put in the last
cat alive?
Is the cat alive or not?
We have Schrodinger's cat.
Is it alive or not?
Yeah.
Yeah.
Wait, is Schrodinger's the one with the dead and alive cat, right? Yeah, because Pavlov has the dogs. Okay.
Yes.
I figured it out.
Yes.
Pavlov's dog. Yeah.
Granted, I'm allergic to cats.
Huh?
I'm allergic.
You're allergic to cats?
I am.
Oh, what a shame.
Yeah.
Cats are awesome.
Yeah.
But yeah, we got Schrodinger's cat market right now. So everybody brace yourself for the Schrodinger's cat pattern, and we will figure out whether what's the contingency he presented? There's like gas that's going to go off. Maybe the gas will go off, or maybe the cat will walk out of the box just fine. We'll figure it out in the coming days. But that's going to be all we have for today. Thanks so much, everybody, for tuning in. We dearly appreciate you all taking the time out of your day. We love you very much. We'll be back here same time, same place tomorrow, 12 o'clock noon sharp Central Standard Time. We'll see you guys then.
Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
And sometimes I bear my claws, forgiving me, forgiving you. We're all learning to live in truth. All I can do is what would love do? What would love do? Love will love you. What would love do? Love will love you, love you. What would love do? Love will love you. What would love me? Love will love me. Love will love you, love you. Put down my halo, put down my wings, realizing I can't fix everyone or everything. You are human and you have your own path. And if you need me, I'll just wait here until you ask. Forgiving me, forgiving you. We're all learning to live in truth. All I can do is what will love do? What will love do? Love will love you. What will love do? Love will love you. Love will love you. Love you. What will love do? Love will love you. What will love me? Love will love me. Love will love you. Love you. What will love do? Love you. Love do. What will love do? Love will love you. Love will love you. Love you. What will love do? Love you. Love will love you. Love you. What will love me? Love will love me. Yeah.
We're back. It's still Monday, November 24th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Ilya Spivak. Ilya, thanks for coming to start this holiday shortened week.
Always a pleasure, especially on a day when my positions are pressuring me and I'm starting to feel a little bit alive here as these markets start to have a little two-way action.
If you're long puts today, you're feeling a little bit of heat under the collar, not just because of what's happening in the price action where the Nasdaq's up over 2%, the S&P not far behind, but on the other side of OPEX and the NFP and NVIDIA earnings, there's this big OPEX, post-OPEX IV crush that's going on right now. So vol is coming in across the board here. Volumes are thin, and notably they're thinning out over the course of the session. Feels like things are slowing down on approach to the holiday. Of course, we'll be here today and tomorrow. No Futures Power Hour or overtime on Wednesday or Friday this week. Thanksgiving, of course, on Thursday, so everything is closed. But Ilya, we start this week with, yeah, it's a real bummer. We start this week off with a look over at what's happening with Fed rate cut odds, because they've continued to perk up here at the start of this holiday shortened week. What really began on Friday morning with John Williams, the New York Fed president, talking about the possibility or need for a 25 basis point rate cut was buttressed over the weekend by Governor Christopher Waller saying similar things, almost to suggest that absent the tariff inflation, which he doesn't think has necessarily materialized outside of core goods, you're looking at a inflation that's comfortably at or below 2%. So 79% is where we find ourselves here today, Ilya. Of course, the next Fed funds meeting, or rather FOMC meeting, is coming up on the 10th of December, which means this is the last week in which we can hear from Fed officials. Their communications blackout window officially begins this Saturday.
Yeah.
This is an interesting few weeks that we have ahead of us here.
Very much so.
Doesn't look like they're going to change the Fed meeting from December 10th.
No.
We're not going to get much data, and the Fed is about to be quiet. How on earth are traders going to navigate the next few weeks if they've been watching Fed funds futures or these rate cut odds as a guidepost?
One of the most interesting things here, of course, is that sentiment is buoyant when Fed rate cut odds are back to almost 80%. So this kind of back and forth that we've seen since the Fed meeting on October the 29th, when Powell came out there and tossed the grenade of maybe in December people shouldn't bet on it. For the first time, really, since then, the probabilities have been meaningfully north of 60. So this is interesting, and it once again kind of reinforces that the focus is on the Fed. It's not on the AI, this or that. It's not on anything else. I mean, we just got data out of S&P Global on Friday that told us that the U.S. economy is doing quite well, that it's growing strongly, that we're back to levels, as a matter of fact, on overall growth that roughly match the multi-year highs that we saw at the tail end of last year. So we're looking at a pretty benign environment, but for will the Fed or won't they? And this shift in the odds here suggests that the likelihood is increasingly sort of market favorable. Now, this, of course, on a week when we have very thin liquidity and where we're not going to get the kind of conviction out of moves that appear large that ultimately we would expect were this normal liquidity, because thin liquidity will accentuate moves and make them appear larger than they actually would be were the conviction really there. So this is an interesting setup, and I think watching the price action becomes paramount in its importance. Because if you clear any levels that look like they are not meant to be cleared, then probably a good time to be thinking about exiting things to reassess if you're exposed on the wrong end of some of these moves. I mean, I'm certainly watching my short equity exposure very closely. Bitcoin isn't really mounting a big recovery here, which encourages my risk-off thinkings and doings. But as I look at stocks, they haven't crossed any Rubicons yet. The Russell is getting close. And so it's interesting here, and I think you got to be really careful.
You know, it's interesting that you bring up crypto, because I was sitting here with some popcorn this morning at 10 a.m. Eastern waiting to see if another crypto or silver dump proved to be a liquidity indicator, saying that sentiment was going to take a turn lower, and it never happened. And so stocks didn't have that albatross around their neck today. So crypto not blocking stock rebound and rally here, which at present time, we are just a stone throws from the session highs, and the S&P 67.29, currently just 7 points off that at 67.22. It's a 1.5% gain. It follows on with Friday's bounce, Thursday's meltdown following NFP, seemingly on the back of nothing. Ilya scared a lot of people. Of course, Thursday produced that interesting statistic where we were up by more than 1.5% in SPY at the market open, only to close lower by more than 0.5%. The only other time that we've seen that this year was April 8th, the day of the low for the rest of the year, once it occurred. It is typically an exhaustion signal. Concurrently with that, Thursday was the seasonal low for the rest of the year for the S&P 500, if you go back to 1950. It was also the seasonal peak for the year for volatility. So here we have 2 days now on the other side of OPEX with this vol crush going on. IVRs are back into the 20s outside of where they were just a few days ago when they saw movement up into the high 40s for both the S&P and the NASDAQ. You mentioned not crossing any thresholds. We're still not through Thursday's high. We're still not above the 1 month moving average, although I do see some glimmer of hope here. The slope of the 1 month moving average is turning positive potentially today. Same thing for what's going on with our 1 week moving average. So
Yeah.
bulls are trying to put up a legitimate stand here. This is not to say that it's occurring in just only in low volume. We are through 1 million contracts traded today.
Yeah.
Which is a healthy,
It's not-
which is a healthy market.
it's not
this
so low.
time of day. No. But it kind of puts us now at a place where we are effectively equidistant between the lows of last week and the highs from the end of October. And if you're playing for a lot of chop, this might be a place where non-directional traders would find it somewhat appealing to do something like a short iron condor relative to recent swing highs and swing lows.
Right. Yeah, I mean, it's interesting. So take a look here at really any index, S&P, NASDAQ, and take a look at them on, let's say, like an 8-hour chart or a 4-hour chart, because I think here you get a clear view where you see where the series of lower highs and lower lows is, and you see that you're basically at the door knocking, but not quite there. So that, I think, ends up being a kind of line in the sand across these indexes, where essentially you need for this sequence to hold in order to still have the trade on that you think you do. And if you were to break beyond the bounds of this, then something else is going on. And so
could you explain why you look at specifically like the 8-hour time frame when you want to drill down? Like you typically mention the 4, the 8. Why do you favor those as opposed to like the 1, the 2, the 12 when you're zooming in?
I think 8 hours is the equity trading day. And so it's a nice kind of demarcation, especially when you look at what happens to the futures overnight, kind of international sessions. So you get nice 8-hour blocks that
so
generally
midnight to 8 a.m. until 4 p.m., which is effectively in U.S. hours, the Eastern U.S. hours. That's the U.S. trading day. And then 4 p.m. until midnight, which is effectively the Asian block.
That's right.
New Zealand, Australia, Singapore, Japan, China.
Exactly. And then Europe. So you look at these things in those kind of gradients, and you start to get a sense for where liquidity is and where conviction is. Also, beyond a 4-hour, if your time horizon is, as mine is, a few weeks on a trade, then now you're starting to get into real chop. And you're starting to get into the kind of strategic approaches that start to favor more active management of positions, maybe greater leverage, but quicker exits. And so that's not really aligned with the way I think about my approach. My approach is more macro. Macro is notoriously terrible at timing things. And so you really have to be very comfortable with the price action telling you what you think it's telling you, at least enough so that you can structure decent risk reward when, let's say, an average position that works, for me at least so far this year, has been 6 weeks. An average loser that I've cut within 2 weeks. So on average, then, let's say, a trade is about 4 weeks, give or take, any given one. Loss or winner. And so to get really more granular than a 4-hour, you're asking yourself to manage the position much more actively. And that's not where I think my approach really goes. So I like a 4-hour. I like an 8-hour. I think that's about as active as I would get to actually get conviction for a trade. Of course, I look at a 15-minute chart or a 5-minute chart to get reaction to an earnings report or a data release or something like this. But anytime the 1-hour chart attempts to tell me something and tempt me into a thing, I usually try to slap my own hand and take my hand off the mouse.
Yeah, I mean, if you put a position on during Asia, it's going to have a different risk profile than the one built in the U.S. Open. And I think your sizing should reflect that. Thin liquidity is going to amplify noise. So I'm more than willing to go into full size during US hours and take a little bit more slowly in the Asian or European hours.
Yeah.
And I preferentially only go as low as 4 because of how I bucket out the liquidity timeframes throughout the day. So midnight to 4 a.m. is kind of, I call it post-Asia, pre-Europe. It's going to be a thinner liquidity session. 4 a.m. until 8 a.m. is my European hours. It's a little bit better liquidity, but it's still fairly thin. 8 a.m. until noon Eastern time, that's your London, New York crossover. It's where your liquidity is going to be strongest during the day. 12 to 4 is US hours, right? It's probably second best liquidity, but starting to thin out. And then 4 p.m. until 8 p.m., that's your pre-Asia, post-US. You get your batch order processing for futures market. You're going to get a little bit of slower trading again. Liquidity thins out. Sometimes stuff interesting happens there because, of course, it's the earnings block. But generally speaking, I'm preferring to operate in that like 8 a.m. to noon or noon to 4 p.m. 4-hour windows. And so I like to see, like, I see today that our 4-hour windows here, the US hours, both for the crossover and now the US session here, these are both pretty strong candles for the S&P 500. American traders are more than happy to pick up the pieces that they were willing to put down the other day, because that block of 4-hour candles that we see on Thursday with the big sell-off, that is the US session. This is not Asian traders. This is not European traders. These are American traders, primarily with Europe and Asia closed, driving the market lower. And so today I'd want to see, as we get through the series, you mentioned, have we cleared out the series of lower highs and lower lows? We have not. And on a time frame basis, if I'm looking this on a 4-hour chart, the high that we have for the pure US hours on Thursday comes in at 67, 63 and a half. Right. And so if we're not able to scale through there and we get rejected by going up into that zone as this rally extends, you'd have to raise some eyebrows that this is still a sell the rip as opposed to buy the dip. And another retest of 65.50, maybe not this week, but certainly next, could be in the cards.
Right.
As for myself, I've been holding on from the skin of my teeth, ups and downs in this MES position. I didn't see a reason to get out of it last week because Thursday, of course, we came into support and we had all those interesting statistics. It had me going pretty good with the Russell here. But now the Russell's starting to cross some of those thresholds. And this is what does stand out. As those cutouts have been reinvigorated, the Russell here has taken the baton again. It has cleared its Thursday high. The high there was 2411.99. So my rationale and impetus for holding on to a long put spread in the Russell is becoming invalidated faster than my desire to add on to a long stock position elsewise, which is why I think that going a little bit directionally neutral here may not be the worst thing to do as we contend with some holiday chop and think about thinner liquidity conditions persisting really until next Monday.
Yeah, I mean, I think those are all very important observations. You look at this and you go, okay, well, U.S. traders sold it on Thursday. U.S. traders are now buying it before this long holiday. And so they feel a kind of sense of urgency to rebalance their books because they're going to be essentially nowhere to be found already come Wednesday. And so you get the sense that this isn't the kind of thing that really motivates follow through and is more position management. Now, you do get some confirmation of this because with the shift in Fed policy odds, you get a rally in the metals. That's what you'd think should happen. You get a rally in the bonds. That's what you think should happen.
That's still the most interesting part of this whole picture to me.
Yeah, that's very encouraging for the shift in odds being real. That's 3 markets now, ostensibly, stocks, bonds, metals, that are telling you, yeah, you can go ahead and buy this dip. Go ahead. This is good. We're happy. It's back. But then you look at the dollar and you look at crypto and you go, fool me once. And so it's a bit incongruous here. I would think that it needs a little bit cleaner confirmation before you can say with confidence, oh, yeah, okay, this market has bottomed for the moment and is going to even out into the Fed 16 days away, and then we'll see. But I don't think we know that here yet.
Well, if this is where we're bouncing, we get the brief break of the October 10th low. We go right into the highs that we have at the end of August. And we are working on what could be a nice little Morningstar candlestick cluster there at support area, which for a bottoming candle, not as clean as in the S&P, but you're starting to see it come together, at least in the NASDAQ here as the rally extends into the second half of the day. The moves that we're seeing as well. I pointed this out yesterday on First Call when you, me, and Jamal were having our conversation. But on Friday's option volume of 93.2 million contracts was 36% above recent average levels, with calls leading puts 6-5. And among the 500 most liquid single stocks, 30-day IV was higher for 69 and lower for 353. So if we're thinking about this breadth improving from the volatility perspective coming into the week, you did see that the market on Friday was staging high volume, high participation, and then ultimately vol crush across the board, which has continued well into today's session. In terms of our watch list for our sector ETFs, which I have this up here on the platform, this is something that people could create. Where did I find all this information? Honestly, years ago, I just started tracking what was on CNBC.com sector ETF page and integrating them all, and then wanted it on the platform. So I put them in here. On a day like today, the losers are Staples down 0.87% and energy off by 0.37. Everything else is higher, led by GDX, GDXJ, telecom, semiconductors, which is the one that interests us the most here, given how much damage has been done to the semis chart. And, you know, I do feel that vibe, Ilya, where you say we're not out of the woods just yet. We haven't quite made the turn. Thursday was real ugly in semis. We tried getting above the uptrend from the September lows. We failed, of course. We get rejected at the 1 month. So until SMH is back at 350, you probably see a NASDAQ that's not breaking through Thursday's highs. And if you're not below Thursday's high, you're not above Thursday's high, you're still in the downtrend off of the late October swing levels.
And that's with tech outperforming today. I mean, XLK is up 2.6%.
So look, if you got long on Thursday or Friday, or you were getting in long today, my view is that there's no reason not to be, because we do have those, washout.
It's not an unreasonable idea at all.
In terms of laying on a new position here at 1:52 p.m. Eastern on Monday, November 24th, we've come quite a little bit so far. So perhaps a more modest proposal, especially if we step away from the NASDAQ, which with its tech weighting seems to be driving the boat here at 4 or even at 11 DTE, which at 11 DTE, that's carrying us through next Friday. Thinking about the recent price range gets you down to 6,500, we'll call it, up to 69.56. But this is already talking about, this is basically the 1 standard deviation move through next Friday, 69.56.
And here I thought you were going to modestly propose we just eat the bears.
That's, different part of the story. Directionally neutral. This isn't the great. I'm not a super fan of this risk to reward.
It's not great.
But if you wanted to play something directionally neutral here, let's just say you think
5-1 in the wrong direction, probably a little egregious.
No, and maybe it's sitting at 4-1, and then thinking about the standard account size. Let's say you're playing with a $25,000 account. You're looking at buying power that's a little north of 10% of full equity to make potentially a little under 1%. It's not the great.
Not even 64% pop. Not even 64% pop makes that make sense.
No, it's not fantastic, right? But if we were going to size this up and make a trade, are we going to see the market stay within the lows from last week and the highs from the end of October? Is that a trade that you could size up here and get something that's, I wouldn't call it super appealing, but on the fringe, depending upon your risk tolerance and what else you have on your book the next few days? I could see that happening. It's not for me because I'm a directional monkey and I'm seeing a momentum turn higher, but I could absolutely understand why people would say, you know what? We're not going to scale another 5% here by next Friday. Not in a Fed blackout window, not without the data coming out, not with everything else going on. I also think maybe the worst is behind us, so testing the lows unlikely.
It's not an unreasonable point of view, especially when you consider that there's really no Fed speakers this week. I mean, the Fed Beige Book is on Wednesday, but they might as well be in blackout mode already.
Might as well.
Nobody's really out here talking. The ECB is talking. The RBA is talking. The BOJ is even talking, but not the Fed. Again, we do get a Beige Book on Wednesday when nobody's going to read it because everybody is already considering how they're going to cook this bird. So it's not really the kind of thing that lends itself to conviction, which, by the way, is another reason to think mind your risk reward here and don't force anything. Because this bounce right here that basically resets to some extent where we were on Thursday, if it holds, which it may not, it's early yet, it's only lunchtime. If it holds, then it could very well be easy come, easy go. And so, because just as the bulls aren't going to get the bears to show conviction, it'll be the other way around also. Everybody is looking at essentially the same thing, which is the Fed meeting, and everybody is effectively already without steerage. I mean, yes, okay, we'll get the PPI numbers this week. They're very old, but we will get them, and the market probably does something with that for lack of other news. But other than that, we don't really have much to go on. I mean, ostensibly, there is the retail sales report, but it's for September. We could get something here, maybe, if the markets decide to respond to durable goods on Wednesday, although the beige book, ironically, is probably a bigger deal. But the calendar is still full of all kinds of events that haven't come out yet that have been derailed by the shutdown. Maybe somebody at the BLS or the BEA or the Census Bureau decides over the next 24 hours to make the announcement that actually something is going to happen here on Tuesday or Wednesday from the old data. Who knows? But the markets are already lacking for conviction.
Right.
And that's on both sides. So I wouldn't necessarily call this bounce something to celebrate any more than I would call it something easily dismissed if you're bearish. It's
well, let me give you something here on volatility.
Got to be cautious here.
This comes from Tom McClellan, which if you're a technician, you've probably heard of the McClellan oscillator. He's the guy that invented it. He shared this in his report on Friday at the market close, or excuse me, on Thursday at the market close. So this is from November 20th. He said, most of the time, the VIX index is below the prices of all of its future contracts. That condition results in a positive reading for the indicator in this week's chart, which is measuring the spread from whichever VIX futures contract has the highest price versus the VIX index itself. Sometimes this indicator gets up to a really high positive value, meaning that the VIX is down really far below all of its futures contracts. That condition can be a topping sign for prices, but it is a hard condition to read reliably. A more reliable condition occurs when the VIX rises up above the future prices, rises above the prices for all of its futures contracts, which results in a negative reading for the spread indicator. We have such a condition now as of Thursday's close, and these negative readings are great indicators of a bottoming condition for prices. But it's important to note that a bottoming condition is not necessarily the same thing as the exact bottom moment. At the April 2025 tariff crash low, we saw this indicator get all the way down to minus 30% here. The current drop below zero is thus far only to minus 11%, but that's still a decent oversold condition. It is saying that the rise of the VIX to 26.42 as of November 20th, 25 has gone on a lot further than the VIX futures traders think is appropriate. This should mark a bottoming condition for the S&P 500 eventually. And so there's just this temporary churn right now, Ilya, with the holiday week, with it being post-OPEX, with the state of the data flow, with the volumes, with kind of everything. It's seeing a bounce isn't shocking. Of course, I wish I acted on it a little bit more by doubling down on Thursday and Friday, as opposed to just saying, no, I have enough confidence to remain long the MES position. But that also indicates to me that there's, traders may start to push this a little bit higher in the absence of bad news. Because without bad news, there's no catalyst here. There could be a little bit of just table shuffling. It doesn't mean we're going to break the highs or the lows of recent, but it does mean that we could get a little bit more upside here as we go into Wednesday. So maybe today, tomorrow up, Wednesday sideways to slightly lower.
Could be. And provided you stay with this level of conviction on rate cuts, which is really the key bogey here.
Yes.
You could get that. I mean, you're at 80% into a cut here. Market is feeling itself. That's not surprising. That's been its main cross. And so
it's not just the
if you can
cut, it's the
maintain this,
context.
then hey.
It's the context that you provided at the start of the show, which is where's PMI heading right now? Unfortunately, can we just open this? Let's just do that. Okay, for the PMI data that was released last week, we're looking at PMI data that's consistent with high 2s, low 3s GDP.
Yeah.
Which, if that is the net result of the tariffs and government shutdown and yada, 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 the real economy is not in great shape. And this could be more of that K-shaped recovery playing out where the services companies and tech companies are cleaning up while anything else that's not catering to the ultra wealthy or tech companies is struggling.
Yep.
So you get your jobless growth, as it were, but 3-4% GDP is still going to be good for corporate earnings. And this has been a backdrop where corporate earnings have seen margins blow out and get stronger. And Ilya,
4.2% is the Atlanta Fed's latest estimate.
Rate cuts with a 4.2% GDP. Gosh, that sounds reflationary.
That's jet fuel.
Which is so curious that the long end is perking up here. I think that's a great transition we have for us because this has been one of the more interesting developments that we've had in the long end of the curve, whereby instead of seeing rate cut odds filter into higher bond yields, the market effectively saying, you want to give us more caffeine right now? We're going to stay up all night. That's not the case.
Yeah.
It's almost vindicating, like, yeah, this is a market that is seeing softening growth and inflation prospects, but you can keep the party going as long as we get the cuts in a timely manner.
Yeah. Yeah.
So 113 and 10 ticks here in notes in ZB, which is a little bit firmer now, 117 and 10 ticks, sitting right near Friday's highs. In fact, eclipsing that briefly, getting close to the highs that we saw really throughout November as we peer
top of that range. Yeah.
I mean, we've been leaning long deltas here, you and I, Ilya.
Yeah.
The vol crush, though, post OPEX vol crush, IVR is now a 2 in ZB. It's now a 16.3 in ZN, not quite as low. I think it just goes to underscore that while this isn't a great place for the typical tasty methodology of 45 in, 21 out, looking to sell volatility when it's through the roof, it does provide traders an opportunity that if they want to take some directional bets with longer term duration, vol is as close to cheap as it'll ever be here over the past year. And so this is the time to place those, higher convexity trades.
I rolled my longer end exposure last week. IVR was 7. So not quite as cheap as here, but of course the price was lower too. So probably a give and a take there. So at this point, I'm basically looking for the bottom of that range to hold, as I have been really for a few months now, since the last time that it was tested. And now I'm just watching. I'm just watching to see, because I am now loaded up for another 53 days here. So until I have to think about it again. So
not quite there, but that is something on my mind this week because I'm just particularly for ZN, because the way I'm playing ZN is with what I call the double bowl. It's where you're short a put spread and long a call spread at the same time. So I'm basically selling the put spread to finance the buying of the call spread. And that has a strike of 114 on the upside. So the short put spread side is fine, right? That's at 32 DTE. But the long call spread side, like if this starts to tick up into like 113.20, 114, because it's the top side of the recent trading range for both September and October, it would be prudent where even if we're not at 21 DTE, just kind of take the ball, whatever profits that we may have, and then use that to kick out duration, as opposed to being too cute with this, because the short put spread side could still work even if it comes in a bit. But if we get away from 114, this call spread could ultimately expire worthless. And I just got too greedy when, as we flew too close to the sun there.
Yeah.
I think that's the consideration this week, right? If we have a topside breach or, poke up into the top side of recent trading ranges for notes or bonds, it's a good place to reset your trade depending upon your time horizon or duration. And then ultimately, your risk parameters, because if you're at 118 or 119 in ZB, that longer term bottom story, Ilya, at a 2 IVR, let's get crazy. Let's look at 130 calls that are expiring next December.
Yeah.
Seriously. That's not, why would we even be, we can't go out that far, but ZBM6, can we buy the 125? Yeah, we could buy the 125, 127 call spread it for 7 to 1. risk to reward,
Yeah.
keep that in the pocket.
Yeah.
All day long.
Yeah. I mean, that's sort of how I'm thinking about this now. Is you can get into a lot of bond exposure very, very cheap. If it expires, worthless. Okay. But if the Fed is really going to do all the cuts that the markets think the Fed is going to do, and that the Fed is going to have to come around, there's a lot here. There's a lot of meat on this bone.
Can you remind me how many cuts are priced in? Not priced in. I'm looking at that. You remind me how many cuts the Fed has told us they're giving us through the end.
Well, the Fed has told us they're giving us a single 25 basis point cut next year.
Mm-hmm.
If you presume that December is a go, that's what holds, because the Fed had 3 cuts for this year, which they announced in September with 3 meetings on the board. So either one of the 3 meetings was going to be a 50 basis point move, or they were going to be evenly spaced cuts, because of course September was a regular cut as all of this was announced.
How many cuts were we supposed to get in 2025 at the start of this year?
50 basis points.
So it's not like the Fed and the markets were wildly divergent this year. We've gotten 50 so far.
No, I mean, the markets at one point were at much headier numbers. I mean, when we get to looking at where we were in April, let's say, we were looking at much, much larger numbers. But at this point, that's not where the market is. I mean, at one point, we were at 140 basis points for this year and next.
Yeah, we have 4 cuts priced in between now and the end of next year. So that includes a potential cut in December of this year, 79%. If it doesn't come in December, then you're probably getting it in January, which is priced for 96.5. But then again in April, July, and then December. And then you get no more cuts in 2027, according to Fed Funds futures. And then in October of 27, you're getting your first hike. So I think if the market's telling us that it needs 3 by the end of next year, not including what we get in 2 weeks' time, and the Fed has 1 penciled in, they don't need to give us 3. They just got to give us 2.
Yeah.
Right? Directionally, they're moving closer to what the market wants. They're acknowledging that the market is directionally correct, maybe not magnitude-wise, but directionally correct. Bonds just keep on pushing up. I mean, if the Fed were to come out and tell us, like, yeah, we probably need 3, maybe 4, bonds are going to go wild, but for the wrong reason. That's going to make the S&P position look quaint.
Yeah. I mean,
comparison.
If suddenly in December, this is a thing I've been entertaining recently, because it seems like a bunch on the Fed don't really want to cut next month. So if you get in December this kind of give and take, where the Fed doesn't cut, but updates the summary of economic projections, not to say 50 basis points next year, which would be the cut that they just didn't do in December and the one they already had. But if instead they say 75, they will effectively be where the markets are. Now, that's not materially market moving, because the markets are already there. Now, what if instead you get the cut and the Fed comes back and goes, well, we gave you the cut. We can't see any further because fog and data. So we're still at 25 basis points. And the market is still at 75. That's a disappointment. And so if the markets after December 10th end up fading hard because the summary of economic projection says, nope, nothing has changed, you only get what we said in September and not a basis point more because we can't see anything, that's not going to be the kind of cut that gets anybody happy about buying risk.
Because of how low volatility is at the long end of the curve, there are ways to set up strategies. Like, what if we just get off of the exceptionally low IVR level? I went to tlt.ivr on the platform and it's 1.88 now. So we'll just call it 2. We're in the second percentile for volatility. which effectively means that volatility has been higher 98% of the time over the past year.
Yep.
There are ways to, if you're playing for a vol reversion strategy, let's say that you think, okay, this is pretty much as low as it gets, right? You could have negative IVRs. That's possible. You know, if we had a -5 IVR, it'd be that volatility is now 5% below the previous low point of the past year. But let's just say we think that this is a low point here. So we want to put on a long volatility trade. You could do a reverse iron butterfly. So if we were to head out to ZBH6, and let's say that we were partial to thinking this is something that could be prudent to do around a Fed meeting, where a Fed meeting on December 10th is going to lead to vol being repriced away from its low IVR. I would go out to 18 days. I could do something like this reverse iron butterfly, which is a long volatility option strategy with 4 legs. We are long both a call and a put that are effectively at the money, long the guts, and we are short the wings. I'm going 2 points wide here. If this was the cut of anyone's jib, which it's not mine at the moment, but it could be shortly, it is a 63% pop, where you're looking at, roughly speaking, a little bit better than a 1 to 2 risk to reward. Something to think about. It's not a trade that I have on. I like my long bond exposure. I like that I have my long staggered bond exposure right now. But as we think about the Fed, if I wake up tomorrow and I see a negative IVR reading, the temptation will be too great not to put something like this on, thinking that maybe vol's underpriced, then going into a Fed meeting where we are flying blind. We're flying blind. We're not going to have any more big data releases before then.
We're going to do it live.
Yeah. Yeah. I could finish the rest of that quote, which I am partial to do when we're in the green room, but not here. This is a family show, Elia. You know what's nice? Sometimes technicals work out, and they've given me a lot of hope in gold and silver this year. And this triangle in gold really kept me in things over the past.
I was pretty happy that I stayed long here, and pretty happy that I ended up buying silver when we did that last week.
See, I don't mind being on the opposite side of you as equities. That's worked out well enough for me this year.
Yeah.
But it has not worked out well for me in gold and silver, to be clear. Right. And even not just like a directional perspective. And I've said this with Jamal too. When we are on the same page, I'm making money. When we're not on the same page, you're making money. For the bulk, there's like a chunk of 3 or 4 months this year where you guys were like, yeah, the vol's through the roof and like this thing is just going to drag. So I'm just going to sell puts instead of buying calls.
Yeah.
And those are both long delta views, but you were making money while I was just, throwing away premium in polite terms. But it seems like there's agreement again. And agreement has catered well. So
and it's technical agreement again. Like we were looking at this last week and going, this technical setup does not look like other risky assets. How come stocks are selling off and Bitcoin is crashing, but this is holding? This is a different animal here suddenly.
No matter how you slice it, no matter how, you can slice it however you want. It's more art than science. But the way I'm slicing this up, Elia, it looks like it's starting to break out. We haven't cleared the high from last week at 4169.60, but we're only about $15 away from doing so. Vol really hasn't come off the board here. It's kind of sticking around and staying firm throughout this recent episode, which is not dissimilar from what happened previously. So I'm still in at 29 DTE. If we see a pullback over the next session or so and we get back into 41.15 or so, I'm going to use it as an opportunity to get out into like the 64 days to expiration. Because this thing does look like it wants higher, and playing for a move up to 4,300 and ultimately 44.25 or so, I still think is the prudent thing to do, which is why I'm still leaning long the 4,350, 4,400 call spread here in the follow account.
Yeah. I mean, I'm outright long the 1 ounce future. That's going to be helpful, hopefully, to manage while the markets are a little bit choppier, so you can do things overnight. And just
trading the 1 ounce future, you're just trading it directly because there are no options. But
there's no options. No,
that's kind of, I don't want to say it's but it's similar. And I've just playing with the execution on it. It's kind of like trading a spot currency.
It's exactly what it's like.
It's brilliant.
And that's why I like it. It's exactly like the way that I've been trading currencies, which is outright M6 futures, M6E, M6A, M6C, B, whatever. The only one I haven't done that with is the yen, because there's not a micro 6J that's that nimble.
Yeah.
But euro, pound, Aussie, Canadian dollar, oh yeah.
We have the gold contract here up 0.87%, 41.51. Silver deciding to extend its legs again here today, which here we have on Friday last week, another dip into this 1 month, 50-day moving average zone, which is, I suppose we'll call it like the fourth instance. August, we had 2 occurrences. You have this larger extended occurrence here in October going into early November, but nevertheless was a good accumulation point for longs. And so with that long lower wick on Friday, today's rebound, of course, not fully capturing the move because of when the market actually rallied here. We're now seeing the downtrend break in silver ever so slightly, trying to churn through it, trying to ward off a double top.
Yeah.
$55 looks like it's in focus. I'm still staggered at 29 and 64 DTE. So there's really nothing to be done here. The 29 is at the 50 and a half call spread, which I want to milk for a little bit longer. The other one is percolating up at 55 and a half. So I'm ready for a run back to the early high in both gold and silver. I'm a diagonal guy, so this is breaking, looks like it's breaking out. And this looks like a little bit of a bullish falling wedge here on silver's shorter term time frame. That would be fun this week. Crypto gets back to, Bitcoin gets back to 100K, silver's back at 55, gold's at 44. Stocks don't do anything. That's the market for Thanksgiving. I'm ready for it.
That would be very interesting.
That'd be a very interesting market. I'm ready for that if that occurs.
Yeah, I'm watching maybe about 89,000 on Bitcoin, something like this. We're clawing at it now. If it gets over that, I might have to get out of that short also.
We're going to have to go over to energy now because we have about 10 minutes left, which today oil up, nat gas down. Not rooting for war here by any stretch of the imagination. But I am a military tea leave reader, which today across the comms came the news that Southcom, our military operations that oversee our efforts in, say, the Caribbean and around a country like Venezuela, told members that they should not be expected to take any rotational leave over the next 10 to 14 days. Why wouldn't you be allowed to leave your station if you're operating in the Southern Caribbean, given the news flow that we've seen recently? 1.31% bump here in oil prices today. There's also some news out of Eastern Europe, of course, with Europe and Ukraine rejecting the American ceasefire and peace deal. I say American because depending upon who you're listening to at the State Department, either Marco Rubio himself or the State Department spokesperson, it's either an American plan or it's a Russian plan that America signed off on. I don't know what the answer is there.
Which is interesting because over the weekend, they all came out of that meeting in Geneva and said, yeah, we've gone ahead and amended all of this. And now the Ukrainians are vaguely on boardish with this other thing. But that first thing, yeah, that's a no-go.
Yeah, it was a no-go. Whether or not this is contributing to the rise today is another story. Volatility is not exactly perking up, although it is off of its lows from last week. So vol, even though price is churning sideways effectively, we're at 58.85, Ilya. The lows in vol last week came right around these levels. Not even last week, 2 weeks ago on the 12th. So vol is elevating itself slowly but surely in oil markets. It's inflating. I'm still of the mindset that directionally neutral is the way to go. And so I have this 55, 53, 65, 67 iron condor that's going to need to be adjusted here. And that's at 22 DTE. So this is going to need to be fixed up today. But the other thing that I'm playing with is in keeping our eye on what's happening with Southcom, looking at potential geopolitical hedges for around the holidays and thinking about what $1 or $2 or $3 spike in oil prices could mean in the event that we actually start shooting tomahawks at Caracas. And so at 4 DTE, long the 63, 64, I'd be comfortable looking at 11 DTE as well, long the 62, 63, maybe taking on a little bit more risk there. If I wanted to diminish that, I could go back to 63, 64, but risking 1 to make 12 in the event that we see a temporary expansion of volatility and movement upward in prices. I know I've been talking about this for the past week and a half, but it still seems like the chess pieces are moving on the board to get to that location where we have military action in Venezuela.
I mean, are you thinking sort of Grenada type of activity here? A few days?
I don't know what kind of activity. We just bombed Iran, and my friend the Ayatollah, I know, is very busy, not responding to me on Twitter, but I would have thought there would have been a more significant response with Iran with respect to U.S. proxies or bases in the Middle East than whatever Venezuela has to offer. So, and given given the balance of risk in terms of global oil supply, eliminating Venezuelan supply from the global markets is a drop in the bucket compared to what Iran could do to the Strait of Hormuz, like literally a 20th. So I'm not expecting a big bump here, if anything at all. Just vol expansion, $2 or $3 in the moment.
Yeah, I mean, I'm a little bit short here. It hasn't really showed me that I shouldn't be, at least for now. And so I'm watching it closely. We're kind of scraping the underside of the range that's held. It's been kind of a slightly downward tipped range. So far, what we've managed to do today was undo Friday's sell-off and not much else. So I'm sitting on it for now. I don't have a whole lot of capital tied up in it. We'll see. But so far, it's quiet goings. Now, Venezuela's output is not exactly pivotal. So would it be a lasting rally in crude? Probably not. But obviously, with the fog of war, you never know. And you never know what we're trying to do and what the object of all of this massing of force is ultimately going to result in.
Freedom and oil. That's what they're there for, Ilya. Give the Venezuelan people freedom in exchange for their oil with their 300 billion barrels of reserves, the largest in the...
I mean, that might actually end up looking like lower oil prices because it's not exactly a contest if the U.S. decides that it wants to wade in there in earnest.
You know, with 22 DTE on the board for the short iron condor position, the question, of course, is begged, what do we do for the next position? Is it still worth doing something along those time horizons? At 45 DTE, we could go underneath the yearly lows. We can go up to that 65, 67 area once again. It's still looking like a 62% probability of profit. It's better than a 3-to-1 risk to reward, which was effectively the last iron condor trade.
Right. And we're just looking, and there you're just looking for vol expansion.
No, I just want this to stay pinned. I don't care if it expands or not. I just need this thing to go sideways right around $60, which has been the just yeoman's trade since June.
Because that might be the other thing is essentially reversing an iron condor to look for vol expansion.
Right. And that was the play in bonds, right? The reverse iron fly, pinching the guts and looking for a move just away from current price. It doesn't matter which way you go. Natural gas is coming in today, which is down 2%. A very similar story here. Natural gas is not quite at our perspective level here. We're at 32 DTE, but this continues to slowly work. Ilya, the idea here is that with natural gas, the market's giving you pricing still that effectively allows you to make a trade that you're not going to break the yearly lows or the highs at any point before the end of the year. So if I wanted to go out to say 32 DTE and put on the trade that I have on right now, I wanted to put it on fresh. We're still looking for that vol contraction, that sideways chop. Basically a 3-to-1 at 67% probability to profit. You kind of got to take those trades all day long. So it's directionally neutral. It's diversifying my exposure. Otherwise, natural gas doesn't march to the same drumbeat as anything else. Which you mentioned the dollar today, not marching to the same drumbeat as crypto, stocks, precious metals here. The yen, of course, continues to weaken in the teeth of intervention, but the dollar, in fact, is not exactly perking up across the board or struggling that much. We're kind of
it's just sitting.
What do you make of the dollar in a week like this without many catalysts or much event risk to drive the narrative?
I think if what we're caring about here is rate cut odds for December solidifying, you should have seen a weaker dollar. And you're not. And that's very interesting here for two
cut
reasons.
odds up, lower treasury yields, and the dollar's not weakening?
Right. Now, that can be for a variety of reasons, none of which are good. So the first one is that this move in rate cut odds is not the real move. And the second is that the market is still so concerned with risk sentiment that it doesn't want to bet against the dollar because of haven grounds, because it still wants that sweet, sweet liquidity in the event that something goes awry. And in either of those scenarios, you got trouble here. It's a very glaring absence of confirmation to a lot of the other things that we're seeing.
Oh yeah, you and I are going to have to talk about this more later on overtime because you and I are running down the clock here for Futures Power Hour. Just quickly for the calendar tomorrow, Ilya mentioned that there are retail sales, there's PPI. There's a lot of random small U.S. data releases, including that U.S. ADP report, the weekly release.
Yeah.
So we're not quite out of the woods just yet. Certainly some things paying attention to, but we'll cover that more later on. For the time being, you and I are done. I'll be back in an hour to wrap up the day here, I think with Mike Butler for our last call, and then you, me, and Radigan will be together to finish out on overtime. So we'll see everyone in just over 60 minutes. Until then, good luck trading. You're watching Tasty Live. Come back after a brief break.
See you there, everybody.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Now, welcome to the Monday edition of what it is that we are trying to do. I'm so glad that you are here because it is only because of you all that we can do what we do. So thank you guys so much for being a part of the network and being a part of this show. If you are watching over on the Tasty Live network, I would actually bounce on over to YouTube. If it is real time, if it is right around November 24, 2025, give or take, then you can communicate with your brethren who are also watching the program right at this very moment, man. You can celebrate. If you are a bull, you can commiserate if you are a bear. But of course, it is a good time had by most. And of course, this is the holiday version of the show, I suppose, since we have a holiday shortened week. We only have a full day today and a full day tomorrow, and then you guys get to enjoy the Tasty Live morning show on Wednesday, but then they're sending the rest of us on the B team home for the holiday. So I've got you guys today, I've got you guys tomorrow, and then that's going to be that. We can all dive headfirst into chocolate pie, pecan pie, pumpkin pie, whatever your pie of choice might be. I would probably go... I mean, if you press me on it, I'd probably have to go pecan number 1, pumpkin number 2, my mother-in-law's chocolate pie number 3, which is a pretty solid roster if I don't say so myself. But anyway, I digress. So Josh, bring us into the market. Let's take a look and see how we're doing here. You've got, yeah, man, look at this market. This market is looking good. Let's grab a little magenta for Magenta Monday. Happy Magenta Monday to you guys. I apparently did not get the memo as I'm not wearing my magenta polo right now. But you've got E-mini S&P's up 96 on the day. You've got the risk-free instrument, also known as the NASDAQ futures, which is an extremely high-risk product, up 611 on the day. You've got the boomers up 220. You've got the Russell 2000 futures index up 39. Man, you got bonds up 18. You got notes up 4. You got oil up 79 cents. You got UB40 up 24 ticks. You got the shifties up 38 with gold futures up 38.5. The British pound is up. The euro is up. The crypto bros, right? Crypto bros are up. Bitcoin up $1,100. You've got the Hunt Brothers. Where Hunt Brothers at? SI. Silver up 82 cents. Man, everybody is excited. Everybody is happy. And why wouldn't you be? I mean, this is the Thanksgiving rally, guys. Like, this is it. Like, you think the Santa Claus rally is where it's at? Nah, man, that's 2000 and late. It's all about the Thanksgiving rally, which, of course, starts today. And by starts today, I mean, there's about a 40% chance that we close unched here in the next couple of hours. But anyway, let's go into, now that would be something. I don't really think we're going to close unched. But if we did, man, that would really be... Anyway, I mean, it would have to be Taco Monday at that point for us to close on. But all right, let's go into the portfolio. I have a couple of things that require my attention here today. And then I don't really think that, just using a little bit of common sense, which we struggle with often here on the show. But I think just using a wee little bit of common sense, I don't love the idea of laying out a bunch of new trades on a holiday week like this one. I think today and tomorrow is going to be kind of just cleaning some things up around the edges, kind of seeing where you guys are at and just kind of, monitoring where the wind might blow. I don't know that I necessarily want to put on a bunch of new trades, but I may not be opposed to maybe an extra trade or 2 or 7 around the edges if something makes sense. Because even with volatility getting smashed today, you can see that you've got volatility futures down $1.40, and then you've got the VIX spot volatility down 262 on the day. So that's all the way down to 2080, which it's been a minute since we've had volatility down almost $3 on the day, and it's down to 2076. Like, it's down to 21 or thereabouts. It's been a minute since that's happened because volatility has been in the teens for quite some time. And so maybe we'll put some new things on. It's not necessarily on my radar, but we'll have to wait and see. I don't think we have any earnings coming up this week. Let me take a quick little look here. It wouldn't really make a lot of sense for us to have earnings this week, just given the holidays and things of that nature. Wait a minute. Baba has earnings? Well, it's a foreign company, so it's a little bit different. I mean, you've got the U.S. Thanksgiving. Obviously, not every country in the world is going to be celebrating that the way that we do. We got Baba on tomorrow morning. I'm not touching Baba. I mean, I'm shocked that they're still around, so I'm definitely not touching Baba. DE, what is that, John Deere? I think that's, Deere & Co. John Deere, same thing. That's going to be Wednesday before the bell. I don't know. Maybe we'll do a little John Deere. Can we do a little John Deere? Is that the same thing? Deere & Co.? Oh, Josh is telling me that Best Buy has earnings? Bro, why you got to do me like that, man? Bringing up Best Buy on the show. Best Buy has earnings coming up? There's no way. There's no way. Wow, tomorrow morning, Best Buy. Are we really going to do it? You guys saw, well, you guys didn't see it because the team's chat came into me. You guys can see that. But for the record, I should be recording this on my end too. But for the record, this would not be even my trade at all. This would not be my idea at all. This is 100% Josh's idea. Dell? Josh is telling me that Dell's a privately held company, bro. Dell's not a public stock, right? Dell's been private since like 1989. They're after the bell tomorrow. Yeah, I'm not touching any of this garbage, man. Josh is trying to take me down. I'm not going to let him do it. I'm 100% not going to let him do it. But anyway, maybe we'll let him do it. So let's go ahead and let's do a couple of things in the portfolio, though. You can see we've actually got some green on the screen. You can see we've actually got, I mean, look at these index plays here with the futures options. Man, it's a thing of beauty. Look at MES, look at MNQ. It's just a beautiful thing to witness. And it's a beautiful thing to be a part of. Like, I'm just excited to have the opportunity to be a part of these two trades. And then Qualcomm's looking pretty good. You know, the P&L Open Bros, I'll tell you what, the P&L Open Bros, they got a little something. They got a little something there with Starbucks. But man, the P&L Day Bros, which that's our brethren, of course, they're fighting back. Like, you thought that, you know, this was a situation where we were all alone and had nobody to fight with us. That is not true. That's not true at all. We've got the P&L Day Bros that are going to be battling against the P&L Open Bros basically till the end. Like, this is going to be all the way through the whole deal. Lost season 1, lost season 2, 3, 4, 5, 6, all the way to the very end. Flash forwards, flash backs, flash sideways. Like, you have no idea what's going on. But they're going to fight to the death, and we'll see who reigns supreme. But MES and MNQ, those are the two shining stars here in the portfolio. And I see you guys in the chat, man. Look at you guys. Man, you guys are pumping that algo the way that you should. Please put comments in the chat. It doesn't even have to make any sense. The algo doesn't know. Like, the stupid robot algo doesn't know. Like, trust me, just put stuff in there, and then that will push this show out to more things and more people and more traders that are looking for, you know, content to help them actively manage their portfolios. Like, that's what we're trying to do. And so push it out there. Hit a like on the stream. You could even subscribe to the channel. You could do all these things that would help us quite a bit. So let's see. Let me go ahead and let's go to MNQ first. So MNQ, I just glanced over and I saw Steve Aguilera says for the algo. That's what I'm saying. Like, that's all you need to put in there. It doesn't know. You think it knows? It doesn't know. And by it doesn't know, I mean it knows way more than we think it knows. And we already think it knows a lot. And so maybe be a little craftier with the comments. But yeah, I mean, you guys are doing it, man. You guys are, but mix it up a little bit. Like, shock the muscle just a little bit. But this is good. Look at you guys, man. For the algo. That's it. That's it. Like so you've got Kevin Costner, right? For the Love of the Game, which I'm going to say, is that the best baseball movie of all time? I think it might be. Now, I'm not trying to start an argument. Like, people get very, very fired up about this, as they should. But For the Love of the Game is definitely in the conversation. Obviously, The Natural is up there. Obviously, Major League is up there. Obviously, Bull Durham is up there. Like, I'm not going to fight you on any of these things, but it's definitely in the conversation. And now we've got our version of For the Love of the Game for the algo. There you go. Josh said the Sandlot. Yeah, Sandlot's not even in the top 5. And so, all right, let's go ahead and let's see. Let's go to MNQ. So MNQ, this is, I mean, you know, you've got the NASDAQ up 620. Even I can't mess that up. Like, even I can't mess that trade up. I mean, if I keep talking about it and this thing does reverse and close unched, then we may be kind of in some hot water. But right now, I mean, this short put that we sold for the NASDAQ futures here is working out quite well. It's working out quite well indeed. You can see we sold it for 433. That's 433 points. And of course, for MNQ, the multiplier is $2 per point. And so this ends up being a really, really nice trade for us. And we picked up about $500 on the trade. We're going to close it right now, of course, because we're actually beyond 50% of max profit, because the market has been so strong today that we were able to kind of eclipse our basically top end of our profit target at 50% of max profit, which can happen from time to time when, you know, you have a big day like this, you weren't able to get to your portfolio, you're out there living your life or whatever, you know, crazy stuff like that. And you actually find yourself in a spot where you go beyond your profit target. So, you know, I mean, I wouldn't really think twice about it and don't kind of try to squeeze even more juice out of the orange. That doesn't really make a ton of sense to me. I mean, this trade is over and this trade is done with. But I do want to make one quick comment. 11 minutes. This is one of the reasons why I've said this on the show so many times. And my favorite strategy is a short put. And one of the reasons why it's my favorite strategy is because we talk about, you know, you can take the shares if you need to, you can play the positive drift, you can do all those kinds of things. That's all true, of course, and that's probably the number one reason why it is my favorite strategy. But here's an altogether different angle as to why I really, really like this strategy. So if we go to, like, if I just go to like the VIX, right? If I go to like a chart of the VIX, And you guys can see if I go to, let's see, the video looks pretty good. Video's holding out, so that's good. If we look at the last couple of days on the VIX, right, just zooming in a little bit, you can see that a couple days ago, I mean, the VIX was up to 28 and 27, 26, blah, 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 right? There was obviously a big spike in volatility. We were all here for it. It essentially affected each and every one of us. Okay, well, inside the tasty world, right, in a tasty universe, this is what we want. We want volatility to spike so that we can sell premium with a high volatility regime. Because, again, as we've talked about ad nauseum, volatility doesn't like to live on the higher end of its range. It likes to eventually contract. It likes to grind lower. It likes to do all these things. So selling volatility when it spikes doesn't guarantee that you're going to make money, of course, because the spike could just be the first spike of many spikes. That's very possible, of course. But generally speaking, it wants to move lower. You know, it's eventually going to contract. I mean, this is kind of what we're pushing our chips in the middle on. Okay. If you think about that and you think about what that actually means, what is most likely going to happen if volatility does contract? Well, you're probably going to have the market moving higher, right? If volatility has a pretty, intense contraction, like if volatility moves lower quickly, I mean, today would be a great example with the VIX down 272, volatility futures getting smashed too. You've got volatility contracting very, very quickly. In that scenario, what is most likely going to be happening? You're going to have a market that is ripping higher. Not necessarily NASDAQ 600 or EME S&P's 100, but something similar to that, of course. It's very unlikely that you just have a modest move higher, or you just kind of have like an unched, like muddling through type of day, and you've got this volatility getting smashed to pieces situation. Like that doesn't normally happen. And so what type of strategy is going to be able to take advantage of a volatility moving lower quickly? Well, it's going to be something where you are short volatility, but you're also positive delta because the market is moving higher quickly alongside that volatility collapse. And so by all means, when volatility spikes, do neutral strategies, do strangles, iron condors, do other type of strategies like, jade lizards, spiked lizards, all the different lizard families and whatnot. You can certainly do that, of course. But this is why I like the short put as kind of my go-to, because I'm like, all right, if we get any semblance of conclusions in terms of the uncertainty in the world that essentially caused the volatility to spike or what have you, then the market will most likely move higher. And if it does, man, I'm going to get paid on any short puts really, really quickly. Now, of course, it's been said before, for every gimme, there's a gotcha. That's a pretty sizable gimme. So is there also a pretty sizable gotcha? There certainly is. And that gotcha is if the volatility spike is not over, if the volatility is not done expanding, then you sell that put and it could hurt really, really badly if the market keeps going down. And so, of course, it's gimmies and gotchas. You kind of have to weigh it for yourself and decide what makes the most sense for you, of course. But this is how I see it. Like, it seems like a relatively strategic way to view the markets and to kind of play, high volatility, positive delta, and what have you. So, all right, let's go in here, though. Let's buy back our short put in MNQ. So for MNQ, it looks like the mid price is 180, 150. I'll do like 183. We've talked about this many times before too. The MNQ pit's not the most amazing. But hey, there we go. We got filled at 183. So that's some pretty good stuff. All right, beautiful. So we did MNQ. Let's now go to, man, there's so many things happening right now that are positive. Like, this is good. I'm definitely not upset. Let's go to Kimberly-Clark. Man, look at this Kimberly-Clark trade. This was a Theta Trader trade, I believe. And so I appreciate you there, Theta Trader, very much. If you're in the stream today, thank you very much, my friend. I appreciate you very, very much. Kimberly-Clark, we sold a 100 put. You've got the stock at 104 and some change. And so, I mean, right now, the put is marking at $1.12. We sold it for $2.70. I'm no Jacob Perlman, but even I know that's more than 50% of max profit. So there's really not much more to say about this. I think we can kind of move through this victory lap with a wee little bit of swiftness on Kimberly-Clark. I mean, if we look at the chart of Kimberly-Clark, just quickly, when did we put this trade on? Let me bring up my trusty chains here really quick. We did it on November 3rd. Okay, so we did this trade. Yeah, we did it right after the crash, boom, bang. Look at that. We did it right after. Was this earnings related? Kimberly Clark's kind of been in the news, right? I mean, they obviously have earnings just like everyone else has earnings. But then you've got, I think the whole Tylenol thing and all those kinds of things that may have been related to this huge gap down. I can't remember exactly, but look at Theta Trader coming up clutch by selling the put basically at the bottom, and it looks like we were never tested on our 100 strike. Maybe we were like slightly tested. If I just grab a quick little Final Jeopardy pen, horizontal line, that's mostly horizontal. That kind of looks like my fence line. Now, like it's mostly horizontal, but if you really look at it, you're like, yeah, that's got some bows to it. For sure. But the 100 strike here, I love my fence. Fence is done. Very happy with the fence. Fence looks absolutely amazing. And so this has been a good trade. I mean, like I said, we got, barely tested a couple days in, but then we just sat tight and did nothing. And, there's a reason why that's the default setting. And there's a reason why that's kind of our go-to move. And so Kimberly Clark, it's over and done with. And let's close it and let's move on. So we'll buy it back for $1.20. And so, boom, there you go. All right, so Kimberly Clark over and done with. And then after that, everything else, I mean, the Target put's doing okay. I mean, Target's down a ton today, which is a little bit of a bummer. So I guess on Friday, yeah, because I was out on Friday, because I went to see my kids. They were singing at their little like Friday co-op deal. You guys remember like a month or two ago, I went for career day and I tried to explain to them what I do. And I still don't think I did a very good job of that, but we had a fun stock market game, whatever. Well, I went back cause it's kind of the end of their semester. And so they were both singing in the little choir thing. And so I wanted to be there for it. And it was really, really fun. And a couple guys there, a couple of the other dads also trade. And so it's kind of fun to like chat with them and just about whatever. And, they're buying premium and doing crazy stuff. And so I'm like, yeah, you're going to zero. It's only a matter of time, but to each his own, right? That's what makes a market. And so anyway, I digress. And so, Target, got Home Depot, got Qualcomm, and everything's looking good. I don't really know. I mean, MES, we could take off MES too. I'm going to let it sit for just a wee little bit though. Maybe we'll take this guy off tomorrow. In fact, we probably will take it off tomorrow, but tomorrow's content is not going to create itself. So we'll leave that for tomorrow. And then that'll be MES for tomorrow. And then Qualcomm's looking good. Everything is looking good. I don't really want to trade Best Buy, earnings. And so, but let's just take a look. So Best Buy, 76. Man, they're going to do it to us again. I mean, again, when you think that, let me think here. I don't know, guys. Are we really going to? Well, I'm not going to. So, okay. All right. I'm actually not going to do this because everything is stacked against us. Even I know that we shouldn't do this. And that's saying a lot because most of the time I actually don't necessarily know that. And so, with Best Buy today, so Best Buy reports tonight or tomorrow morning, right? The tricky part with trading it now is the simple fact that, we're going to be out Wednesday, Thursday, Friday of this week. So by being out Wednesday, Thursday, Friday this week, that's going to make it tricky from a management standpoint because we're going to do something today and then potentially have, not too much time to manage this trade. We have tomorrow, I guess, but that's pretty much it. And so I'm kind of thinking, let's pass on Best Buy. We're good to go with everything else. I don't really see any reason to do anything else in the portfolio necessarily. We've already cleaned up the things that need to be cleaned up. And I think I'm going to pass on Best Buy. And so let's kind of exercise a wee little bit of discipline, which is not super easy for me to do on the show, which if you've seen the show for any length of time, then you know that. But I think it's good. I think it's a good practice for us. And yes. All right, let's go ahead. Let's see. I see the video's messed up again. That's so frustrating. I don't know what's going on. But all right, let's see here. Let me try to surprise and delay somebody in the middle. If I go ahead and do, where are we at? Here we go. So Kevin Judkins in the house. Hey, Dr. Jim. Hey, Jim, when you sell premium, it is easy for Vega to get too high. Is there a target portfolio Vega Theta range? What about extrinsic? Can go negative with leaps. Happy Thanksgiving, Olive Garden. I'm not going to be doing Olive Garden for Thanksgiving. And that's mainly because I'm not calling the shots, right? Like if I were in charge here, I don't know that we would do Olive Garden. That's a little bit too fancy. Maybe like a Hungry Howie's type of deal. Maybe like, is CC's open on Thanksgiving? Like these are the types of things I'd be looking into. This is the type of research that I would be doing to make sure that everyone has an enjoyable Thanksgiving. You can pretend like you wouldn't love CC's on Thanksgiving, but you're just lying to yourself. Like you're just telling yourself a bull-faced lie. If you're like, man, if I was at CC's at 2:00 in the afternoon on Thanksgiving, I know I'm going to have an amazing time. Like I know this is going to be a really positive experience for myself and anyone else that's involved. But so no Olive Garden, but happy Thanksgiving to you too, my friend. But so when you sell premium, it is easy for Vega to get too high. Is there a target portfolio Vega to Theta range? What about extrinsic? Okay, so here are a couple of thoughts. So number one, we don't really look at Vega to Theta anymore, simply because the delta to theta range and the delta to theta ratio kind of covers the Vega to Theta ratio. And what I mean by that is this, keep in mind that when it comes to Vega or Theta, right, it's going to be the undefined risk exposure that you have in the portfolio, like the unit risk that you have in the portfolio, that's essentially going to, that's going to expose you to more Theta. That's going to expose you to more Vega. So if you do something defined risk, then obviously those things are going to be super watered down. They're going to be extremely mitigated. And you're not really going to have to worry about it too much. And so by just using the delta to theta ratio, that gives us a pretty good idea how much Vega we're going to be exposed to as well. And by that, I mean, if I'm looking at a 0.5 delta to theta ratio, that tells me essentially how many deltas I want to carry per dollar of theta, right? That gives me some semblance of the directional bias I want to have in my portfolio, especially if I happen to carry short delta. Then that's going to help me figure out how much short delta I want to carry to help kind of cover that positive theta. But the positive theta itself, we typically are between 0.1% and 0.5% of total net lick. And so from that regard, if you're up around 0.4% or 0.5%, then the reality is, you're going to be exposed to pretty significant unit risk at that point. Like you're going to be exposed to fairly significant unit risk if your theta numbers are at 0.4%, 0.5%, or of course even higher than that. And so when you think about that, it's like, okay, if I can keep my theta numbers at 0.5% or less, that's probably going to have this kind of self-correcting mechanism in it that's going to also kind of allow your Vega numbers to follow suit. It would be very difficult for me to think of a situation where your theta numbers are in check, but your Vega numbers are like totally out of whack. And so I think by just looking at delta to theta, that's a pretty good ratio to keep track of when it comes to, how many units you are exposed to. Are you overexposed? Are you underexposed? And what have you? Because at the end of the day, there's only so many things that we can keep track of. Like at the end of the day, there's only so many things that we can monitor. Like, sure, we would love to monitor every single thing, that exists out there. But at a certain point, there's too many cooks in the kitchen, man. Like at a certain point, it's like, all right, I've got my 5 or 6 or 7 things I like to monitor, and I'm pretty much good to go, kind of when it comes to that. So hopefully that helps there, Kevin. Very good question. Very, very good question. So, all right, let's go ahead and go to, let's see. If I go to, let me find the beginning. There we go. So Sam L is in the house. What's going on there, Sam L? I appreciate you, my friend. Says, happy Monday, Doc. How was the big event with the kids? Yeah, it was super fun. The singing and the chorus thing. Yeah, it was awesome. I really enjoyed it. Were you caffeinated enough and dry scooped to handle the chaos? Or did they send you straight into recovery mode? No, it's kind of a chill day for me. And so it's kind of fun, like I have a weekday where I'm really not working. I had an eye on the markets and what have you, just to kind of take a peek and see what's going on. I can't remember what happened on Friday. Was Friday was really back and forth, if I remember correctly. Right? Wasn't Friday kind of crazy, if I remember correctly? I don't remember how we closed. I could look at the chart and stuff, but I'm just trying to think if I can remember Friday. I think I remember it being pretty back and forth. And I was like, wow, that's pretty wild stuff. But Sam Al says, with this cold weather. Yeah, it's about 78 outside. It's a little chilly. Hope you're staying warm and preserving the legendary dad bod. Oh, it's definitely in preservation mode. You don't have to worry about that, especially with Thanksgiving on the docket. Oh man, we're going to be putting in some work. Extra calories are a survival strategy, not a choice. Stay cozy, stay chunky. Yes, that's my personal motto. I should get some t-shirts made. Definitely. And so Ordenu's in the house. Greetings from Italy, Dr. Jim. How was the fence coming along? Yeah, the fence is done. And so super happy about that. Very happy. Autumn is like so happy. She is so happy with the fence. Like she's like, man, it looks great. Like, he did a great job and whatever. And so that means obviously I'm in a very good spot because this was my project. Like I was the project manager here. I didn't do a lick of it, but I oversaw and overseed the process. And so yeah, she's pretty happy. So I'm obviously pretty happy. But let's see. When the VIX increases, does the price of puts and calls increase equally? Or is the VIX just a measure of put skew? Okay, interesting. So the answer to your question lies in the Vega that is associated with the different options. So with the Vega that's associated with the different options, that's going to tell you how the different options are going to change when volatility changes. And so, because remember, Vega shows us, this is how the price of an option is going to change when volatility changes. And so if the Vega is symmetric on both sides of the option chain, then you are going to be in a situation where the change in the prices should be fairly symmetric. So the question becomes, is the Vega symmetric around kind of the option chain or around that at the money strike? And the answer is not necessarily always, but as a reference point and a default setting, it's usually going to be fairly symmetric, to my understanding. I mean, we can even look at a couple of stocks here and you'll see, like if I go to SPY, let's see, if I go to SPY and I go to January, let me just find let me change my extrinsic value to Vega. And if I look at a 20 delta put and a 20 delta call, I would be very surprised if they're significantly different. So you see the Vega on the 20 delta put is 0.7. The Vega on the 21 delta call, there's not a 20 delta call, is 0.73. Okay, so they're pretty symmetric. All right, so then we're going to see essentially an equal change in the option price as a result of a volatility change on the put side and on the call side. And so that is SPY. Let's go to QQQ. And then we'll look at a couple individual stocks too. This is a very good question. And again, my base case, my null hypothesis for all my statisticians that might be watching the show is going to be, it's going to be the same on both sides because the Vegas are going to be symmetric around the at the money strike. So if I go to January for QQQ, let's look at a 25 delta. So my 25 delta put is a 74 Vega. My 25 delta call, or it looks like a 24 delta call, 71 Vega. So again, I would call that symmetric. I mean, this is not a textbook. We're not in the ivory tower. The market is a living and breathing thing, right? And so we obviously have to account for its living and breathing nature. Let's take a look at let's look at Tesla. Tesla, go to January. Let's look at and let's look at a 35 delta. So 35 delta put, 59 Vega. 35 delta call, which isn't even on the screen, but let me scroll down a little bit. 35 delta call is going to be, which is right around here. Yeah, same, 58, 59. So we're seeing very symmetric. We're seeing, a very symmetric relationship on the put side and on the call side. And so that is, from a option price change as a result of volatility change, I would expect it to be pretty similar on both sides of the chain. And again, if you ever want to know for a specific name or a specific market, just pull up the chain itself, right? Just spin some chains yourself. Again, you could go Rooster, you can go Wood, you can obviously go Man in the Box. We don't even talk about Man in the Box nearly enough on this show. You could do any of those. Or you could look at the actual chain on the screen in your tastytrade platform, and it will tell you everything you need to know. And so hopefully that helps, my friend. The Preston's in the house. What's going on there, the Preston? Dr. Jim, you are the man. What are we going to do with Microsoft? Can we get it back over 500? I don't have a position on Microsoft. And so I have no feelings about Microsoft either way. Microsoft can do or be or, kind of morph into whatever it wants to as far as I'm concerned. Microsoft back over 500. It was up over 550, 553 it looks like was your high. Ooh, that's a pretty nasty looking chart. I mean, I'm no technician, which I've made very clear on this show many, many times before. But that doesn't look too good to me. Like that little chart, I'm not sure what this pattern is. This looks like the rope-a-dope, right? This is kind of, you got the rope and then the dope, right? And so, yeah, that's not looking too good. That's not looking too good at all. But, 500, you're only asking for what, right here? You want it right about here or thereabouts? Yeah, so, you're just looking at like one of these jobs. And then it skyrockets up. There you go. That's all you need. And so I don't know if I can help you with that too much, but, I'll send positive vibes your way. And so there you go. Let's see. Oh, Sam L says, Doc, your beloved Zoom has earnings. No, I can't stand Zoom. Are you serious? I can't stand Zoom because the videos and this and that, blah, 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 blah. I mean, I don't know that there's anything on my end that is happening. I've done all that I can possibly do. And so yet we still have, the 1995 internet connection from time to time. But so for that reason, I feel like I should be bearish on Zoom. But they have earnings tonight. I'm not going to trade them for the same reason I'm not going to trade Best Buy. But time to see if Zoom still has more than 3 people using it, using armed with that legendary 2-color pen, green, magenta, and somehow pink too. Yeah, we've got the magenta, we've got the yellow, we've got a little green, potentially. And yeah. So I'm gonna pass on to him. Let's see, Brian's in the house. What's going on there, Brian? I appreciate you, my friend. Brian says, Dr. Jim, I have some kind of mold or algae growing on my fence here in Florida. What should I do? I don't know, but I'm gonna give you my number to my fence guy. Like, we'll take this offline. He'll set you up. He will 100% set you up. And by set you up, I mean, what is it, like a 45-minute job? Give him a week. He'll get you all squared away. You will not have to worry about it at all. And he'll take good care of you. And so let's see. DTM Lau's in the house. What's up, DTM? Appreciate you. Joel James in the house. What's up, Joel James? Man, you know I appreciate you very, very much. Brian Dowdy. Hey, Dr. J. I ended up assigned on my IBIT, which I wanted. I'm thinking about how can I collect premium without getting run over by selling premium some way. Okay. How would you do it? My trade price is 50-50. Okay. So I'm not exactly sure what you're trying to do. I mean, thanks for all the context you gave me, but you're saying I'm thinking about how can I collect premium without getting run over by selling premium some way. Well, I mean, what I'm not clear on is, are you wanting to like sell puts to be more bullish, or are you wanting to sell calls to minimize your directional bias and kind of, control your risk to the downside and bring in some premium? Those are obviously two very different pathways forward through the forest, right? They're going to lead you to very different destinations. And so, if you're in IBIT, like you said, you already took assignment. I mean, obviously, if you wanted to sell more puts against IBIT, I mean, that's not a terrible strategy. I mean, it may not be the greatest strategy ever, but if you believe that crypto has bottomed out for the time being, this could be a very good strategy. And so, looking at, Bitcoin it was over 120 at one point, right? 125, I think. And so now that it's 85, 87,000, it's like, well, I mean, if this is a local bottom, then there could be tremendous upside from here in the short to medium term, where, it goes back to 90, 95, 100, and obviously even beyond that. And so, I don't know that it depends on what you want to do, right? Like if you're trying to add risk to the position, there's no way to potentially control not getting run over. Well, actually, I take that back. You could sell put spreads, right? Like if you wanted to collect some premium and you're afraid you're going to get run over because crypto obviously collapses from here, then just sell spreads. Like you don't have to sell a naked put. It's obviously going to eat into your profit potential a lot. It's going to eat into the premium that you collect a lot. Like for example, you could sell, like if I wanted to do something naked, I could just sell like a 48 put. But if I wanted to do a spread, you do like a 48, 43, you probably got to bring it in a little bit. That's not really a lot of premium. So I sell the 48 put, I'm picking up 285, right? 37 delta, probability of profit is 65% or even north of 65%. If I want to sell a spread, maybe I'm selling a 50, 45 spread, right? I'm picking up $1.83. So now I'm risking a little over $3 to make $1.80. And so, for that reason, this obviously protects you from getting run over, where if it does collapse, you're only going to be out the $3 on the defined risk nature of the spread. But keep in mind, with the 48 put that we were going to sell, you're collecting significantly more, collecting another $1 from what you have here. You have more space between where the stock is now and your strike price, and your break-even point is even more favorable than it would be, obviously, with the spread. But if crypto keeps going down, then you're going to be in the hurt locker. Like it's going to be you and Jeremy Renner and whoever else was in that movie, which I'm sure there's some other A+ or A-liners in that movie. I can't think of any at this time, but there's just going to be you two plus others in the hurt locker, and that may not be super amazing. And so when it comes to selling puts, that's one way to look at this. When it comes to selling calls, now you're capping risk. You're capping returns. You are controlling risk. Maybe you're selling, I don't know, maybe a 55 call against your shares now. And so now you only have upside potential up to 55. So it depends on your personal bias in the asset class, in crypto itself. If you want to leave yourself a lot of room to run to the upside, selling the 55 call may not be the way to go. Like that may not be the best option when it comes to leaving yourself more potential room for appreciation. And so as it always is, it's gimmies and gotchas. As it always is, it's pros and cons, and you have to decide. But when it comes to not getting run over, when I hear that, that leads me to believe that you want to sell puts, because I would never, like, some other people may look at it this way. This doesn't really make a lot of sense to me, but a lot of people look at covered call situations, and if the stock runs up, like to where the short call is in the money, they would classify that as getting quote unquote run over, which makes no sense to me. That makes no sense to me at all, because you're still making money. Like, how do you get run over and have a profit? That doesn't even make any sense. Like, how do you have, bus tracks on your back and it's like, I also have $80? Like that doesn't make any sense at all. Now, of course, if you're selling below your base, just locking in losses, okay, that's a more complicated situation. I understand that. But just generally speaking, the way you're describing it to me, selling a call above is not, there's no potential to get run over. You may have an opportunity cost. You may not make as much money as you would have otherwise, but you're not going to get run over. And so running over or getting run over to me is kind of, where you're double dipping George Costanza style on the long side. So you can sell a put, you can sell a put spread. Those are a couple of ways I would look at it just to keep it kind of simple. And so hopefully that helps at least a little bit. But let's see. Wills 576. Man, I appreciate you, Wills. I'm going to send you that cash that we talked about for putting this comment in the stream at this very time. Wills says, best show on the network. Don't ever change Dr. Jim. Man, I won't. And it's very clear I'm not going to change the choppy internet. So you guys are going to get that to the end too. So you get me, you get a little 1996 internet connection, and that's just what we got. Like, that's what we got to work with. And now it's fine. It's weird. It's so weird. It's like the midway point of the show. Like, I don't get it. It like needs to rest. Like, I think that I'm working my internet too hard. Right, like I think that we've been doing too much circuit training on the internet. We need more rest between sets, right? We need to improve the performance of the internet, and the best way to do that, as we all know, who spend a lot of time in the gym, is you increase your rest between sets. And so we need like a 5 to 6 minute break right around 2:45 or 2:50 or so. But anyway, I appreciate you there, Wills. Thank you, my friend, very, very much. Danish Dynamite, Dr. Jim in the house. Hope all is well. I mean, I hope all is well with you too, my friend. Thank you so much for being here and being a part of what it is that we do. Margin Walker, what's up, Dr. J? I appreciate you, my man. I appreciate you. Appreciate me. And thanks for being here. Really, you guys, the core position. It's just like I couldn't do it without you guys, man. I could not do it without you guys. I just appreciate you. Let's see. DTM Lao says, Dr. Jim, would you know how owning SGov is treated in the portfolio? Some treasuries won't tie up BPR in the portfolio. Do you know if SGov does the same? Yeah, I think you get like 93% buying power relief. For BIL, SGov, I think they're treated pretty much the same in that regard. Maybe I'm off by a little bit, but I don't think it's too much. Like if you buy SGov, if you have a $20,000 portfolio, let's say, and you take $20,000 and you buy SGov, and okay, Ryan said the choppiness has gone down. Great. Okay, perfect. If you buy some SGov, right? If I buy some SGov or I buy some BIL with $20,000 and I do all of it in $20,000, you're going to get 93% of that back for buying power. And so that's going to allow you to sell premium. It's going to allow you to do different things. The one thing you got to be careful with is when you put, and I don't have the exact answer to this. You can email support at tastytrade to help you with this. If you're trading futures, you have to understand that futures positions that you put on, they eat up part of your cash that's in your account. And when you buy BIL or buy SGov, that also ends up, tying up the actual quote unquote cash that's in your account. So you may not be able to do as many futures positions if you are a futures trader along with selling premium. But yeah. So anyway, hopefully that helps a little bit. And so, but yeah, you should get most of the buying power back. So Jared Kramer's in the house. Dr. J time. What's the go-to side for your Thanksgiving, sir? It's stuffing or dressing. But again, I'm a bit of a dressing guy now. Like I'm kind of a dressing guy now. And so, it's stuffing or dressing. And having been in the South now for, it's crazy to think that I've almost spent more time in the South as an adult. Well, I mean, I've only been an adult since I guess 18. I've spent most of my adult life in the South, not in the North, even though I grew up in Detroit, grew up in the suburbs of Detroit on the East Side. And so it's crazy because dressing is unheard of in Michigan. Absolutely unheard of. Like dressing is like, that's what you put on your salad, bro. Like dressing is like, it's Thousand Island. It's ranch, right? It's a little French or whatever. It's not like a dish. It's not like something that you have on the side of Thanksgiving. But then you go down to the South and they're like, what's stuffing? So it's very much kind of, like you guys think like Republicans and Democrats are bad. And you guys think like, you've got Yankees fans and Red Sox fans are bad. Man, it gets no worse than the stuffing crowd and the dressing crowd, in my opinion. Like that is very heated, very, very heated. And I've lived in both worlds. I don't know. I got to go with dressing, I think. I think it kind of edges out the stuffing a little bit. I hate to even say that and put that on record, but that's just how I feel. So that's going to be my go-to. Ash Finn, let's see. Ash Finn says, I mentioned the magenta on his appearance with Tony and Liz. I failed you guys, man. And it's so funny because it's right here. It is. I mean, it's right here. I mean, it's ready to go. Like it's 100% ready to go. And so maybe we'll bust it out tomorrow for a little Magenta Tuesday. a little Magenta Tuesday for you guys. But again, I only wear the same 3-4 shirts, and they're all right there, right? So it makes it really easy for a quick little wardrobe change. But let's see. Sam L's in the house. Doc, question: if theta decay accelerates during holiday season, does a pecan pie lose value faster after 3 p.m.? Or only Uncle Tony cuts the first slice? Yeah, I do think that the theta decay begins to pick up steam on Thanksgiving, because it gets to the point where, like, when you get full, like, you guys know what I'm talking about, right? Like, you get full, but you can still eat more. But you know that if you sit still, then you're actually going to get too full because your body's digesting more food, right? And so you're like, man, if I'm going to eat more, I've got to do it now. Like, yeah, sure, I'm full technically, but that's not what this is all about. If I'm going to get this slice in my body, it needs to happen now. So I think the same thing kind of happens here with pecan pie. And so, let me try to get to one more, because we got to roll. Let's see, man. I see Adam Armfield's in the house. Man, John Covington's in the house. Man, look at Grumpy Mike in the house. Appreciate you, Grumpy Mike, talking about tuna fish and applesauce for Thanksgiving. I know I can't crack that out. I know that is off limits. But let's see. Ashfin says, man, I would hate to see it owns by the end. I think a lot of traders' mental state needed some updates. I don't disagree with you, my friend. I don't disagree with you at all. And so this is it. The Thanksgiving rally has begun, and I just appreciate you guys, man. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with trading the charts, or engineering the charts, or doing something with charts. Tim Knight is coming up next. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
New from tastytrade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new tastytrade account. The Money Match event starts now, exclusive to new tastytrade customers.
Hello, everybody. A little bit of a different setup whenever I'm traveling, which isn't that often. You get the zoomed in head version, but the charts are still the same, so that's fine. It is obviously Thanksgiving week. It's going to be a bit of a chopped up week. For myself, I'll only be here today for you. I'll be returning next Monday. And Thursday is obviously a holiday. Friday is a half day in the market. And I think the PPI is coming out tomorrow, something like that. Either tomorrow or Wednesday, I don't remember. And in a couple of weeks, a couple of Wednesdays out, I guess, what would it be, 16 days from today? The final Fed meeting of the year will be happening. And there's this general conceit that, oh, well, they'll cut interest rates and then things will be fine. No, they won't. They can cut as much as they want. They could go negative if they want. It won't make any difference. But people have to have something to cling on to. And so that's the latest thing that will that they're going to cut rates again. And then things will just be peaches and cream. No, 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 no. We're getting a nice green market today. The NQ is up hundreds of points, and even the ES is up triple digits. And that is great. I want to see this market bid higher so I can short at better prices. Although not to say I'm not short already. I've got 34 different positions I'm in. But the kind of blood dripping from the teeth level of short that I was at last week, I'm going to wait until prices are even higher than they are right now. And what I'm really hoping for, the best of both worlds, would be for equities to sink while palladium, and precious if necessary, but it doesn't have to be, and palladium rises. I was really fixated last night on palladium's behavior because gold, silver, and palladium are all up right now, but in the overnight session, silver and gold were pretty weak. And even when they were deeply red, palladium just shrugged its shoulders and it stayed green. So it's like, okay, that's pretty cool. So I'm hoping that palladium defies any general asset drop because I got to say, it is very bullish looking chart on a long-term rise, not like a day trade, but like, maybe even for years, certainly for months. So if anybody cares, that's my dream scenario, weak equities and strong palladium. Well, for our one show this week, let's just jump into the charts and kind of catch up on this rather bullish day we've got. The market has changed. The market has shifted. I believe we're in a general downtrend now. And the peak, of course, was here. And we've been executing a steady series of lower highs and lower lows, which is the very definition of a downtrend. The big plunge was on Thursday. And we had a partial recovery on Friday. And we had an even more of a recovery today. We're getting within the same zip code as things opened on Thursday. It would be nice if we did not exceed Thursday's high. If we do, it is not the end of the world for the one or two bears left out there. But it would be better if we didn't exceed Thursday's high. I think Thursday was a very important pivot day psychologically. So that is my wish, and we're basically at the highs of the day right now. The small caps, IWM, are also strong. Had a very big recovery on Friday, and we are actually well higher than Thursday's peak. It's not quite as relevant to the small caps because Thursday was really all about NVIDIA and AI, and small caps have precious little to do with that. My view on this is that the most valuable place to not rise above would be the gap, the price gap. And let's just lay that down right there. Right there. So we want to respect that gap. That would make things cleaner. So there's still more room to go here. I've already got kind of a starter short position IWM, quite small. And the closer we get to the gap, the more I'll add to it. But a general point I wanted to make today was that a lot of the junkiest stocks, the stocks that have done nothing but go down, are up today. And this is sort of endemic to this bounce that we're seeing. And before we get to those, the much more general representative of this is Oracle. Because this, and I've repeated this a couple of times, but it bears repeating once more. The story here is that we had a tremendous blast higher, adding hundreds of billions of dollars overnight to its value to a lifetime high. And then it began this skid lower, down, 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 down. And here it challenged even this level, which was before earnings, and cut below even that. So this has been an absolutely cataclysmic. I don't know what value this is, many hundreds of billions, certainly. But Oracle has been just a wreck. However, it's a little green today, and it could rally. But this is the sort of general shift that's taken place, whereas before this all happened, hyperscaling was a can't lose, AI was a can't lose, and now the posture has gone from offensive to defensive. And so there are a lot of smaller stocks, especially IPOs, that have been just plain garbage that are doing okay today. And they could recover some more, but it is transitory, to use Ben Bernanke's word. And appropriately, the first two have the word bull in them. So here's bullish, BLSH. We bottomed last Wednesday, and we're starting to recover from there. And there's bull, BULL, which bottomed on Friday and is starting to recover. And so, as you can see here, these have had wretched histories. This came out, had this explosive move, and this has been losing money for shareholders ever since. But things are so oversold in this space that buyers are starting to pop up here and there. Circle Internet, CRCL, this was the big stablecoin outfit. This was an interesting one too. Here's the IPO. Look at this line. That line represents the low for the IPO day. In other words, the lowest price it ever was. It blasted higher and spent months erasing all those gains. And wouldn't you know it, look at this. Last Thursday, the low almost exactly matched to the penny the low of the IPO. Coming full circle, if you will, because we went up and then we went down. And my view is that after whatever recovery we have, whether it's one more day or one more week or whatever it might be, or even through the FOMC, that will get taken out. I'm sure people were sweating bullets as it was approaching that level and it's starting to recover. And for the moment, the idea could be, see, it's all over. And it may well recover to, I just noticed here, this pretty cool little top like so. So it might claw its way back up to that level. I don't think it will, but I do think that this is not going to be the ultimate low. That once the sort of it's on sale buyers disappear, you're going to slice right through that. Another good example, and these are the kinds of stocks that I was covering to take profits because they've been so badly beaten. Hims and Hers, we've talked about this a lot. This is up strongly today, but all it's doing is reapproaching this massive overhead supply, which I don't think it's going to repenetrate. So we've undone all of last week's weakness, and so we recovered some on Friday and a big gain today. But these are all representative of, I think, temporary bounces from this oversold state. And at some point, it'll exhaust itself, start to re-weaken, and cut through last Thursday's lows. I've got an overabundance here of examples, but I just want to drive this point home. Another one, IonQ, the whole quantum space. This was super weak. And if this kind of stock could recover to, say, this level, this horizontal line, that would be a very intriguing new shorting opportunity. This one, look at this. This is Newsmax. Unlike, similar to Circle that had this huge bounce at the beginning. So here's the IPO day, enormous gain, another enormous gain, and that was it. The day after the IPO was the lifetime high, and then it was like, start losing. So it just crumbled away. I don't know what percentage loss this is. I think way over 90%. But today, of course, it's undone days worth of selling because it was just so badly beaten. So the biggest gains you're seeing today are those that have been just doing the most horribly until late last week. So you get the idea. One stock which actually looks really good on the long side. And this has grabbed my attention last week, but I don't think I mentioned it, is Grail, Gral. And it had hammered out this rather nice second pattern and then consolidated for a while and then pushed higher today to a lifetime high. Not exactly a bargain price, but I really like the behavior of this in terms of basing and spiking. So if it does ease back down again, it could be pretty interesting. But this is one of the few younger stocks that actually has looked really good. But there's plenty of shorts that I did cover that I'm glad I did for the most part, but there's some that are sort of like great long-term holds is the wrong word, but long-term shorts that I wish I just left alone. One is Abercrombie and Fitch, ANF, because even on a day like today, ANF continues to crumble like so. It's down hard again, and I suspect it'll have much, much lower prices in the months to come. And of course, when we've talked about a lot, Cracker Barrel, CBRL, this one likewise. Look at this. This is just like a triple diamond ski slope. There's not an uptick in sight. Absolutely amazing after that very brief cultural war moment with Uncle Herschel, their mascot. But since then, it's just been nasty. Now, I mentioned earlier about precious metals, and let's just touch on that. Hopefully, as I say, precious metals will not get dragged down with equities, should equities begin weakening, as I hope they will. Thus far, they've been stable to the degree of boring, actually. You can see that gold here has been at very tight little daily ranges, very little going on, unlike, say, here when it was just very dynamic. But the good news is that it is stable, and even with last week's tremendous weakness in equities, it held itself quite respectably. Here's GLD, which understandably looks an awful lot alike. And the real success here, the sort of all signals go signal to my mind would be if it can cross above this gap, if it can push past that gap, whose gap is anchored to the low of the lifetime high day. So it's easier to explain by looking at the picture than hearing my words, but that's the goal right there, to cross above that gap. I would also say it's encouraging that miners are having a good day. This has been very, very positive from a returning perspective, because this was the gap here, and it might have gotten like a penny below or something, but it held support quite nicely. And so we've shot higher today. And here too, if we can get above this high of this narrow range, that would be a very positive sign for metals. My fixation, of course, remains on palladium by way of PALL. And in this case, we are range bound. The lower range, like so, and the upper portion of the range, like so. And if we can escape that range, which we've been in for weeks now, as you can see, up, down, up, down, up, down, then that would be thrilling, I think, because I really believe palladium has a terrific future. If we crack below this and equities do fall and drag precious with it, it looks a little more grim. And then if it crosses below here, forget I said anything. I probably won't ever want to mention palladium again. But at the moment, it's holding its own. So I think things look all right. I keep glancing at my time here because this is a out of the ordinary setup for me. So I don't want to run out of time, but I'm just about to. You know what? I'm going to end with a symbol we've never talked about before. It's a symbol I didn't even know existed. It's QQQE. And what that is, you know QQQ, of course, the cubes. This is a more thinly traded ETF, which is the equal weighted NASDAQ 100. And in sharp contrast to the cube chart, which is a little bit of a mess, the equally weighted NASDAQ 100 chart is very clean. And the portion I've highlighted here is an exquisite head and shoulders pattern like so. And we are just about at the neckline right now. Now, as I say, it's thinly traded. I'm not trading this directly, but I do think it's a pretty decent signal that there's probably not a heck of a lot of bounce left in tech stocks after Friday's recovery and today's recovery. So something you probably haven't encountered before. I do nothing but look at charts, and I'd never heard of it in my life, but something you might want to stick on your watch list. So I can see I'm out of time. I want to wish you all a happy Thanksgiving and be safe. And I will see you in a week. Good luck out there. Bye-bye.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Explain pot odds.
Pot odds is my favorite term, but pot odds in the poker world or gambling world refers to having a greater payout than your implied odds would suggest. So let's say I have 3-to-1 odds to win a pot, but the pot is giving me 4-to-1 odds to make that bet. I would have a positive expected value over time. So in trading, let's say you have a defined risk debit or credit spread that's currently at a max loss, and let's say there's 30 days left to go. There's not really a reason to close that position because you're already at max loss. You can only go up from there. So in that scenario, that would be a positive pot odds scenario or something that would give us pot odds to stay in.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Jamal, we are back. Saw you on first call. Now it's time for last call. Good to see you again.
Good to see you, my friend. What a day we got here, huh? I mean, doesn't seem like there's been any let up here in markets. And I don't know about you, but I'm looking to see if there's going to be carryover till tomorrow. That's basically why I really haven't traded much at all today.
I'm waiting to see if there's carryover too. I'm pleasantly surprised that crypto is not weighing down broader risk appetite today. And I think that's the story of where we should start. S&P up by 1.56% as we go right to the charts here on last call. S&P is sitting up near 67.24 right now. It feels like it's been pinned here for the past 2 hours. The NASDAQ gaining 2.63%. That's 639 points. Jamal, big day there.
Mm-hmm.
Russell up 42 points, up 1.8%. The Dow up 0.5%. We move around to the crypto world, though, where Bitcoin is sitting up nearly 5%. Ethereum up 8.72%. continuing the rebound that we saw over the weekend and brushing off that head fake yesterday at 6 p.m. Eastern when futures opened and Bitcoin dumped, dragging down those equity indices. Elsewhere, we make our way through the bond market where bond yields at the long end of the curve are slightly lower in both the 10s and the 30s. Your gold, your silver are having a great afternoon. Gold now up 1.2%, silver up a healthy 2.6% here. Oil likewise up 1.5%. It's a green day all around, Jamal, except for natural gas, which is down 1.7%. And a mixed day for your US dollar overall. A quick look at our high option volume list today, near the top of the list. NVIDIA, Tesla, both coming in. And I suppose that's a good place to start because the NASDAQ is our leader here on this Monday, November 24th, on this holiday shortened week. Jamal, you were yesterday on First Call talking about how you rolled your long Delta exposure into January. You thought that there could be a little bit of a bounce here. Today, you're mentioning that you're looking to see if there's more follow through. Break down what your view is on this market here as we look at what's been a pretty good day so far for stocks.
Yeah, I mean, it boils down to there's obviously been some bumps in the road in the market here. The tech valuations obviously has really kind of spooked some people. We're hearing it all, man. I mean, we're hearing it all, right? Oracle CDS, CRW, CoreWeave CDS, just all the different headlines, and most of it has been negative. As a matter of fact, one of the things I retweeted today, I can't remember who said it, was like, all I'm hearing, I think it's Jim Bianco, actually, a Chicago local guy, talks about a lot of different things market related. All I'm hearing is negative stuff about AI right now. Is there any positives? And that's kind of how it goes sometimes in the market, right? Everything is great until all of a sudden everybody finds the negatives about it, but it's still here to stay. And I don't think it's necessarily going anywhere. So I did put a lot of my long exposure in January over the last couple of trading sessions. As I look here, yeah, a lot of it is. I got a couple of things that are calendar call spread related. So some of them are short December, but still most of my longs are in January for this specific reason. I mean, I think there's just some stuff that the market needs to digest overall. But I think, you have a lot of people out there who like to bring up all the different negative stuff that's going on surrounding AI right now, as if it's, the late 2000 going on early 2001 and the market is about to crash. And then you got others that are saying, maybe these valuations are a little bit too high for where we are in the cycle right now. And that honestly could possibly be true. I'm not here to debate that day in and day out. I'm just here to try and take advantage of it, as a trader, right? And so that's I think, the way to play it. But I'll tell you what, one of the things that's really interesting to me, I mean, we've been doing shows for like 3 years now? Maybe 3+ years. Hardly ever have I heard you talk about Bitcoin as much as I've heard you talk about it in the last couple of days here. That tells me a lot about where Bitcoin is.
Interesting. Yeah,
that's right. A little analysis.
Yeah, I really, I was talking about it a bit over the summer because it looked like we had a path towards 135, and the calls in IBIT did great because they were so undervalued when we purchased them and ultimately got out, and rather be lucky than good. I think all the IBIT long positions were exited in that first week of October. I think October 6th is when I got out of them.
I bring it up because it's clear, and you're right. I mean, it's one of the most interesting things in the market right now, and even bigger than that. I've said this more often than not. In the last several weeks, I have really noticed how Bitcoin and the market, and sometimes even gold, are moving together, both directions. And that's exactly what we're seeing here today. I mean, it's just been a theme in the market for sure. And if you notice, probably about, what time is it? Probably about an hour and change ago. Actually, I think it was while you were on your show, there was a notable bump in gold. Gold was kind of,
Yeah,
right. It was like a notable bump in gold during Futures Power Hour, and it's kind of continued throughout the day. Exactly what that means, I'm not sure, but I guess you could just attribute to the fact that these are very highly correlated at the moment. Bitcoin,
market wanted me to look good today. That's why it happened during Futures Power Hour. Like, let's throw him a bone. He's long gold. He'll go up while he's on air.
As am I.
Oh, I was mentioning that earlier today to Ilya. He said it on Futures Power Hour today for Westwater. Over the past year, I've done fantastic in gold and silver for those that have been following on the Tasty Live follow account page. But when I haven't done well, the periods when I haven't, it's when I've been in contrast to you and Ilya, both of you at the same time. But when we're all on the same page, it feels like we've all been having a lot of fun. So you, me, and him are all long again, which is nice.
Yeah.
Makes me feel pretty good about things.
I'm doing it.
I don't know why we bumped up here around 2 p.m. Eastern. Gold, silver, Bitcoin, they all took a leg up.
Yeah, I'm not exactly sure either, actually. I don't know. Maybe all of a sudden they really are starting to smell the possibility of a rate cut. I mean, maybe that's what it is. I don't know. It's not like that changed markedly throughout today, but yeah, it was kind of interesting. And see what it means.
Before we go further, it's a good time to bring up the first promo. Paul, we can go right to the money match if that's ready to go. We brought this up last week, but hey, why not do it again? Tasty Trade running a new promo, or an old promo that we continuously run through November 30th. Maybe it's going to go up on the screen, production team. Maybe it's not.
They're messing with us. They're messing with the hamster wheel is running.
It's running. When it pops up on the screen, we'll keep going. Until then, we're back to going to it. If you're opening an account, use promo code MONEYMATCH at tastytrade.com/moneymatch. You'll get 1% of your deposits matched up to $2,000 plus 30 days of commission-free trading. That's tastytrade.com/moneymatch. Use promo code MONEYMATCH there. Jamal, we're going to do another quick break in about 10 minutes. But, Nick and I have been talking the past few days about how Bitcoin dumping right around 10 Eastern, it's been a telltale sign that risk sentiment's terrible. The fact that you have crypto and precious metals all extending their gains into the close here is probably among the more encouraging signs that I've seen in recent sessions. Silver in particular breaking its downtrend that we've had off the highs in November, both November 13th and on November 18th, as it were. That looks as good can be for a bullish falling wedge getting ready to lift off, and that calls for a move back into the yearly high. So that is one thing that I'm going to be carrying with me into the holiday here. But there's a lot of little behavioral changes I couldn't help but notice across the board today with the close. And it's not just that you're seeing big vol crush across a handful, not even just a handful, most single equity names. Some of the technical downtrends that have really defined the markets in recent weeks during this corrective period have started to turn, like in a Meta, for example, which hadn't closed above its 1 week moving average since October 29th. We could be doing that here today if things continue to go up. You have Google bursting out to a fresh 52-week high, a fresh high to date for the year. Apple prices, they're up at a fresh closing high for the year, assuming we close up here. Even a Microsoft, which has been in a little bit of a doldrums, thanks to perhaps Google's outperformance with Gemini and the squandering of ChatGPT's early mover advantage. This is having a bit of a bottoming day likewise. So we're not out of the woods just yet, but a lot of the names that have been weighing on the broader markets are turning around, and you're seeing that you're getting nice participation, broadly speaking. QQEW, again, has not closed above its 1 week since November 12th. Today's November 24th. We could be looking at a return back above that 1 week moving average. So, Nick, there's a few things that are changing here. I know it's a thin week liquidity-wise. It's going to get more difficult to trade as we get closer to the holiday.
Yeah.
But today and tomorrow, there are not many obstacles in the way. There's not much recent economic data. There's no earnings reports. So you mentioned you're waiting for follow through here. In stocks in particular, if you're looking at something like the NASDAQ with its huge plus 2.65% day, what more do you need to see? Do you want to see that Thursday high breached, which is something that we conspicuously haven't come close to in today's session?
Well, what I mean by follow through per se is like specifically, I'd love to see if there's going to be another big move tomorrow. I honestly think if there were another big move like this, say another 75 plus points, I think I'd be interested in fading it just in the short term. But I would like to see, honestly, Chris, I'd like to see if this is the beginning of that sort of dovish period a little bit we see in markets here where we get around to Thanksgiving, we sort of trend higher after a rough period. And volume is expected to be a little bit low, so that can tend to sometimes lead to interesting moves in markets, up and down, honestly. And in this case, I would think the momentum might carry us upwards over the next couple of days. I'd like to see if that's what ends up happening as we head into the Thanksgiving holiday and a couple of shortened trading days. Well, one shortened trading day per se. So I'd like to see if that's going to be the case. In the meantime, I feel pretty good about some of the positioning that I have on. Like I said, a lot of longs out in January, so it's not a whole lot that needs to be done. And I'm really just curious of how markets are going to act over these next couple of days. Like you said, as volume gets lighter, as there's not as many traders trading, and some of the news has died down. I mean, I think still the biggest themes are obviously the AI thing. There's been obviously a lot of change with the Fed rate cuts, although you really shouldn't call it change a week over, I should say 2 weeks over 2 weeks, but week over week, sure. But last week was wild. So I'm just looking to see if there's going to be any strong follow through tomorrow. I would actually fade strong follow through tomorrow. But if there's just sort of slight follow through over the next couple of days, I'm not fading that, and I feel well positioned for where I'm at.
It's incredible the turnaround in Fed funds futures. And here on the screen, the 3-month SOFR futures, the SR3Z5 contract. We were at a low last week of pricing in less than a 50%, just a 50% chance of a cut from all. 51%. Today we're sitting at clear of 100%. Clear of 100%. So that's a sharp turn, and risk likes it, right? I find what's still very interesting is even with those cut odds extending more today, I know it's not the most interesting part of the market right now with these IVRs that are back sitting seemingly in single digits, but bonds, we're not seeing bonds break down, yields go higher as the market's pushing up stock prices, pushing up crypto, pushing up precious metals. It's not saying that this is a reinflationary environment. What do you make of this? This feels different, and it feels meaningful because it feels like if this was, say, a month or 2 or 6 months ago, stronger Fed cut odds would not be translating into stronger bond prices. Is that a warning sign, or is that a welcome sign for you in terms of taking risk elsewhere?
I'd say honestly, it's kind of a welcome sign to me until proven otherwise. And again, I mean, the markets seem to be cooperating, but I think, I think a lot of the change happened with Fed rate cut odds because I think the market is waking up to the possibility that even if there's not an environment for rate cuts, that environment will still be created. And I think that's one of the things going forward people are going to start to pay attention to, even in the situation of if you think AI is struggling, guess what? AI is already powering a lot of our economy right now. It's certainly, it's certainly become a huge thing in our economy. And I don't think that the government will allow it to fail. In the meantime, honestly, is what I'm starting to get the read of. And so that being the case, you got to wonder, sure, valuations might get out of control, but if there's a situation where things are not really making money, I think those will vet themselves. And I think certain companies might sort of disappear in those situations. But the other ones that are huge, that are actually thriving, I think we're going to see those continue to do well. Because look, they've made, at this point, the government has kind of made their bed with AI. And there's a lot going into it right now. So I don't know if it's going to fail.
In terms of the volumes today, right, we're talking about a relatively light day compared to even where we were on Friday. Friday, we had 2.2 million SPOOs trade. Today, we're at 1.3 million, only 3 million SPX options. Today, less than 2 million Tesla traded versus 6 million that traded the other day. NVIDIA on Friday, 6 million NVIDIA traded, huge. Today, only 2.8 million. So, I mean, lots of the rolls were already done, as Frank points out. Lots of the rolls were already done last Friday with Friday's 93 million volume, which was 36% above recent averages.
Yeah.
Friday, I think, was the tell. And we brought this up on air yesterday and today thus far. Again, the liquidity breath. Among the 500 most liquid single stocks on Friday, 30-day IVR dropped for 353 of them, only rose for 69 of them. So lower rates, lower volatility, post-OPEX, NFP, NVIDIA. Everyone seemingly is getting ready to take their ball and go home for the holidays.
I mean, front month VIX is still $20 bid, $20 bid, if you will. I mean, that tells you like everything is not completely out of the woods yet. Also tells you that the market has been moving around a whole lot, but it's there's still a tiny bit of volatility there to be considered.
There's a tiny bit of volatility here. We read the Tom McClellan blog post earlier, which we'll go back over on overtime again. So I'd encourage folks to stick around for that. Talking about the spread of the high point in the VIX futures curve relative to where the VIX is actually trading. And as the market closed on Thursday, it had reached a level that historically one might consider to be oversold, which is to say that near-term volatility, spot volatility was overpriced relative to where the futures market was. And that's historically coincided with a short-term bottom. So maybe that's all this is. just people shuffling, the deck chairs on the Titanic ahead of the holidays, which is not unheard of. And so you don't look too much into it. But if you're looking too much into it, like some of us may be, I still think that the fact that Thursday gives you the 1.5% higher in SPY, only to close by more than 0.5% lower, coupled with the seasonals of it being the low for the rest of the year for stocks and the high for the rest of the year for volatility. If you look at the long-term averages, the conditions are kind of all here to get something of a move to the upside, maybe today, obviously, and then perhaps tomorrow as well. Once we get through the holiday week, though, Jamal, it feels like the tables reset. We're almost at the midway point between the highs at the end of October and the lows from last week. And that gives you an even playing field going into the rest of the year.
Oh, yeah. Yeah, I mean, I feel like that right now even. That's one of the reasons why I'm like, I want to see some major follow through if that's going to happen. If not in a quick way, sort of sort of in the small tranches along the way for the rest of the week. Because truth be told, we are still, I think, somewhat fragile. I mean, realistically. And even when you look at a lot of these charts, they kind of tell you that. So we need something to push us one way or the other. And obviously, in my case, I'm long some stuff. So I want it to be to the upside. But it's for that reason that I'm not really adjusting my positioning much, because I feel like I'm really pretty positioned well. It's going to take a little bit of time, I think, because there was a little bit of psychological damage done. And again, I go back to the day where we did OTCL from the floor, which is every Thursday. I mean, you could feel like there was some serious palpitations within the room, and there was a little bit there's a lot of nervousness, I would say, just in the order flow that was coming through, not from the traders. Those dudes are professionals. They do this all the time. But just in the order flow, you could kind of tell there was some nervousness. There was like some real sort of hesitance in the market. And I think that's kind of what we experienced going a lot last week. NVIDIA was just the catalyst. And of course, the change in the Fed fund rates were the catalyst. So I need a little bit more follow through to really feel comfortable about where we're going. And like I said, I mean, look at VIX futures. Again, they're in contango, but anytime you see the front month VIX future at around 20, I mean, that tells you things are moving around a lot. And I don't think you can completely rest easy that things are really quite out of the woods yet.
No, not fully out of the woods yet. We're going to take... before we bring on the guys from Overtime, Dylan and Ilya are going to be here in a few moments. Let's go to the second promo. Jamal, when a referred customer opens up a new account and funds it with a $2,000 initial deposit using a friend's referral code, both the referrer and the referee, they receive a $100 bonus. Go to tastytrade.com/referral for more details. Again, that's tastytrade.com/referral for more details. Jamal, before we bring Ilya and Dylan into the room, the one place that we haven't taken a quick look over here today is in terms of what's going on in the world of energy. Crude oil prices are bouncing a little bit today, and volatility is starting to creep back up again. It's only at 25 IVR. The energy sector ETF is among the worst performers today, one of the few sector ETFs that's actually underwater in today's session. Some of the other ones, I don't know if they're that noteworthy, but XLP is down by 1%. Home builders, nothing substantial there. What's your take on energy?
Hasn't that been one of the most quietest sectors, by the way? Sorry to cut you off, but home builders, it has been super quiet throughout the year. It's kind of, and I know why.
It's been a slow, steady decline the past few months, just like it was a slow, steady rally. It really went unnoticed on the way up and the way down, it feels like.
Yeah. But you were saying about energy, sorry.
Yeah, energy's, what's your take on energy these days? It feels like, as we think about some of this risk around the holidays, geopolitical risk, energy has been very uncorrelated with what's going on in equities one way or the other. There is a diversification benefit by adding potential CL or NG trades into your portfolio if you're thinking about stepping away from risk over the weekend, over the holidays.
Yeah, honestly, it's interesting to look at the gold chart. I mean, the gold, excuse me. I don't know why I always do that. I feel like I only do that when I'm on with you. I don't know
Black gold.
Yeah, exactly. Black gold. There's clearly a sort of decline lower, this sort of stair step down in crude right now. You can kind of see it. And yet you're still been able to sort of trade it from directions, actually, if you want to use something like an MCL for a quick $1 or $2 every now and again. But then it's also giving you some volatility again. So I'm pretty sure you can get directionally neutral as well. So it does provide that. I did sort of have to reorganize a natural gas trade for a while there. It was beating me up. I was short a strangle. which worked so well the previous month, but it was not working well recently. And so I reorganized that and did it directionally neutral, but used some basically hedges on the upside and downside, turning it into a condor.
Mm-hmm.
So it is providing opportunities if you're willing to stick with it.
Yeah, I mean, I'm at my roll date here. I'm doing some wacky stuff with the 63, 64 call spreads, and I'm going to continue to do them so long as we get those notices like we did today, where Southcom is telling station military members that they're not going to be able to rotate out for their holidays over the next 10 to 14 days. Southcom is the group within the U.S. military that oversees our efforts in an area that would include Venezuela. So considering that CENTCOM sent out a similar notice back in June that rotations were going to be limited, and then we bombed Iran, I don't think it's something that we should ignore. But I do have a working order here because I'm at 22 DTE for my crude condor. I want to get it back into a new short iron condor position in the CLG 6 contract. I can't believe we're already going out to that February expiry already, but consistent with that, thinking about the pricing here, looking at a potential trade at the 52.54 and then the 65.67. That's effectively saying that we're not going to go much further than the lows that we've had this year, and we're certainly not going to be going above the highs that we had at the end of July, which, over the next 45 and 21 day out window, assuming that gets filled, I may have to tinker with it a little bit to get it actually filled, but assuming it gets filled, it's been a great trade since June. We're just bracketing a market that says it's not going to go anywhere absent a spike in geopolitical risk. So I'll play both sides. Hopefully the iron condor works out and those call spreads that are out of the money are just simply hedges that disappear and they don't hurt or help anyone. But we do have our friends here, at least one of our friends here. Ilya is here. He's going to be joining us on overtime, and we can bring him into the room now. Why not bring him into the room now?
Spivak.
Gentlemen.
There he is.
How goes it?
It's been about 24 hours since the three of us were together.
Yes.
Let's reassess our priors from first call yesterday as we're on last call here now. What's changed, Ilya? Is the price action in this 2.64% rally in the NASDAQ enough to concede that maybe we have a little bit more upside this week?
I don't think so, but I think this is the place where it has to really put up or shut up. If we can find follow through on this tomorrow, however the liquidity thins out, that will be noteworthy. But for me, it's basically the same idea. So my baseline premise, I started to get into increasingly a risk-off posture when the Fed said what they said on the last Fed meeting on October the 29th. Then you could see it. Powell came out. He said the magic words. The freak out began and really hasn't stopped since, but for these kinds of periodic bounces. And they've been good for 24 to 48 hours, but not more. And so I'm watching here to see if any Rubicons get crossed. They haven't. You can see those those pair of indecision candles at the bottom of the former range. We're right at the underside of that. And so we're going to decide here one way or another. It'll be interesting to see if tomorrow there is actually follow through, because at this point, what this looks like is Monday of Thanksgiving week. Everybody got all kinds of bearish at the end of last week. Everything closed on the back foot. Now everybody's evening out before they go off for the holiday because they don't want to think about it or look at it. So if it continues, okay. But so far, this still looks corrective to my eye.
Jamal, what's the issue with just taking our ball and putting it in between the highs and lows of the past, say, month and just, you know what, nothing's going to change here for the next 2 or 3 weeks. We don't have any data until the December 16th tranche that's meaningfully going to move the Fed, and the Fed is on December 10th. So unless they change the meeting date, which seems unlikely, possible, but unlikely, the thing's just going to chop around. Why not just play for the chop?
Definitely play for the chop. Look, I mean, that's a solid play as well. Again, I mean, that's a great thing. It's the reason why we have options. You can actually play for that chop, right? However, I just feel like those who have been goo gaga over the AI trade has looked at this opportunity and said, ooh, this is a good opportunity to buy them. And I think that's by and large our market, right? Like that's typically what happens.
Did you say Google Gaga?
Exactly.
because Google's been going gaga over the AI trade here, and that's one way to end the show. Ilya, you and I have more to discuss here. This first call's done. Overtime's coming up next. We're going to take a brief break here. We'll be back in about a minute or two. We'll see everyone at overtime.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at Tasty Trade.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Guess there was nothing to be worried about last Thursday. It's now Monday, November 24th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Paris, living the good life. Here to take you through the next 30 minutes as we finish up the trading day. It was an interesting day in markets. Bitcoin does not have its usual morning spillover. In fact, extends its runs from over the weekend, up 11% from the lows seen over the past few sessions. It's a green light for stocks with the S&P up 1.5%, the NASDAQ up 2.65%, the Russell up nearly 1.9%. It's good news for precious metals, which are getting the liquidity signal, the sentiment signal, if you will. Silver up, was it 2.5% now? Gold up 1.22%. So all quiet on the Western front there, not too shabby, but not the greatest day for the dollar. We see cut odds go up, and now according to the SR3Z5 contract, 100% chance of a 25 basis point rate cut in December. A little bit lighter on the Fed funds future, but those are still north of 80% from my last check.
Yeah.
Ultimately, the dollar trades sideways. We have to talk about that Japanese yen. But it's a holiday shortened week here. It's a holiday shortened week here on Overtime. We're in today and tomorrow. We'll be off Wednesday and Thursday, of course. So there's not much to discuss, perhaps, as opposed to what we're going to do here in our limited hour on air these next 2 days. Dylan, I want to kick it over to you. It's a new world, it seems like, here after the price action on Thursday. Friday, everyone buying the dip. Today, continuing that trend. Is everything back to being awesome for U.S. traders now that we've gotten that bout of volatility out of our system?
I mean, I hearken back to a holiday classic of Charlie Brown and the famous legend of Lucy pulling the football every time he tees up a field goal or whatever. And I just feel like how many times have I allowed myself to sort of be seduced by all of the thinking that's available to me about AI and the labor market and cost of capital and on, valuations, multiples. Every time it's buy the dip. And I understand one of these days, one of these times, one of these days won't be. But I think you're way better off to buy these things, obviously. I mean, it's just sort of idiotic on my part because it's what just happened. But I just, so many times, I mean, with April being the most extreme example, but I think you have to look at sell-offs as windows of opportunity. Even if I disagree, even if if I have some thought that is in contrary to the behavior.
Well, could I point out that we have Broadcom here up 11% today? It's its best day since April 9th, when the market was broadly up 12% thanks to Trump's tariff turnaround. This is directly related to what's going on with Google, because Google they don't have GPUs, they have TPUs, tensor processing units. It's their internal developed chip that's powering Gemini, which, if you've been looking at some of the benchmarking tests that have been going on since Gemini 3 came out, it's far and away the best LLM that's publicly available right now. And of course, it puts to bed whatever's happening with ChatGPT and OpenAI. So Broadcom here, bootstrapping off of Google's success. If Broadcom is the major supplier to Google as they build their
Gemini is the best in class, you're saying?
Gemini is now best in class, and Broadcom sells them their ASICs, their units that go inside their TPU. So, Dylan, the AI flywheel is getting a different baton carrier these days, but it's a baton carrier nonetheless. So while we're not out of the woods with NVIDIA, Ilya, it seems like there's a new theme that everyone can work around. That, good old Google is the now growth engine here.
There's always a theme. The question really isn't, is there a theme or isn't there? The question is, which theme does the market wish to pay attention to at a given time? Because we could have very easily said last week, what are you, crazy? 27% year-on-year earnings growth in the third quarter? This thing is firing on all cylinders. What in the world would we be worried about? And yet all the headlines were, we've gone too far, too fast on AI. Why too far, too fast? Because stocks were down. And I'm sure Dylan can attest to some of the ways in which this happens. When you look at sort of what public news is saying, it's typically reflective of the last thing that's occurred and trying to make sense of it. And it makes perfect sense to look and say, okay, well, tech's down. Okay, it's the biggest pocket of market cap. Must be something wrong with AI. It's not a huge logical leap. But what we've been talking about here is a deeper look and saying, you know what, it's not so much AI or not AI. It's that sentiment turned negative at the tail end of October, and good news has been shrugged off since. It's not that the news hasn't been good. Just last Friday, the S&P Global PMI numbers came out. It's a continuous third-party, non-governmental series. It told us the U.S. economy is near the same multi-year growth highs that were hit at the end of 2024, before all this tariff, whatever it is, et cetera,
Jamal
et cetera.
mentioned it yesterday. Doesn't that mean we have a gigantic wall of worry in front of us again for the rest of the year? Right? AI growth is flagging,
if the market
but the economy is actually
chooses to
holding up.
climb it. This is the whole thing. Everything we've seen about sentiment since October the 29th is good news, has a shelf life of between 24 to 48 hours. Let's see. But for today, we didn't cross any Rubicons. The trend is down. We had a very healthy improvement in Fed rate cut odds, as you were saying.
Yes.
Not surprising that the market is in a much better mood and bonds are higher and the metals are higher. It feels like a more normal day in some sense than what we've seen recently. But it's also the Monday before Thanksgiving, a perfect day for people to rebalance risk before a big day away or a big several days away. So let's see. It could be the start of a bounce. It's just, will the market do that? Is it prepared to switch the setting on sentiment from risk off to risk on here? And if so, why here?
Well, it's interesting today. Go ahead, Dylan.
I was going to say the problem with the why here question, whether it's up or down, is that it begs thinking. And I'm saying the thoughtless response is higher.
That has been unequivocally the case. The question, of course, as ever, is where's the bottom on these things? Like, how far is far enough to say buy the dip? Because obviously we've seen bounces here along the way already. And so if the question was, yes, every time there's a pullback, buy the dip, fair enough. We had a bounce on November 10th with the end of this government shutdown. That was not a dip to buy. Okay, is this the dip to buy? Maybe. But do we know that at this point? I don't think so. It might be. I'm completely open-minded to that idea.
Coming into how far is a correction?
Right.
At the start of this week,
I find the sort of 20% now we're in correction territory math to be kind of arbitrary and meaningless.
Well, let's use that arbitrary and meaningless level. As of the close on Friday, and I have to run the data again, but the S&P 500 was 4.4% from its all-time high.
Yeah.
As of Friday's close, 412 of the S&P 500's 500 stocks. So 82% of individual equities within the S&P 500 were down by more than 20% from their all-time highs. So there has been a stealth correction that's been going on. Obviously, the big names in the market are disguising it because when NVIDIA and Microsoft and Apple and Amazon, they don't pull back substantially. They keep the indexes afloat, but this has been a market that has seen its troubles. So why not now? We've seen a market that's basically been in a stealth bear market for the past few weeks.
Maybe.
I'm just looking for reasons to get longer, Ilya. You know my disposition here.
Why? But I'm saying the more reasons you find, the more trouble you're going to find. You don't need a reason. There's an embedded bid. All the bias is up. And any headwind and anxiety is an opportunity to accumulate in high beta names, whether it's Bitcoin or the Mag 7.
So Ilya, square this
trader's mantra.
That I think is the most important thing here, because we've started to see a change in behavior in something like a Bitcoin, which has been really struggling to see any upside momentum here.
Have we?
And
seen a change in behavior? Looking at today's candle?
We're closing above our 50-day, our 5-day moving average for the first time.
We're at the underside of the previous range, and if you look at that wick, we ran away from attempting to break in.
That does look a little sickening, you know. I mean, is that
that's an ugly bar.
Is that a legitimate print?
I don't know.
5-minute candle clearing about $3,500 above current
I don't know
price.
the validity of that candle.
I don't think I'm going to take that seriously.
Yeah, I'm going
Bitcoin,
to look at the
Bitcoin
futures.
Don't show us that spike.
Yeah, Bitcoin futures don't have that candle. What they do have, though, is this move being a test of the underside of the prior range that failed to crack. That much is there. And so for me, you look at Fed rate cut odds and they're back to 85%. And this is it. And the dollar doesn't sell off. I don't know. It feels more like a holiday week portfolio rebalance with the with a view to basically be somewhere not looking at a ticker by Wednesday, rather than something with conviction. And again, tomorrow is a full day. Let's see.
So it's not people buying the dip in Bitcoin. It's people who are closing out their shorts in things because they've had a nice run, and why push this when they're going to be on vacation?
Yeah. Yeah. Well, and look, it's probably precipitated by the same type of a corrective thing in Fed funds futures themselves. Because if everybody is looking basically at the CME Fed Watch tool day in, day out and going, how risk off is it going to be? Because since October the 29th, it's been all about that. And whether we're 50-50 or 60-40, 70-30, which way? If that's what's going on, and today you go 85% chance they're cutting, okay, risk on. But the markets that are used to this kind of stuff, that deal with it day in, day out, currency markets, for example, that they're not confirming this. And the move in risk is not to be dismissed, but still corrective, looking at the price action.
There is a reason we bring up crypto. It's not just because it's something that's interesting and moves around a lot, but if you don't have crypto in your portfolio, it's something that over time has added enhanced returns, has increased diversification benefits. Just as an example here, I've been looking at this for, we've been talking about some things that we're going to produce or content-wise around the holiday. And just so I've been looking up some of the diversification stats. Let's just assume, going back to the available data period, so this is January 2016 to present, if I was at a 60-40 portfolio, the portfolio would have returned 9% on average, which is actually 6% below where SPY is. So there has been drag by having treasuries. If I were to go to something a little bit more nuanced, like 30% stocks, 20% bonds, so keeping that 3-to-2 ratio, but then going out into gold, oil, and Bitcoin for the other 50% here, you're getting higher Sharpe ratios, you're getting higher Sortino ratios, you're getting less benchmark correlation to SPY. It's not just about having higher standardized returns or growing the portfolio more than you would have otherwise, right? It's the goal of diversification, and adding something like crypto or tracking it is because it can give you a heads up. It can help enhance your returns. It can tell you what to avoid and when to avoid it. And generally, when crypto's in the tank, stocks have tended to struggle. But if it's bottoming, and Ethereum's up nearly 8% today, Dylan, then it feels like the albatross is away from the neck of this broader market here. And the best day for the NASDAQ since May, we can't dismiss that, given everything going on around us. So a further squeeze here, Ilya, 25,310 in the NASDAQ. What's another 1.5% between friends to get back to Thursday's high? It seems like a level that we're going to want to flirt with.
Maybe.
Where the market, right? Before we can say that like we're out of the woods, Thursday's high, the post-NVIDIA earnings high's got to go. And until then, this is just a lot of chop and grind around a holiday, despite whatever P&L people had today. Today was certainly a good day for me. It's difficult for me to think that this is start of something more until we clear out Thursday's highs.
Yeah. I mean, you need to get out of this lower highs and lower lows environment. And until then, the trend is in front of you. And to read into it over the course of one day, since the top, has been a bad idea. Because every single meaningful green day on this chart has been followed by progression lower. Maybe not immediately the day after, but notice, this is the first set of consecutive green days in this entire sequence for the NASDAQ.
Yeah, first time since the 28th, 29th that you've had back-to-back green days in the NASDAQ, which again, interesting occurrence.
It's interesting occurrence. So maybe this is something, but we don't know that here yet. And if it is, then it's going to have legs and there'll be plenty of upside to it. Because to Dylan's point, the market wants to go higher. It's biased that way. If you uncork it,
to go higher.
Yeah, if you uncork it if the fear really fades and you uncork this thing, it's got a big splashy blow off top in it. But
like what, 30K NASDAQ, 7,100 S&P?
Could be. I mean, entertain with me for a second the idea that everything since October the 29th is a continuation flag. Pennant, whatever.
Yeah.
What's that measured move?
If we were to like talk about something like this.
Yeah. I mean, this thing could, if this thing cracks and you really sort of complete this structure, it could rip. It could rip hard. So I don't see any reason not to wait for confirmation.
28K?
Yeah.
Perhaps. 28K? We're not there yet. Volatility coming in, though, I think is the big theme of the day because you do have this vol crush that plays out over the course of the session. Seemingly around everything. Bond vol is in, equity vol is in, crypto vol is in. The things that where you're not seeing it come in. Metals, great. That's particularly good if you're looking for extension to the upside. You're not seeing vol come in energy, which given some of the geopolitics, and I think that's a good place to leave this. Dylan, I'm curious as to your thoughts because while you're trading your way around Europe here and enjoying the trappings of a modern infrastructure economy, I'm wondering what the view is on the war in Ukraine, because there's certainly been a lot of headlines here about the US and Russia negotiating and Ukraine negotiating this week. You've previously said that it's a non-story in Europe, but it feels like it's a story again right now. And as we see these headlines come out, oil vol has moved up once more. Are we nearing an end to the Russia-Ukraine war from where you sit in your lovely
I would repeat what I said, which is at least, that generally it's still a non-topic in European cities, certainly compared to how it was a year or 2 years ago. And I do think, and Ilya might disagree with me on this, I don't know, that the sense that Russia is a threat to continue to invade more things feels like it's less of a concern than it was psychologically with governments in Europe, Western Europe, compared to
and practically too. They've spent all these years spending men and ammo, and they're not really in a position to invade for a while.
And so because the self-interest of the French or of the Belgians or the Dutch or feels more secure now than it did a couple of years ago, I believe that their degree of interest has diminished in alignment with that. And that the view of leadership, both Russia and the United States, I think is seen as mutually relatively unpredictable and potentially unreliable. And so discussions in general, and the discussion is sort of obvious at this point, which is either the war ends and Russia keeps Eastern Ukraine, or the war ends and Russia doesn't. And right now it looks like they do. And that it really just comes down to the degree to which the Ukrainian government can really leverage its obvious victimhood and having lost territory into something that scales in defense or counteroffensive. And my sense is that the degree of investment in Western European governments in being willing to risk blood and treasure in support of that is in direct correlation, not to their sympathy for Ukraine, but rather in direct correlation to their perception that Russia is a credible threat to scale its military activity beyond the current theater. And as the perception of Russia's ability to scale outside of the current theater, the risk of that seems to be diminishing, that the interest in that topic similarly declines. It's my sense.
There's a lot there that obviously is directly pulled from the sort of tactical and geostrategic reality here, obviously, because as Dylan is just saying, there is a very real concern in 2022 that if Russia sprints to Kiev and takes it, it's still got all its men and all its guns.
And more confidence.
And is convinced for sure now that the shenanigans it got away with in '08 and in 2014 are all good. The West is toothless. So is the US. Take what you want. And so then you start to threaten Lithuania, Latvia, Estonia, Poland, for heaven's sake. And if that starts to be the case, obviously everybody in Europe goes immediately, wait a minute, we've seen this movie.
But
And
the
so
perceived threat of that in January 26 is the lowest it's been since the war started.
And because now all this time has been spent and Russia has been so depleted militarily by the ongoing conflict, both the US and the Europeans are kind of rightly looking at each other and going, hang on a second. We used up all these resources to degrade them. That was kind of the point. Now they're not going to be invading anything for a good long while. Maybe that gives Europe enough time to rebuild its defenses. Let's put this thing on ice.
So how much in Brussels or in Rome or in Paris or even in London do you really care how much of Eastern Ukraine goes? Not as much as you used. You don't care as much as you used to.
Yeah, I mean, you probably and this is interesting now coming out of these conversations in Geneva over the weekend, because it almost seems like Ukraine is ready to let some of Eastern Ukraine go if it got the right security guarantees and things like this.
Exactly.
Well, the current dynamic of not getting any security guarantees and having to give up territory doesn't seem to fly. So it's going to be one or the other, right? Like
you consider a negotiating position. You take the two negatives, you give them, then you give the security guarantee, and the land goes.
Yeah.
Yeah. I mean, if I'm Zelensky, my retort is like, how about this? You give us Moscow, given that plan that was put out the other day.
Yeah.
Like, what did Tom Cruise's character say in Tropic Thunder? What did Les Grossman say? Go
step back from the phone and literally address your face.
Yeah, that.
Yeah,
that'd be my response.
I don't believe that Ukraine has the sort of leverage that the Tom Cruise studio chief character had in that movie. I don't think,
among other things, because the people of Ukraine are getting annoyed by this whole thing themselves.
Yeah. But I mean, I think to bring back to your original question, Chris, I do think an expansion in oil volatility or an elevation in oil prices to the degree to which it's related to anything having to do with that, which I don't know that that's even true, but I think I would sell that.
Yeah, I mean, but given what we've seen so far, I have to think that you probably get a small bounce if anything happens with the U.S. and Venezuela. And if it doesn't, long term, Ilya, there's a lot of Venezuelan oil in the ground. And if we're going to give them a dose of freedom, like we did to Iraq in the 2000s, then one would surmise that more oil ultimately comes onto the market after whatever conflict.
Yeah,
because they produce less than 1 million barrels a day, and they sit on a reservoir of about 300 billion. So
and
either way,
if our new thing is the Monroe Doctrine, heyo, that's nice in our own backyard.
I'm a big fan of Fortress America. I'm a big fan of making the Western Hemisphere our little playground. But my goodness, if this is the manner with which we're going about it, could it have been more ham-fisted? No, could not have been
not the way I envisioned it. Though I'm with you on the appeal.
As we think about tomorrow's market open, I don't see much of a reason to change what I'm doing here. The only thing that perhaps warrants a review is getting out of any short position in the Russell. I'm currently long some put spread here, which worked out great 2 days ago and now looks like crap today, but that's fine given how MES is behaving, which is just going through the roof. So implicitly long ES, short Russell, need MES to go up more than this erosion in my put spread in the Russell. So working out for now. Bonds staying long, gold, silver staying long, nothing new there. Still long the dollar, Ilya. I'm assuming not much has changed from you with Futures Power Hour today. So Dylan, do you have a trade of the week this week? What's your number one thing to do as you think about the holidays?
I honestly, I think that Google, which is an absurd thing to say in the context of the rally that it's already had, but I think that Gemini deal is a big deal. And I think that's a bigger deal. I think it's a bigger deal than even today's gap says. I think Google is a monster in this world.
6.25% for Google today.
Yeah.
Listen, they had a really tough restructuring. It looked like they fell behind. They gave up the advantage of search and Google itself with ChatGPT, and perhaps that is not the story fully told. But we'll cover that tomorrow because Overtime is now out of time for this Monday, November 24th. We're here every Monday through Thursday, 4 p.m. Eastern, 3 Central, right after last call, except for this week because it's a holiday week. So we're here just today and tomorrow. Until then, good luck trading, but there's more Tasty Live coming at you. So stick around, watch Ilya Spivak. He's up next on Macro Money.
See you there, everybody.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on tastytrade, named best online broker for options trading. Genius loves company.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Dr. Jim Schultz, Central Michigan University. Number 51, because trading the Tasty Trade way, that is our minimum probability profit.
Kai Zan, University of North Carolina, Chapel Hill. Number 16, because 16 is one standard deviation on one side.
Brittany Sherrick, Bradley University. Number 15, because I like to carry a positive theta of 15 and make $15 a day. Whoop, whoop.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
New from Tasty Trade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new Tasty Trade account. The Money Match event starts now, exclusive to new Tasty Trade customers.
Let's go.
And we have ourselves a little bit of a rebound. We start the week with a little bit more life in Wall Street's performance than we saw toward the end of last week when all looked dismal and all looked bleak. So do we have on this holiday shortened week the seed of a rebound for risk sentiment? That's what we are going to tackle here as we look for what is going to be coming at us here in these next few days of action ahead. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And what we're going to do is, first and foremost, as usual, take a look at the performance for the markets this past week and see what that price action might tell us, and then take a look at how we've started so far and what might be next, at least as far as the price action seems to be suggesting. So here is how we did last week, and not surprisingly, it is painted top to bottom with red ink here. Stocks down aggressively, S&P off 2%, NASDAQ 3.1%. Yields down across the board as we get the bonds finding, once again, a sort of haven bid. Crude oil down, gold relatively steady, interestingly. There was this period over the past several weeks where gold was very much acting like a risky asset. Last week, the selling seemed to have reached fever enough pitch that gold seemed to have once again rediscovered at least some degree of anti-risk support, as it episodically does. And although it declined meaningfully less than a lot of the other overtly risk-linked assets, to some extent even crude oil, although it has been moving much more to the beat of its own drum. The dollar broadly higher to give the risk-off mood still more credence. Euro off almost 1%, yen down 1.2%. That's despite a little bit of a rebound toward the end of last week, as it started to look like maybe the yen was a bit overextended on the downside once Japanese officials started to come out and scream loudly at reporters about maybe they're going to intervene into the market. Bitcoin, though, off by double digits, 10.4%. That's after a 9.3% decline the prior week. So very clearly a risk-off vibe last week, almost single-mindedly so. And that's despite the sort of things that we saw last week being generally supportive of risk sentiment. And of course, chief among them, the earnings out of NVIDIA that gave us almost 24 hours of a sentiment rebound, which only came to crater by day's end. So we have this very capitulation flavored intermarket layout here. Obviously, these moves are not capitulation magnitude by any stretch, and the markets are still much closer to record highs than they are in any kind of free fall. And indeed, we start this week with a much firmer tone. So starting off here, sentiment holds up pretty much from the open over the weekend, where the futures markets come alive with Asian and Pacific markets, and the momentum pretty much held up all day. S&P up 1.7% almost, NASDAQ up 2.8%, yields in a bit, a little bit more pep out of crude oil. Gold, though, posting a meaningful rise of 1.23%. The euro relatively steady. Yen, again, a little bit lower, although the degree to which the yen is sort of following the beat of its own drum here seems to be increasingly on display. It isn't necessarily as tied into the narrative as it might be under normal circumstances because of all of the issues around threats of intervention. And of course, the one-sided action we've seen in the yen sell-off up to this point. And that, of course, around the idea that new Japanese Prime Minister Takaichi Sanae is going to pursue a very expansionary fiscal policy, in addition to some newfound pressure on the BOJ to abort raising rates and to stay relatively dovish, a sort of retread of the Prime Minister's mentor Shinzo Abe's policies to a large extent. And with that, of course, aggressive yen weakness, as was the case when Shinzo Abe did something similar when he was the Prime Minister. So the yen may not be the barometer it usually is at this very moment, but clearly a risk-on vibe here, and clearly that vibe echoing something to do with a friendlier view on Fed policy, yields in, sentiment celebrating that yields are in, gold up, dollar soft, at least biased soft against most of its major counterparts. Though again, against the euro, it's very modestly lower, barely any selling to see, but ever so slightly. And not surprisingly, sort of looking at the telltale signs in the price action here, if we look at the evolution in Fed rate cut odds for this coming meeting on December the 10th, what we end up seeing is that the markets have once again found their way into thinking that a rate cut is much more likely than not. And that's really the story that we've been watching here since October the 29th, and it's the story that continues to be the only real thing with committed consistency in these markets recently. Going here into what's happened with Fed policy expectations, and we'll take a look at these numbers here in a little bit more detail as far as what's being called for in a moment, but we can see that since that October the 29th Fed meeting where we got that second cut, this was where Jay Powell signaled that maybe December was not nearly the foregone conclusion that markets thought, and we got this pullback. And we can clearly see that this has really been animating the story, because through this pullback, we've had relatively solid earnings overall. We've had the third quarter results for the S&P 500 give us a 13% year-on-year growth rate for earnings. Very solid, if not strong. Tech understandably outperformed, 27% year-on-year growth. That's despite the very sort of loud miss on Meta amongst the Mag 7 earnings releases. Now we have all 7 out with NVIDIA last week, and the results don't look weak. At the same time, the economic data seems generally well supportive, such as it is. Obviously, the government shutdown has derailed much of that data, but just last Friday, we saw the latest numbers on the S&P Global PMI numbers, and what we see here for November is by no means soft. We see a rebound in the service sector, which is, of course, the largest part of the economy. We can see the composite index that takes in both manufacturing and services tends to follow services to a large extent because it is so much more represented as a share of the overall economy in the US. And we can see that we're looking at the same multi-year highs or similar multi-year highs here as we did in late 2024, which at that time looked like the strongest level since back here, early 2022, before the Fed went on its rate hike bonanza. So as we look at what's going on here, from this measure at least, it doesn't look like the economy is in a particularly terrible shape. So earnings are good, economic growth is good, or so it seems. such as we can tell from the data that's there. The situation with the escalation between the US and China that everybody was so worried about in the beginning of October, that's been largely unwound, at least for now. The government shutdown is over. And so one would think much of the things that ought to be holding this market down have been taken off the table at the very same period that the market is trending down. And the only thing we're really left with is this evolution in Fed policy expectations, which on a day like we see today clearly has shifted to a more favorable view for markets. And that perhaps explains some of what we see. Now, we should note we did get a little bit of a worrying set of consumer confidence numbers on Friday as well. But on the whole, it doesn't look like the markets were prepared to really jump out the window on this just yet. Nevertheless, it is worrying that even as we have one-year inflation expectations declining, something that might have been a lift for sentiment really at any point since early 2021, where we can see very clearly sentiment is a creature of inflation expectations. When they're building into the COVID tops here, sentiment is declining. Then the Fed gets serious about rate cuts, inflation expectations fall and sentiment improves. Then, of course, we get the tariffs at the beginning of this year. Inflation expectations surge and sentiment falls again. We have since, of course, moderated considerably. But over these past 4 months here, that moderation has not helped improve sentiment. And this is maybe a time bomb waiting to happen. But again, looking at where overall growth levels are, this does not look like it is at this point becoming an issue. Now, this is where things get interesting this week. It's an abridged week. We have relatively thin liquidity likely as we get closer to the U.S. holiday. And so as we look at those market closures, we're going to get a little bit of economic data. Most of it is going to be terribly old because this is still backfill from the shutdown. But perhaps this will give us some sort of steering on where this goes next. We start with the September PPI report. Expectations are that we're going to get a rise of 0.3% month on month. We also have retail sales, again, for September, so quite old, expected to rise 0.4% after a 0.6% rise in August. Durable goods orders also due on Wednesday. I might think by then we're relatively settled into some kind of autopilot going into the holiday, unless something has gone wrong on the sentiment front. But nevertheless, it is on the calendar. And of course, we have an assorted number of releases covering October, covering some of them in November that might be released, but we don't know because we've not seen official announcements that any more catch-up data is in the offing this week. For the PPI numbers, doesn't look like the shallow rise month on month expected is going to really dislodge the trend here, as we'll be able to see it again only through September, it looks like, where it looks mostly like wholesale inflation is anchoring. Perhaps most importantly, what it isn't showing is that there is a significant build from the tariffs that has over time made its way into higher wholesale inflation, with the expectation that it would then have some knock-on for consumers. So looking at this here, at least it doesn't seem to scream like this report is going to derail something about Fed rate cut expectations if we see something within the realm of recent outcomes. Now, of course, we might see a shocking surprise, but that's not the likelier outcome almost by definition. Looking at retail sales, the rise that we're expecting will be a little bit narrower than some of these numbers that we've seen. But so we can see this is not the world's most controversial series. In fact, the month-on-month rises have not, again, shown a dramatic drop-off around any kind of sign of acute deterioration in the economy. In fact, if we look at the year-on-year retail sales numbers, they've been creeping higher. And the rate of year-on-year growth for the latest numbers that we have, which is August, matched some of the highs of the year, which in turn were some of the highest since late, let's call it mid-2024. And so we're looking at relatively supportive looking numbers here. And of course, consumption is the meat of the economy. So there's some disconnect here, seemingly, between this and what's going on in sentiment. And again, sentiment is much more current than the data that we have on retail sales. Perhaps it just hasn't reflected it yet. And so if we were, for example, to see a sharp decline in September, as the consumer sentiment numbers would have us think might be the case, would that just solidify Fed rate cut expectations more and encourage the markets higher? Maybe, if that's, once again, their bogey of choice. Now, as far as overall expectations go, we can see the rate cut does indeed seem to be creeping back into this year's Fed funds pricing. For next year, we're at 68 basis points, so still well in excess of what the Fed is anticipating. The Fed is only calling for a single rate cut next year after 3 this year. And so the question then becomes, beyond this kind of cheer that we see today, is there more here, considering the markets are already more dovishly priced than the Fed is for next year, whereas delivering on December would only just meet the Fed and not overshoot it from where the barometer was established in September. So, could this be the start of a rebound with legs? Perhaps. But might this still be the kind of corrective thing that we've seen on the way down here? So far, we just don't know. Looking at the US dollar here, it, like stocks, has not dislodged from its recovery started in mid-September. And if nothing else, this raises the question, if in fact we're getting more dovish on Fed policy expectations and the markets like it, and it's a risk-on kind of a response, why is the dollar not weaker? Why is it not turning? And that's one of the tells that might be ultimately very important here. The dollar has been acting as something of an anti-risk kind of asset. It's held up here very tellingly, even as the rate cuts have started. In fact, it started to rebound as the Fed finally got underway, and it seemed like speculation had become reality and there was nothing else to do there besides what was already priced in. And so the dollar had no more downside catalysts. If it can't start selling around a rebound in risk, well, then the rebound in risk might well be suspect. So with that in mind, my exposure here is not very much changed from where it was last week. I am long gold. That's working a little bit here. Short the major currencies against the US dollar. There's that US dollar holding relatively steady today. Still short risk. Obviously, we've had a meaningful rebound here. Bitcoin, which is this IBIT ETF, we saw meaningfully higher. Russell too. S&P as well. So that's a move that for me still looks corrective, but obviously could be more than that. And I'll be on the lookout to jettison this exposure before I give up any more gains in substance. The view on bonds still seemingly constructive and a little bit more progress here today. So I've pushed out my duration on this position now to 53 days on the counter. So intending to hold this for a while yet. I've added a long side exposure in silver last week, still looking for the precious metals to continue higher, essentially around what we just talked about momentarily, this idea that they held much firmer last week than did overall risk. And that seemed maybe telling of what is a newfound resilience amongst risk aversion. And still a little bit short oil here. The overall direction continues to kind of edge down despite the rebound we saw today. See if there's more to it or if that was really it. And that is macro money for today. As ever, we are here Monday through Thursday, right after overtime, a show that I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. Short week this week, though, because of the U.S. holiday. So we'll be here today and tomorrow. Then Monday, the week after that, is when the show returns. If you are watching this on YouTube, like and subscribe. I am also commenting at Ilias Pivak on former Twitter and on Blue Sky and writing for the news and insights portion of tastylive.com. Macro Money is back tomorrow. In the meantime, happy trading.
Very good morning. Welcome to a beautiful sunny day in London. It's the 24th of November, and this is your Trade Live with IG, Christopher Beecham.
Good morning. How are you?
Very well.
Did you make your Christmas pudding at the weekend?
No, I didn't. What's that?
Yesterday is known as Stir Up Sunday, which is the Sunday you're supposed to make your Christmas pudding. Neither did I, but I was just checking.
Oh, you didn't?
No.
I was too busy in Nighttown yesterday. I was doing the research